on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Day one. Happy Friday to you both.
Why? What happened?
That's true. What happened? See, what had happened was...
What happened was...
How are you all today? You know what? Let's start with you today, Vanetta. How are you today?
Your girl is tired.
Are you?
I am exhausted, but I'm good.
Are you bringing back everybody? We're going to have Pinspiration Friday. The office is just going nuts. That is going to make lunch for everybody. It's awesome.
Sure, I could handle another job right now. Let's go.
I think he's gotten a little too big for that.
No, it's about him now. He's got his own Peppers, Batista Gardens.
I know.
I'm passing the torch.
I actually, Tom is going to be a lead investor on my
Ooh, in your angel round?
On my angel round.
Yeah.
That's why he's now he's invested.
Your friends and family round.
Yeah. It's a conflict of interest, you know? So, that too.
Oh, good for you guys. Well, the truth of the matter is, daily grind just got a little bit too much for Sosnoff. As you get up in age, it happens. But he does have...
That is not true. Stop spreading lies because I have to combat them online.
You're right.
Stop.
You're right. I'm tired of spreading lies. Let me just... A picture's worth 1,000 words. I'll show you what he's doing. This is his new thing now. He's
I can't see it.
You can't see anything?
No, it's not up on
it's sauce wax, it's called. It's Brazilian waxing and skincare.
Oh, you know what? I support that.
He's a mama-san now.
I support that.
He's whatever you want, you can get at Sauce Wax, Brazilian waxing, and skincare.
You know what?
They massage you everywhere you need to be massaged.
Yeah. If they have the green open sign in the window, you've found the spot. You found the spot.
You guys think it's so funny for a couple of dudes who've never been waxed.
I agree with you.
How do you know?
Well, there you go. I did not know. I don't.
Because
know
if you've ever felt that first pull of the strip, then you get a look in your eyes.
It in the movies.
You get a look in your eyes.
I've watched it in the movies.
Oh, the 40-year-old virgin.
Oh my!
That one is an absolute classic.
Steve
Carell, gets me every time.
How he did not win an Oscar for that performance.
Yeah. That was
Kelly Clarkson.
A performance.
Kelly Clarkson. Yeah, it was real.
Which is unbelievable. I could. More of a man than me. I don't think I can do that. I really don't.
Yeah. I mean, you cry when you have a pimple.
I do.
Yeah,
I do.
So it's
I
like,
do.
You know what though? That's a good fantasy punishment. Like if you lose your fantasy league.
Yeah, fantasy football or some other thing. That would be good.
That's a good
place person. Chest waxed.
Yeah, or back. I'm a woman. I advocate for men getting their backs waxed.
I'm good.
You're smooth.
Yeah.
Like a baby seal.
Yeah.
Way back when, we don't do punishments anymore, but in my home league, we did two. So we had like rotating punishments. The first one was frosted tips.
Oh, like boy band style.
Yeah, like boy band frosted tips. So they had to wear that for a month. That was good.
Permanent.
This is not me bringing you up as a child, right? It's not me. That's not my punishment.
No. This is for fantasy football.
Grade.
This was fantasy football. Fantasy football.
Mm-hmm.
And then my favorite one was fatheads. So you remember the big stickers?
I love those stickers.
Yeah,
What happened to that company?
Yeah.
I think it's still around.
Okay.
Fatheads, yeah.
Okay.
Sure.
So for one of them, the punishment was that the winner would be able to choose the loser's fathead, and they would have to put it up somewhere in their apartment. And so the loser had to put up a Ted Cruz fathead somewhere in his condo, and they're like life size, So it's
prominently displayed, right? And how do you explain that
It's impossible.
when girls come over?
Yes, and this was in our mid-20s, so it was probably quite the issue for him.
See, that's funny.
So he hid it in the closet. He had it in his closet door. Yeah. You'd open the closet, and then you'd have a huge fathead of...
I love shenanigans. I love shenanigans like that. So, Nikki, are you hitting up the farmers market this weekend? What are your plans? Are you open for business?
Maybe. I got golf plans. That's kind of my.
It's gonna be nice.
Big. It's fall. You gotta get your last rounds in.
Yeah.
Got brand new clubs. Shout out to our very own Tony from Mexico.
Shout out to you, Tony from Mexico.
Yes.
He's a very kind man.
He's one of the best.
He's the best.
Yeah.
kind man.
He
Really
is.
is. He's
He
way
is.
better than anybody else I know.
Might make my way to Michigan to watch Vinny play hockey.
No. I wouldn't expect you to. I wouldn't expect you to do it. But I am.
Home games. I'm there.
Home games. Yeah.
Home games.
You represent, and we appreciate it. Yeah, no, he does. Your brother does for sure. Yeah, 100%.
Yeah.
100%.
What-
I'm-
I didn't birth him, so I don't have to go to Michigan.
I didn't miss any of your games.
That's true. You didn't.
Aw.
Yeah.
Any of your games.
That's.
What clubs did you go with? Like what brand? Like what's, I don't know what.
I got Titleist T250s
Ooh.
irons,
Okay.
and then the GT2 driver and hybrids.
Ooh.
They are pristine.
Yeah.
I look at them and when I pull them out of the bag, it's
It's like, oh.
yeah, it is. It's a borderline sexual experience.
Okay. You know what? I don't kink
Omaha.
shame. I don't
Thank you.
kink shame. Oh, our first Omaha
Thank you.
of
Thank
the
you.
new era.
I'm shocked you didn't Omaha us when we were talking about waxing and Mama Sans.
No, she's been whacked. She knows.
What are you doing this weekend?
Yeah, there you go.
Probably gonna take the bike out because it's
yeah?
gonna be nice. Won't be too hot. Gonna try to go for a nice ride. But to be fair, I am exhausted.
Yeah.
It's been every day in office this week.
How far is the nice ride?
I do like to go to Michigan, so if I
You do 3-4 hours?
yeah. I kind of really just want to ride to
It'll
Saugatuck.
be beautiful weather.
Yeah, I haven't been to Saugatuck yet this season. It's like one of my favorite places to go. Great, like little lunch spots, little boutiques, and then come back.
Very nice.
Yeah.
Very nice.
Not too bad. Look,
good.
I live in a house by myself. The world is my oyster.
I hear you.
I don't think I've been in a house by myself.
Oh, you'd get scared. You'd get scared of the
would get
dark.
scared.
You would. Yeah, you would
I
get
don't even.
scared.
Yeah. No, you're right.
You'd be
right.
lonely. You'd be like, somebody talk to me.
You're right. You're right.
You would.
You're right.
You would.
I mean,
But what are you gonna do when
Good for an hour.
you and your wife are an empty
Yeah.
nester? Like, and your
Well,
wife like
well,
wants
he's
to go
15.
visit.
I mean, I still
No,
have 3
Yeah.
years at the
I
very
know, but
least.
that's not
And
super
then you're
far
being
away.
optimistic that he's going to college. Not that he can't get in, that his mom's going to let him.
Yeah.
You know, he might just be going to like a community college around the corner or something like that, so mom can take care of him. I don't know. We'll figure it out. Oh, I don't mind being with the wife. The wife.
No, I know, but then the wife, like, because you're gonna have more grandkid, like you're
Yes.
gonna right. So your wife just
You know, we have
once
another one. We have another one coming.
I know, but once the baby is out of the house, then maybe your wife is like, deuces, and she's like, I'm headed with the girls to Vegas. Catch you later, nerds.
You might be right. I might have to wait for somebody else to come with some babies.
That's true. That's true.
Oh,
Yeah.
you're getting the pressure.
Something like
Yeah.
that. I think you can help us out a little bit here?
Shenanigans.
Ryan.
You're trying?
No. In the future, I will be. Not right now. Not right now. No.
Funny.
It's too.
You didn't ask me what I did all night.
Oh yeah, I'm about to.
what'd you
I'm
do?
about to. What? Bat, how was your evening?
Tired of answering emails about Tom already, and it's
Yeah.
just day one. I mean,
Yes.
the show goes
Are you
on.
literally complaining to the social media manager?
Yeah. I had to pick up the
World's
slack.
smallest violin. Beep, 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 beep.
You have to be politically correct. I
Yeah.
can tell people
No, I don't.
what's really going on.
No, I don't.
Yeah.
No. The show goes on.
And we knew this was coming.
Yeah.
Yeah, we
This
did.
was not-
He didn't get kimmeled.
Yeah, this was not like
No, I didn't get kimmeled.
I did. That was one of my
So
favorite
there's like
ones,
some
was that
theories. They're like, oh man, there's too many
Trump-
cherry bombs.
I saw Trump got him. That was my favorite one.
He's
was
like,
that he
no,
got
that's
canceled.
not what
Oh,
happened.
We knew this was coming. We have been preparing for this. The show goes on. We have a great lineup of people here that
I wish
have
I
been
would
here
have. He
for
didn't
years
show me
and
his
years.
video beforehand. I wish he would have shown me his video beforehand. I would have asked him to at least mention that Nick was taking over and I was gonna be
No.
filling in,
Yeah.
and the same great content, maybe even more things to come.
He just
Yeah.
was real scant on the details.
Yeah, it would have been good
very
to
loose.
acknowledge that the show will continue. That
Right,
would have been
right.
a positive to
Yes.
say yes.
Yes.
We will be here tomorrow.
Right, we're not
Yeah.
getting shut down.
Yeah.
Nothing's happening to the brokerage. Like
No.
it's not a recent acquisition. Like just dispelling some of the rumors and.
I mean, our goal here is not for you to forget Tom, but enough good content
Yes.
that you'll piggyback on what he started and we keep going forward from there.
And Tom will still be at the live events.
Yes,
so sign
he'll
up.
be at the live
you want to
events.
see Tom one last time? LA, Charlotte, Austin, Tom, Bat. They're going to be on the road at work at 11. tastylive.com/events. Get the band together. One last road trip. Come see Tom on the road. Tell him how you feel, good or bad. I don't care. I won't be there. But yes, he will finish out his live shows for the year.
Absolutely. I'm looking forward to meeting everybody again and seeing them all out in LA and Austin and Charlotte. So it's gonna be awesome.
Yeah.
All good.
I will say one of my favorite comments that came through on social, and I told the guy, I wrote him back, I was like, look, I've been looking at comments all day, and this one wins. He was like, Tom retired according to Tasty Mechanics. He rolled ahead like 21 days early. He retired. I'm butchering it, but it was a really funny comment. But that's it. He had to manage early, and he rolled. Yeah. So that's what happened. So.
Yeah.
All right. Well, good times.
It'll be fine. It'll be totally fine.
We'll be all right.
Yeah, it'll be all right.
Still gonna be free. Still, lots of great content, lots of research. So for today's show, on this fantastical Friday, double the bats, we're gonna do the weekend stocks. Jamal's coming in to recap the week, a rare quadruple feat. Jamal is going to break down everything that happened this week. And then Fast Market, Double Bat Edition, we get fan favorite Fan Friday, viewer submitted trades. Tony and Nick are going to try to put some trades on. So did Tom turn off his access to his account?
That's still up in the air. I mean,
Yes.
for the follow page, he'll probably still be up there for a couple more days, weeks, whenever the dev team is around taking that down. Then we'll have our own account up there with Nick and myself. Maybe I'll even get my own picture this time. I've never had my own name or anything like that, so I'd love to see. I mean,
we could talk to the powers that be.
All right,
I'll
thank
see
you.
if we
If
can
you make that happen for me, son,
I'll
really would
I'll see if we
appreciate
can
it.
fit that in the budget. I'm not totally sure.
Okay.
We'll see.
Thank you. So yes, so we'll get that all taken care of. Just take a little bit of time. Bear with us.
Yeah.
Sure. But we're still going to put on trades today, so that's all that matters. That's all that matters.
This is what we do.
That's what we do.
Yeah.
Some
And
viewer
these trades
submitted
can actually be potentially profitable.
Yeah.
I mean, like
And listen, Tom had a big budget. He did not get canceled because he hadn't had a winning trade in 6 months. That's not true either. So don't.
which one's not true that he
Move on, Vanetta. Move on.
Although another comment that I read that was really funny said that Tom's bet on the Bears finally hit, so he took his winnings and walked. Then we got a market measures for you today. Wonderful segment at 9 a.m.
Yes.
Reversal risk, probability of a turn.
around.
That'll be interesting. Like how John Cena is a heel now in WWE.
Mm-hmm.
Like he was a good guy. Yeah, now he's bad.
Ooh.
Yeah.
He's kind of getting up there in age.
He's funny.
He's great.
He's
Yeah,
got a good
he's really
But
funny.
he's been around for a while.
He has, but I don't know like a ton about him, but he's been in like a lot of food videos that I've been watching lately. Like apparently he is quite the coffee expert. And so he's like very eloquently describing like what a flat white should taste like. And he's wearing like a bespoke tailored 3-piece suit. And I'm like, what is this content? I'm into it. So anyway, shout out to you, Mr. John Cena. Okay. Probability of a turn. And then we got live from the trade desk. What's happening today in that segment?
Well, we're going to do calls.
All
Yep.
right, yeah.
Yep.
If you have questions.
Questions you want to answer, ask them. Nothing's off limits.
Maybe a little bit today. If not, on Monday, we'll talk about the schedule because we're going to have some schedule changing.
Okay.
The day is going to be the same. So we're going 7 a.m. To 4 p.m. Central every single day.
Yes.
Same content. We're going to move some things around. We got some people that are out currently. Mr. Vecchio.
Yes,
has
some
welcomed
paternity
a
leave.
Beautiful baby.
Yeah,
Yes.
I
And
didn't fire Vecchio.
Yeah,
Yes.
love
Vecchio's gone.
Vecchio's here.
I did fire Tom.
Yeah,
So that's
that
Stop
finally.
spreading misinformation. I will block you.
I did fire Tom. I did not fire Vecchio.
Yes.
He's having a baby.
Yeah.
I think we have more babies coming too.
Ryan has a baby.
Ryan's having a baby.
So
No,
we-
he had the baby. Baby's name is Wyatt. Hi, Wyatt.
Yeah.
Yeah.
Ryan.
So, we're gonna talk about that. But
sure.
Live from the trade desk, obviously a fan favorite segment.
Yes.
We're going to start bringing on team members from all parts of our business. So
which is wonderful.
We're going to have Tasty Trade represented. We're going to have Tasty Crypto represented. We're going to have Tasty FX represented. And they're all going to come with top symbols.
I love it when you bring the grizzled old traders from the trade desk onto the show.
We are going to have to vet some of them. I mean, like, some guys like Marty, bless his heart. I love him to death. I don't know if he's camera or live ready.
Marty's the best.
You don't know what can come out of that mouth. So
he is a live wire.
He's a live wire.
I love all of the traders so much.
Yes.
Like I'm just very protective of them. I'm just very protective of them. So, yeah, that's gonna be the run of show. Liz and Jenny are here. Liz and Jenny are still here. So they're holding it down. They're gonna be on at 10 a.m. So yeah, we got a lot of stuff that is happening as we move forward. So in the meantime, and in between time, you guys want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading story. Breaking news.
Across the wire.
Leading story. Top story. Just in.
Today's headlines.
This just in.
Breaking news.
All right, everybody. Today is a fantastic Friday. It is September the 26th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Hey, guess what? I can tell you that PCE it comes out today. So does consumer sentiment. You know why? Tom ain't here. You want some economic indicators?
And there's probably going to be some movement in about 15 minutes from now. It won't be just a random event.
I think so. What's the expected move for today?
ES has expected move of just under $29. Let's call it 28 and change.
Okay.
We are ominously sitting at 666.
Ooh.
We are. And we're up 8 handles, which we were down unchanged for most of them.
Yeah. It's been choppy.
Yep.
Getting into it, stocks fell for the third day in a row yesterday. Is this the start of a deeper pullback? Is this the top? Are we blowing out? Is this a correction? Well, what are your thoughts?
Third day in a row, obviously, it's a major correction.
We're crashing.
I mean, with 2%, I mean...
well, no, what are the opportunities? What are you taking advantage of? What do you like in the tape action?
Volatility's definitely uptick, 18 and change. I mean, it's not in the 20 handle that you might think is a lot more frothy than 18, but it has popped up a little bit here. A lot of stocks, I went over it yesterday when we were on the show. A lot of the stocks that you look at, the 5-day IVX 5-day change has been up, 5, 7, 8, 10%.
Okay.
A lot of these stocks, they still have relatively low IV rank, but a lot of stocks that you trade, we all trade, have really gotten a little bit more, more interesting.
It's been
How about for you?
It's been a good opportunity to bail out of positions that have whooped your butt for a couple weeks. You had some of the high flying stocks like your Oklos, your Bloom Energy, INQ, stuff like that, where they've been ripping your face off to the upside, and they've had high implied volatility, and a lot of people have been looking to short premium there, and you got bailed out in a day on a lot of those positions, and that, with the fact that we're right around the 20-ish day in October, you've had an opportunity to either close and move on from those positions or roll them out to November. It was a perfectly timed little bit of a pullback in a lot of those stocks. And a lot of the big name tech stocks, NVIDIA is down $7, $8 from highs.
Gotta buy those dips.
Amazon is down a little bit. So it was a good, I think a lot of people needed a little bit of a pullback here.
Real fast, checking in on some of the keystone pieces that we always look at. What are bonds doing this morning?
Bonds are 116.13. They're up 6 ticks. I mean, they're still in basically no man's land. I mean, that's the lower end of their most recent.
I mean, they're back to pre-Powell. I mean, they're right around the Powell at Powell. They're 115.
Yes.
And,
yes.
And then you got a rate cut, and they're still.
I mean, I've been watching the Fed Watch tool with pretty much got my eyes on there all the time. It hasn't changed too much, so I don't think they've really moving forward hasn't changed too much, is what I should be saying. So when that moves, I'll let you know.
Oh.
It's been great. It's been a great indicator on what they do for interest rate. I think when it's Vecchio said when it's over
65
some odd percent. It's almost it's 100% accurate. They always do a
Oh, interesting. 65% of the time it works 100% of the time.
Pretty much. Yes.
correct. It was correct.
Yeah.
It was correct.
That's interesting. Hey, news came across the wire last night that President Trump unleashed a fresh round of tariffs on a broad range of imported goods, but they're going to go into effect October 1st. That's fast. The administration says they will impose 100% duties on branded prescription drugs unless the company that makes the drugs is in the process of building a plant to make drugs here in America. Also, 25% tariffs on heavy-duty trucks, and weirdly, tariffs on like bathroom vanities and kitchen cabinets. I don't know why Trump's mad at like kitchen cabinet. I'm like who hurt you?
I need to remodel my bathroom. So
I have some ideas from you. So I get most of my cabinetry from Menards, and I'm very happy. Made in America. I think it's called like Bellawood
Sound
or
like
something.
the big bat here. Yeah, made in America.
Made in America, dovetail joints, like not pressboard or fiber, like really nice quality stuff. Like there's good furniture, vanity, and cabinets that are made in America. And I did find out that around 90% of drugs that Americans consume are generic.
Yeah.
So luckily they wouldn't be affected. But sadly, if you do need a brand name prescription drug that is getting imported, that could go up. I did want to look at the dollar this morning.
Yeah, sure.
Yeah, why don't you put up your dollar index for everybody so that they can see that? But
So
I'll give you /6E while you get.
I know. I'm gonna teach you how to do this one. It's good. We got one person now in here that can use the platform. It's good.
Well, one expert on the platform. Sure.
So if you want to pull up the dollar index, you just put in the dollar sign and then DXY, which is the dollar index. It's had a really nice move higher over the last week or so. You can also check out the TastyFX products too, which is on the TastyFX tab, and you can trade these directly as well. There's a bunch of other ones that you can trade here. But the dollar has been very, very strong over the last week or so, kind of bottoming out there. The euro giving it up a little bit. One of the biggest components.
But get your orders in on Wayfair because it's going to hit upholstered furniture, vanities, nightstands. I don't know what I was.
Restoration hardware was down like $20 in the.
Oh, maybe. Oh, that's interesting.
It's only down like 6 or 7 now, but I mean, it's gone from 240 to 200. Eli Lilly was another one that was kind of in the headlines.
Sure. But they're building a plant in Texas. And
I know. None of these the tariffs are not going to stick on any of them. There is always a little loophole. You start building, so they're like, ooh.
Yeah, we'll see.
We bought this little plot of land. We're going to build one over here. Fine, no tariffs.
Goldman Sachs' outlook for mergers and acquisition has become more optimistic, fueled by consolidation in various industry sectors and likely acceleration in private equity-backed deals. Do you think M&As are good or bad for consumers? Like when businesses consolidate?
Anytime you start losing, this wouldn't be really competition, would it? I mean, they're consolidating their own companies.
No, they're eating up they're merging with other right. So
I mean, this is the whole antitrust kind of thing from
like how many cell phone companies are there now? Like remember there used to be like a million. How many? Like 2?
You were a sidekick girl.
I was not a sidekick.
Yes, you were.
You were.
I was not a sidekick.
You were one of the ones that you flip it and like.
No, I was never that cool.
Sure.
Yeah.
I was never. I wanted the pink one.
Crap.
I wanted the pink one.
You were a pink
so
sidekick.
bad.
Sidekick.
No, my parents were like, nah, no.
But Sasha bought her own. It was $500. I think she had to buy it used on eBay or something.
What?
Yeah. And it was like useless in like 4 months.
4 months.
Because that was when the iPhone came out. I remember everybody was freaking out. I had like a red Nokia brick. Like,
oh yeah.
It was like this big.
They were great. You had to flip one. You had this just a small.
Yeah, just the small one.
Roundish one. Yeah, I had a Motorola. Sorry. Yeah.
I did have a pink BlackBerry, a pinkberry.
Ooh. I was a hold off for BlackBerry.
Anyway.
You remember the sidekick?
Oh yeah. We had a big fight in the house about
get
it. I said, you buy it yourself.
You buy it yourself. But Vinny's getting an X7. Make it make sense.
That is what he wants. Yes, right now that's his compromise.
Or he's getting a Corvette.
That's his compromise vehicle. You had to help me on this.
No. no, I can't talk. I got a Mercedes. It happened to be 25 years old with 150,000 miles and a broken transmission, but it was a Mercedes.
You still got a Mercedes.
It was the clutch that was a problem.
Yeah, it was something. It would only stall out in third gear. So when I was
you had to rev it a little bit.
Yeah, you had to kind of make sure that you got like through third gear into fourth gear while you were getting on the highway.
Was it diesel?
No, but
Okay.
it was premium, so
Okay.
it cost me an arm and a leg to fill it up. But if you didn't really hit the gas on your way onto the highway,
that was a problem.
You just at 16 years old, you just stall out. And so what you'd have to do is you'd have to actually just turn the car. Well, you'd have to put it in neutral, turn the car off, and then put it in, and then
start it back up again.
Restart it as you were going, and then try and kind of catch up.
That is terrifying.
Yeah, no, it was terrifying. It was terrifying, but I loved it. It was great. It had a sunroof.
But it had a big armrest, so when he bought ounces of pot and he stopped, it would come to the front of the armrest. So
no, I could keep.
There were reasons for things.
No. It was big enough. It was big enough to hold my bong.
Your bong.
Hey, keeping it moving here. No, but earnings last night. Costco topped earnings revenue estimates as the warehouse club gains more members. Going to pivot out.
He took me for a ride. Okay, and it's making this noise in the armrest. I pick up and go, what the? Costco? All right, go ahead.
Costco, the e-commerce.
It was a different world back then, okay?
Costco's e-commerce sales increased by 13.5% compared with a year ago, and the warehouse club brought in revenue of $86.16 billion.
Costco down $5 or $6 pre-market, down more right now, actually.
Down the price of a rotisserie chicken.
Way expected.
Anything you did in there, you're going to make some money.
But in fairness, Costco markets were pretty wide.
Sure.
Giving up a dime, 15 cents to get in.
Most people are probably doing iron condors or short put spreads.
Relatively speaking, to the credit you're going to receive, you were giving up a lot to get in, a lot to get out, just on the bid-ask differential is all I was talking.
That makes sense.
But a good trade nonetheless.
So good job, Costco.
Good job, Costco.
Hooray.
No thousand for
I know,
Nike.
for the umpteenth time. We've been playing for that split. Not happening.
Yesterday, President Trump signed the executive order approving the proposed deal that would keep TikTok alive in the U.S. This is the thing that I think is real suspicious about this. So Vice President Vance said the transaction values the business at $14 billion. But like all these AI companies that no one's ever heard of are worth like $200 billion. But TikTok, literally the most valuable app that everyone uses. I think it's weird that he's saying that it's only worth $14 billion. Like, why are we trying to lowball them?
He's a buyer.
Yeah,
I know, but
he's like on eBay right now, trying to buy TikTok on eBay.
I know, but I was
I can do, how much you want for this? 100
But that's like
oh no,
Facebook
Larry Ellison came in at a 15 billion bid. We got to up our bid now.
I was like, hey, they are worth way more than 14 billion. But I was like,
I don't know.
Like you do you. Yeah. But hey, just real fast before the number comes out, Meta is in talks to use Google's Gemini to improve its ad business. The talks are still relatively in the early stages, but Gemini models could help Facebook improve their ad business. Meta also affected by this TikTok news. What is Meta doing this morning?
Meta, haven't traded in a while. Trading 748, basically unchanged. At the higher end of its range, I know it was over 800 or just about over 800 not too long ago. You're looking at the markets in November. They're not as bad as I've seen. Yeah, so you might have done something. Every Tuesday and Thursday, though, option trades today still continuing. Yes, we'll have a nice new account on Monday.
I will say the Google situation, because they were, right when ChatGPT started, everybody was like, oh, Google's dead. Mm-hmm. And it has had quite the run. I think it's like the fourth biggest company now. I mean, they've rallied. Sure. I mean, it's basically doubled since the low, if not, around double.
Around $150.
Almost $3 trillion now, or just over $3 trillion.
That's
it's just over $3 trillion. I mean, nobody wanted this when it was $1 trillion, because it was going to go away because Google search was dead. And,
AI's here to stay.
Yeah,
or it was going to get broken up, or it had, other risks, and now they're fine.
Now everybody's
$2, $747.
Hey. IBM helped HSBC pull off the world's first quantum-powered trades, and the stock is jumping. I think you might have talked about this later, like after I got off the show, but IBM stock rose as much as 5% yesterday, extending a week of solid gains.
Who thought IBM would be the innovator of
listen,
quantum computing?
The biggest news of the last couple weeks has been IBM and Oracle.
Yeah.
And just wait, I have a Cisco story for you coming up. And I'm like, what year is this? But HSBC revealed the results of their quantum computing-enabled algorithmic bond trading trial powered by IBM, and the bank reported a 34% improvement rate in the system's ability to predict the probability of winning customer inquiries. So there.
Yeah.
730 at PCE probably.
I mean, the
oh, there you go. Your number's out now.
Yeah, even the S&Ps were up 10. They're up 13. Bonds were 116.06. They're 116.15, up 8 ticks. Even the S&Ps are up around 3 or 4 more points from the number. NASDAQ up 38. Pretty much a small muted move in the overall market. Volatility down 18 cents. Bitcoin still under 110, trading 109 and change. I'll keep you posted. Even the S&P catch a little bit, up 18.
Nice.
Damn, I put the kibosh on it by giving one final day one yesterday.
Yes.
That was it.
You did.
That's on you.
It would have been amazing if this was like, a big down.
Sure. Well, we had 3, so all right.
Even the S&P's up 19. Sorry, Vanessa.
Nope, you're good. You're all good.
Yes.
We adjust and adapt.
We're back to 1987. You said IBM's the leader, Cisco,
Oracle. Yeah. It's
Intel.
Intel.
I mean, come on. We're
Intel.
talking about Intel. It's up like $4 or $5 this morning.
Yeah.
Can we check on GE? Like, what's happening? No, I'm just kidding.
Sure.
GE has split into like 7 different companies, and
I
they're
know.
all like $1 trillion now.
Hooray!
GEV is their
It's GE Aerospace is
GE
one.
is aerospace.
Is aerospace, and we will now be tastylive Aerospace.
Oh, that's good. We should
I thought we were Tasty Blockchain.
We're gonna get to
do that. Quantum.
Or Tasty AI, Tasty Quantum,
Tasty AI,
Quantum AI Blockchain.
Yes.
Laboo-boo.
Boo-boo.
Laboo-boo. CoreWeave is expanding its OpenAI pact with a new $6.5 billion contract. The AI cloud provider CoreWeave says they are expanding their partnership with OpenAI, bringing the total value of their agreements to $22.4 billion. I say, how did CoreWeave get $22.4 billion? But that's
CoreWeave well off its highs of almost 190 back in June, and off its highs of 150-ish or so in August, trading around 130 right now. It is up $3.50.
What is the market cap of CoreWeave, though?
CoreWeave's market cap about
like 80 billion.
60, 70 billion.
Okay,
Yeah,
I was curious.
somewhere in that
Do you trade CoreWeave, Nikki?
I've been doing a little bit in there. It's a tough one. I mean, it's certainly got high implied. It's got high implied volatility. It's one that's
monthly implied volatility. Don't have a good IV rank.
Yeah.
We haven't got enough information on that.
Yeah, it's been a lot of these stocks when they first come to markets, margin requirements are a little too high for
That makes sense.
smaller size accounts. So it's like hard to, you could do 10-point wide, 15-point wide iron condors, but it's tough.
Cisco is rolling out software, a new software tool that's aimed at weaving together quantum computers, there you go, from various makers into a single cloud, making it easier to develop useful applications. I wasn't joking when I said I had a Cisco story here. Major tech firms like Microsoft, IBM, and Google are investing in building out their own quantum computers, and so now Cisco's saying, hey, we can have all these patchwork quantum computers, and we can put them together.
Did you see the interview with Martin Shkreli?
Oh, Martin Shkreli?
Shkreli.
Yeah.
She got the Italian name right.
Well, I'm sorry.
To be fair, it's
Okay.
yeah. I did not see his latest interview. No.
He did an interview about these quantum stocks and just he was basically like, this is all, I went to jail for securities fraud, and
He's like, I know scams.
I know scams and I see one. That's literally was his argument, was like, if you think what I did was bad, this is worse.
That's interesting. Oh, that's funny.
Yeah. So I don't know. it feels like it's another buzzwordy thing that's in the, like, we've had 2 articles.
Sure, yeah, no, you're right.
News things about it. It's like,
how is Cisco as an underlying?
You know what? It's gone sideways since July. It's been $67. Really hasn't moved off of that in July. Now, this is a stock that's 5 times as big as CoreWeave, 270, almost $300 billion stock, and has 5 times as little implied volatility.
Oh, interesting.
And here's only like 25. You just looked at CoreWeave, it was like 100. So
it's wild.
not quite as interesting from a premium selling here. IB rank is 26. It does have earnings November 12th.
A federal judge has preliminarily approved, that's hard to say, approved Anthropic's offer to pay $1.5 billion to settle a class action lawsuit with a group of authors. The authors were like, hey, your AI is scraping up all of our books and stuff that we've written, and, you better come up out your pocket, pay me my money. Mm-hmm. And so Anthropic was like, okay, our bad. And so it's a class action settlement. But again, it's hard to parse, like, what's the value of the work that you do? Like you're an author. Like,
what do you mean? What's the value of the work that I do?
Like if you're Stephen King.
What is it?
No, you're
trying
Stephen
to take
King.
my head too?
I can give you the inside scoop.
No, I'm saying like
what we pay you.
What? No. That's what I'm saying is like you bring a lot of value to the, and it's hard to quantify like what that value is. That's
You bring a lot of value, Nick. Listen, my coffee is empty, please.
If I was them, I would have gone after a share purchase, like a share settlement.
That's actually like equity.
Yeah, let me get 5% in Anthropic because you've stolen all of my
that's
my
interesting.
Content.
Like intellectual properties.
Yeah, the $1.5 billion, and then it's over and done with. You get nothing else.
Right, and then they become a $3 trillion company.
Yeah, and then they become a $3 trillion company, and your 1% would have been, $30 billion.
Yeah. Okay.
300.
And you're on the street in some like bar.
Yeah.
Hey, Amazon.
They stole my song.
Amazon was in a trial for the FTC because of their deceptive practices. So once you subscribe for a Prime membership, Amazon made it very difficult, basically like a Hotel California situation where you could get in but you could never leave, right? So the trial started, and the trial was going so bad, Amazon was just like, you know what? Let's settle. And so they settled yesterday, and it's a $2.5 billion settlement. So you could be entitled to funds. So if certain criteria met, you could get $50 from Amazon.
What's the criteria?
You may be entitled to compensation.
You gotta fill out the form.
Because
stand on your head and
no. That one has about 6 Amazon packages that comes every single day to his house. So I'm sure.
But he never tried to cancel it, so he's Gucci.
Oh, so it's only for Oh, okay.
Maybe
I thought it was you losers.
Yeah, it's people who tried to cancel and then they couldn't. Or maybe
he's like a prime gold tier. Like,
yeah, that's
like
me. I'm prime platinum.
It's not me. It's not just me.
It's your household.
It's your brother. It's Chris.
Well, yeah, but it's your credit card.
Yeah, I get all the perks. I get all the miles and stuff like that.
I am Prime Platinum. I love Prime. I love Amazon.
Great. It is great.
It's just
it's amazing.
It's
how
changed
these
everything.
Distribution centers, wherever they have them. Like I know I have one like a half a mile from my house. You don't even know where they are. Like
right, yeah.
Nondescript. You would think they'd be this big warehouse. I'm sure they have them like that, but you order like whatever it is. Let's say a funny thing, like a pint of ice cream.
Sure.
And all of a sudden it's at your door in 30 minutes or an hour.
No, my question is like, why is this leopard print bodysuit in stock? Like, why,
and ready for overnight delivery.
I know, it's like, why do you just have stores? I'm appreciative, but like, I mean, I got this sweater on Amazon. Like, I love these. I love my little cardigan sweater, but I'm just like,
it's
so weird. I'm like, why do you have small sweaters in bright colors, just like ready to go?
Nobody wanted them. Amazon up $3 to $221. It's been on about a 6 or 7 day slide from around $235.
E-mini's up 30.
Yeah.
Oh, wow.
Now you got yourself a little half.
We're back, baby.
We're so back.
It loves this new era. What can we say? The market loves it. Hey, Nikki, you mentioned this earlier as a very wonderful example of the tide changing and an opportunity for people getting bailed out in position. Oklo, I didn't know the company had zero revenue.
It doesn't even have like a product, and
the stock is up 1,500 and I was not aware. So it's up 520% in 2025 and 1,500% into the last year. What have you been doing in this Oklo?
So I have been trading it. I do these wide broken wing butterflies on the call side.
You have call skew.
Yeah, tons of call skew. I mean, and again, it's another one that volatility is so high that margin requirements are, it's pretty tough.
You got 100% implied volatility,
so,
which means the stock could basically be zero or doubled in a year.
Yes, and the spreads trade for nothing.
Oh, wow.
You can't do a 10-point wide spread in there. It trades at a
Right, and you don't want to really have naked option there when something goes up 500%. But it's frothy. But you could be a day, 2, or a year early.
I do these wide butterflies on the upside, and you play for.
You're really trying to play to middle it, and if it goes lower, you make a couple.
And if volatility comes in, because you have that closer at the money long option that holds its value, so you're trading the tail volatility with defined risk.
Yep.
I think it also benefits from people wanting something that has like a lot of gamma and like a little bit of juice, but isn't an AI trade. And like Oklo's kind of like fitting that bill right now, but just be careful.
It's the same. I mean, start of the pandemic, we had Nikola. I'm not that this company can't be something. I mean, there's nuclear is certainly real and is probably needed, but it's just that we've had GMEs.
I can't believe.
Remember Tilray?
What's that?
Oh, Tilray.
Remember Tilray?
Oh, sure.
I mean, these things it's the same thing. It's just whatever's in the news right now.
Flavor of the day. But I remember 3 Mile Island and the nuclear reactors.
How old are you?
in Russia.
What year was? Wait, hold on.
I figured we would have like wind and solar everywhere by now, and not thinking about nuclear. But it does seem.
Okay, March of '79, Boomer.
You looked it up, didn't you?
Yeah, I was like, when was 3 Mile Island? Because I don't, obviously, I'm not around, but okay. Very.
We still got like, 3-eyed fish from that. Whatever.
Hey, fewer companies are announcing their seasonal hiring plans, leading job placement firm Challenger Gray & Christmas to project the smallest seasonal gain in retail hiring since the 2009 recession. This time last year, major companies like Target, Macy's, Home Depot, whatever, had already announced the number of seasonal workers that they plan to hire. It's been crickets.
What do you think?
What do you think?
Target?
Robots? Do we have robots?
Or just like uncertainty around the holiday season that it's just like.
I think Target on it, but $87. It's unchanged, maybe up a dime today. I mean, Target Ivy rank of 22. I'm just looking.
Oh, that's pretty good.
Not bad. Earnings on November 19th, just shortly before November expiration, which means I would be willing to put on November. Positions here, good tight markets in there.
Might have did something.
You might have done something.
Target.
A little directional on this crappy arse stock.
Yeah.
Look, I would get long Target.
What holiday are they talking about?
I would get long Target here because next Friday, Taylor Swift is releasing her album, and they're doing like midnight releases. Yeah, at Target. So there's a Target exclusive vinyl. I already pre-ordered. I already bought it.
Oh, damn! I was hoping you had to wait in line with.
No. Your girls. I've bought like 7 copies of a record I have not even heard yet.
Amazing. What are they going to go for on eBay afterwards?
I don't know. It's like limited.
You're gonna put it next to a hand-signed Taylor Swift.
I am. It's gonna make a little shrine there.
You have a Taylor shrine.
Your dad was very kind. He got me a signed Taylor CD.
Oh.
So it was very cool.
Oh, that's nice. Never got me anything. Never did anything for me.
Hey,
wait a minute. What season are they talking about in Target? Because they're already
the holiday
showing
season. The Christmas season.
They're already showing Christmas.
Yes.
Oh, yeah.
Thanksgiving's over.
Holla giving miss. Yeah. Halloween Christmas. Yeah. Starbucks announced a $1 billion restructuring plan yesterday that involves closing some of its North of American coffee houses, including a pretty big roastery store in Seattle, and laying off more workers. Approximately 900 non-retail employees will be laid off. It's the second round of layoffs under Brian Nichols, the new CEO, after his tenure. So
what you don't know is this is actually a hostile takeover. Bad coffee is actually coming for Starbucks here. So
for the books. Yes.
Yes.
Now, Starbucks, if you wanted to trade Starbucks on its butt, by the way, unchanged, this kind of news is typically bullish
Yes.
for a stock, maybe bearish for the employees, but bullish for the stock. This stock on its butt, Ivy rank at 37 is pretty good. Its earnings October 29th. I would be interested in making a short-term directional October 17th with 21 days trade in here because I want to avoid earnings on October 29th. I think this is kind of a short-term thing, so you might catch a little bit of a bid, especially the market as it is right now, catching a little bit of bid.
See, this is helpful. Lots of trade ideas this morning. So go forth. The FAA, bad news for people that need to fly out of Newark. The FAA is extending significant flight cuts at Newark now through October of 2026. Yikes. It's one of the 3 main airports, of course, that serves the New York City area, and they have just been, I don't know, fraught with problems and issues, and it's going to continue into perpetuity.
Traveling is not what it used to be. Take it from somebody who's traveled since 1979.
Yeah, when you could still smoke on the planes.
Well, you could still smoke on a plane, although it wasn't a smoke.
That is wild.
Yeah, that's
Right?
People used to dress up, though, to fly, though. Like, that's
Oh,
nice.
so you're allowed to kill yourself with cigarettes? So you
And
look
kill
good, you had
everybody
clean
else
underwear
around
on.
you.
If something happens, you had clean underwear.
Look, I'm just tired of dudes free balling it in basketball shorts on the flight. Like, I don't want to see
slander
it.
Dr. Jim.
I don't want to see that. And
Okay.
I don't want to see dudes' feet on the plane.
Hey, don't slander Dr. Jim again. That's the second time.
I don't like it.
Get Dr. Jim out your mouth.
I don't like it. Let's look at UAL here. Of course, UAL relies kind of heavily on Newark, but of course other airlines do
Just
too. But
under $100 at 99. Higher end of its range is down about $10 since it made recent-ish highs at $110. Ivy rank of 23. More importantly, let's look at Love, which
yes, of course, yes.
probably with Newark. But my sister's along that stock. She works there. It's $32 unchanged.
Ooh,
Oh, very nice. Hey, this is interesting. I put this in here for you, Nikki, because you're a John Wick fan, right? You like the movies, of course.
who doesn't like 2 hours of nonstop entertainment?
Just violence.
Killing. It's nonstop.
It's
killing.
nonstop entertainment. I mean, you can't turn that movie on and not enjoy it.
So here's something interesting. So Lionsgate had partnered with a company called Runway AI, and they were looking at franchises like John Wick or The Hunger Games so they could repackage the series. So let's say this is a licensing deal. So the studio, Lionsgate, that made the deal with this AI company, they're like, okay, we're going to give you our John Wick movies, and then you can harness all that information, and then we can make like an anime series or something, other, intellectual property, because, just the breadth of information, but this is in the legal way. But 4 John Wick movies is still not enough for AI to make like something that looks good. So it's nice because AI is not gonna replace real filmmakers, real film, real quality stuff. But they thought they could just ingest this stuff and then poop out more stuff that people would pay money to see. But it's taken years and they still don't have a viable product.
He got married.
Keanu did?
Yeah.
Oh, good for him. I really like him.
1 year old.
I really like him. Can I tell you, though, I've never seen John Wick.
Keanu Reeves is not 61 years.
He is. When you're unproblematic, you age just beautifully.
Oh, my God.
You think that's his hair, like color and stuff like that?
No,
That ain't
of course
him.
not.
Come on. If all you had to do all day was look pretty. Oh, never mind.
But no, I've never seen John Wick, and I won't watch it because the dog dies. So I'm out. I can't. I cannot.
Thanks for ruining it for everybody. 8-year-old movie. Now that everybody's gonna see it. No, it's horrible.
All right. Big fan of Keanu and his Arch motorcycles. He owns like a bespoke motorcycle,
He owns
like
a bunch
custom.
of motorcycles.
Yeah, but his custom motorcycle company, super cool, super sweet. Hey, YouTube and NBC Universal are warning of an impending carriage dispute that could lead to a network blackout. Ruh-roh. You've been waiting all week for Sunday night. You may still be waiting. If you use YouTube TV, that's you, Nikki. They're trying to figure out the deals of the decision. YouTube has been fighting.
Trying to do what Y2K couldn't do.
Something. But YouTube said they would issue a $10 credit to customers.
Oh, awesome.
So awesome for that. Thank you for nothing. I hope you're hungry for nothing. Hey, congratulations to Robert Kraft. Bought the Patriots, the stadium, the parking lot next to it for like $200 million.
What, the massage parlor?
Yeah, I was going to say, he's on his way to Sauce Wax right now. he's
trying out the actually, it's going to be franchised. So
he's actually a part owner.
Thinking about buying some franchise Sauce Wax.
Yeah,
he bought the Pats for like $222 million back in the day, and now 2 buyers have cut a deal to buy an 8% stake in the New England Patriots that values the team at more than $9 billion. The Bears are valued at 8.9. Like, valuations are just crazy.
Yeah.
Which just means winning Super Bowls doesn't matter. If you can get $8 billion for a piece of crap Bears, and you get $9 billion, you have to spend money to win. Might as well just keep it the way it is. Although the new stadium renderings do look nice in Arlington Heights.
I'm not going to Arlington Heights for a game. It's
going to be so easy. You're going to hop on the Metro. You can drink on the Metro. You can, you'll have space. There's no traffic. You're going to be there. It's going to take you shorter time to get to Arlington Heights than it will to get to Soldier Field. Have you ever driven?
Are you smoking what was in your console in your Mercedes? Because that's not going to be how that's going to work.
100%.
That's exactly how it works. It's going to be the greatest thing ever.
It's going to be a nightmare.
I agree.
And you're going to get there and you go,
Dome Stadium,
it's going to be
Super
clean.
Bowl. You're going to be all dressed up.
All right, I need to get it going. I don't want to take too much of Jamal's time. This video is funny, so I showed a food video.
We got confirm and send too.
I showed a food video.
This is a new day, okay? We can watch videos. We can do whatever we want.
I like watching videos.
I showed a food video yesterday, so I'm not going to show a food video today. But in terms of equity, so normally I show a video, from an account that I like called, Why Women Live Longer, of, dudes doing stupid stuff. But today, it's a lady.
You wear us down.
Today, it's a lady.
Now, you wear us like water
Our will to live is gone earlier.
Sorry, not sorry. But today it's a lady who's found herself in a bit of a pickle. Not gonna lie, I might try this myself just to get 2 firefighters to touch me. Watch this.
Oh, naughty.
That's £200 off for a family of 4.
So she sat in a child's swing.
We've got
That's like an old
millions
school,
of free shelf-free holidays available. With
and
Don't worry, man. We've seen people stuck in a lot worse. You ever seen an old man's testicles stuck in a shower chair?
Oh my God!
Yeah,
they called the fire department because she was stuck in the child's seat.
Yeah. Well, how do you can't get out? Like, you can't cut it yourself. Like, yeah, you call the fire department.
It looked like they
I mean, you can call a non-emergency number. But
no, I'm not worried about that part of it. I mean, couldn't they phone a friend first?
Yeah.
I mean,
Yeah, this is why women live. No, that's why women live longer.
Wow.
Yeah, you just call for help.
Oof.
Anyway, hey, that's my time. What's coming up next, Bats?
We're gonna take a quick 90-second break and come back. We're gonna confirm and send your viewer emails next. Thank you, Vanessa. Peace be with you.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to tastytrade. So spread the word and earn rewards. Terms and conditions apply.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Nicky, we are back, son. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a quick look at the market. Even the S&Ps up 19 handles, just about 10 handles off of their highs, about 30 handles off of their lows. NASDAQ up 53, Russell up 5, and Dow up 200. Everything up around 0.25% except the Dow led by IBM, I guess, again, right? IBM trading 280. Down actually $1. I'll look at the Dow stocks in a moment, see what's going on there. Bonds up 3 ticks after the number. Even the S&P's caught a little bit of a bid. Bonds caught a little bit of a bid. Bonds in no man's land. They trade under 116, over 116 to 116.16. They're sitting right there mid-range for the day, 116.11. You can see it by a little candle on the right-hand side here, how it's basically right in the middle.
Yep.
Bitcoin under 110. I'm a little Bitcoin got to catch a little bit of a bid here, 1098 to help the overall market too. Gold up $33. I'm sorry, oil up 33 cents. Gold up $11. Gold had that 1 day slide, really maybe 2 days, and now we're done. Obviously, up $11. Silver up 40 cents or so. Nat gas basically unchanged. Corn, wheat, and soybeans are all a little bit lower. No earnings, obviously, going into Friday. Costco was the one from yesterday. For those who traded that, sounds like a big move. Well, it's moved a little bit
down
more.
16 now, but
Down a little bit more, right? 16, still well off of its expected move. So inside its expected move. That's all I got. Confirm and send. See what's going on for today.
E-mini sold off about 10 points from the high.
Yep.
That's something.
Yep. After
50 on the NASDAQ. Confirm and send. Let's do it. Ooh, this is an interesting one.
All right, then I'll read it for you.
Yeah, go for it.
I have a question on long leap calls. I have been doing them successfully. Usually I buy leaps 18 months out when, in your view, is the optimal time to close and buy them. Now, you actually trade some leaps, so we'll be able to see a lot more of that on your follow page, but go ahead, give it to me.
So, it's a tough question. When you're using leap options, I mean, the best thing about that is that you get a little bit of leverage, especially if you're trading in an IRA or a cash account. And so you're pretty subjective if you're using these as like a stock replacement, right? You're buying a 70 or 80 delta, something like that, call that's a year out in time. It's how bullish you are on the stock. That's kind of a subjective thing. If you're doing these out of the money or at the money, you can diagonalize these. You could sell premium against it. You get a move in your favor.
And closer to the front month, the 45-day time frame.
Yes.
Maybe even a little weekly. If you're going to watch it, you can certainly do that too.
Yes. And so that's, that would be the adjustment that I would make in this situation, rather than, unless you're not bullish on the stock anymore. I'm assuming
if you're not bullish on the stock anymore, you got to get out of this
then you close the position. So that's not if you're trying to kind of reduce some of the exposure there and capture some of that move.
So it really is a conviction trade here.
Yeah.
We're doing something with leaps, and it could be a short-term conviction. Like, it doesn't have to be a long-term. It could be a binary thing. It could be a OKLO type situation where you get a lot of movement in stock. You got 100% implied volatility. Now the options are going to be priced reflecting that 100% vol. So diagonalize it would be the way that I would go, because then you take advantage of some of that premium.
Next question, please. So you mentioned portfolio margin in answering a question on Thursday. What is that, and what are the positive and negatives to it?
What are the positive and negatives to portfolio margin? I don't see a negative to portfolio margin on the surface. really got to dig deep.
You understand your size.
You got to
understand the leverage.
That's the only the negative to portfolio margin, negative to margin even, is the amount of size you get to use. With a margin account, you get to use,
it's like 3 to 4x.
4x your size account. With a portfolio margin, it could be 10 times even more, depending on if you're doing futures options and if you're doing IWM versus SPY. You can get huge without realizing how much you're not using margin, how much leverage you have in that portfolio margin account. So size would be keep your size in check. If you're if your portfolio margin account, you got over 150 grand, you really should be closer to that 2% to 3%, 4% would be, a decent size
in your positions. And it's going to be a lot less than that too. Like you don't have to. A lot
less than that.
There's some positions you can put on it might even use, a couple $100 and you're like, you selling puts, naked puts where you have a lot of risk.
Yes.
I think the point being that size, and you don't have to throw all that capital out, into trades.
Yes.
You can use 20% or 30% of your net lick in trades and be 5 or 10x leverage to your cash balance. So
I will give you the positive to that size capability that you're allowed to use.
Flexibility.
I mean, what's that?
Flexibility.
Sure, and I'll go back to floor trading days when we had unlimited capital. We really did basically have unlimited capital because we were allowed to have all of that leverage. That was one of the things that, between bid-ask differential, wide markets, there was a lot of other factors. That was one of the things that made us most successful, was being able to have that unlimited capital. So portfolio margin doesn't give you unlimited capital, but it does give you a glimpse into that world.
Next one, please.
I have a significant amount of assets sitting outside my brokerage account. Congratulations on your wealth, Lord. I'm debating taking a 15% tax hit on these assets and moving the proceeds into my brokerage account to unlock portfolio margin benefits. What is your view on that?
I mean, this is a personal question. It's a tough.
Right. It depends on one thing: if it's a Tasty Trade account or not. If it's a Tasty Trade account,
then you
must sell everything.
Must do it.
Liquidate immediately, if not today, tomorrow.
And you should do it right now because we have a great promotion going on where they'll match you 1%.
That's
so
right.
Your tax hit is really only like 13, 14%.
That's right. Act now.
What are you talking about?
Answer it honestly this time.
It's tough. I don't know
what.
Throw
that up, Beth. Yeah, sure. Please.
There you go. It's a great, and you get commission-free trading. So
that's right. That's a bonus. So now you're down to like
I cut you 12
taxes.
Yeah, 12, 11%.
Who's got you?
Yeah. Come on, the bats are going to do something for you. This is our promotion.
Number one brokerage firm in the galaxy.
Forever. I mean, it's tough to say. Like, it depends on your own situation and your income levels, and I'm sure your age comes into play and what the assets are. Like, I don't know. It's tough to say. I think getting to a portfolio margin account is, that added leverage is great.
Yes.
And so, if you have, I figure if you're asking this question, you probably got some money squirreled away somewhere where you could get over.
So that's exactly what I was going to answer. To say, try to read between the lines here. Significant amount of assets. Every investor's floor is another investor's ceiling. You're trying to get to that 150-ish thousand range. If you're asking this question, I think it's probably something you should do. I know in my life, anything that I always thought about doing, the only time I regretted it was when I didn't do it. Whether it worked or not was almost irrelevant. Because if it worked and I didn't do it, I kicked myself, in the arse. So I always think about. I'm not mad about the things I did that didn't work out. I'm certainly mad about the things that I didn't do that worked out. So.
Yeah, like going back to the Amazon thing that we talked about with Veneta. Like, you have significant assets, me lord. But if you needed to get over portfolio margin, you could just turn off the credit card for Amazon and get the rest to get over portfolio margin. Like. You could squeeze that. Like,
is that how we're gonna do this? Is this how you want to make
Next question, please. I saw that the banks will begin reporting earnings in about a week and a half. I would think that leads to an IV increase in those companies. But my question is, when does that start? Does it make sense to buy straddles in those companies and ride the premium increase?
I mean, the question here isn't really about earnings starting, which is going to start in a couple of weeks. I mean, the middle of October is when a lot of these banks come out. They're the first ones to start the earnings season. The question really here is, does it make sense to buy straddles in those companies and ride the premium increase? Listen, if you know it, I know it, the market makers know it, liquidity providers.
Time decays.
Time decay. There is a small window, about 2 weeks before earnings, when the theta decay is kind of matched by the volatility of the stock, so you don't lose as much by buying the premium. So if you wanted to, if you were saying it's 2 weeks before earnings are coming out, I'm going to play, I think what I think is going to be an increased move in the stock, I would say, okay, maybe it's the best time to do it. I don't know how intelligent a play it is, but maybe it's the best time to do it. But no, this is not something that we can play for. It's completely random whether the volatility goes up or down on a monthly basis, but on a daily basis, it is what it is.
Yeah, extrinsic value still decays. So even though the number, so like everybody gets caught up in the IV number. The IV number is a reflection of the option prices. And so option prices can still go down via time. An option with 1 day to go is going to be cheaper than one with 10 days until expiration. That's just the way math works. So the number can go up and implied volatility can go up, but that premium can still decay and will likely decay in some fashion.
And when you look at these strategies,
there's no free money. Like everybody knows that earnings coming.
No.
And that there's probably going to be a pop in volatility, but that volatility is baked into the time already.
When you look at these straddles, like I'll look at Bank of America for argument's sake, it's under $3. The expected move is $2.70. I mean, it's $6 a day. It's almost $7 a day at this moment, which is going to probably increase in theta decay. So, you're holding it for a month. That's $210 in theta decay, just being linear.
Yeah.
I would wait till earnings if that's what you're trying to do, and then buy your straddle if you want to play that game.
Yes. Next question.
I read an article I read an article talking about perpetual futures contracts and how they're popular in crypto products. What is a perpetual contract?
Yeah, so it's just a rolling contract. It's one that, there is no expiration to it, so it just keeps trading. And you can't, the thing with futures, like corn futures or oil futures or whatever, is that there's different dynamics, there's different costs to carry, which changes. There's all sorts of like supply and demand dynamics that bake into that. When you're talking about an asset like Apple, a stock is a perpetual future.
Mm-hmm.
If it was,
you want to look at it in an abstract.
Yeah, like stocks are perpetual futures. That's just what crypto is doing, but with leverage, right? So it was like if you could trade Apple perpetual futures for $100 and control 100 shares of stock. It's the same thing. You're trading the underlying asset with no expiration. But futures have expirations because there's delivery, there's carry costs, there's supply demand dynamics, all those things. Like so, there won't be tradable
speculative product too.
But yes,
I mean, if you're looking at it, it does provide
it's a leveraged trade.
It's a leveraged trade.
Yes,
that's the way to put it. With no expiration. It's not a you're not going to find it in U.S. products typically. So not something that we can even trade.
Yeah,
makes no difference to me.
So it seems like the market sold off when the GDP number was released. From what I understand, it was a very strong quarter. Why would stocks sell off on that?
Because it's all perception and random. I know Vecchio and Ilya put a story around this, and they're really good. 55% of the time they'll be correct, as I will on any 50-50 shot that I have. I'll probably be less than 55%. Mm-hmm. Trying to decipher what these numbers mean
in the short term.
It's a really short-term play, if at all. Like, watch what the market's doing. Watch what volatility's doing. Watch how the market behaves. And you are right. The market did sell off on that number, and maybe there was some opportunity to the downside, or there was some opportunity to pick some stocks up that you thought were going to benefit from this. But really trying to decipher the number, leave that to the economists. And we actually have an economist right here in the room. Didn't you take econ in college or something like that?
Yes.
So tell us what happened.
I mean, I think in this context, it's relative to the rate cut projections and how fast those would be. You have a piping hot economy, you usually don't cut rates. But, I think that was the short-term sentiment was that, GDP is really high. That's kind of a knock on the rate cut story, but that hasn't moved in the bond market.
Don't worry, they'll revise it anyway in a couple months.
Yeah, everything changes.
Everything changes
short term, and there's no way you can explain. I mean, explaining
Look
one
at the
day.
Fed Watch tool. It's really good.
Yeah, 24-hour price movement. You can make whatever story you want.
Sure.
It's hard to really.
Remember, for every buyer, there's a seller for there to be a trade. So yesterday, the sellers were just more aggressive. They were willing to take a lower price to either add to or get out of a position.
Yeah.
That's really
and now we're flat this morning. So
yeah, exactly.
So it's whatever.
Good job out of you. We're gonna take a quick 90-second break. When we come back, we got This Week in Stocks, a little recap with Jamal. We're back in 90 seconds. Tasty Live.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
I love to take risks. I love the instant pain, the instant gain of trading. I would describe my trading style as a calculated risk taker. I like to play towards volatility, which is something that you can quantify high and low points of. Well, my favorite strategy currently is the diagonal spread. I like the idea of having defined risk, but while also having a little bit of positive decay that works in your favor if you're not directionally correct. But the best part about it is the positive gamma that you get from it. I really like that the position can grow and get bigger as you're more correct on that position. So I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Niggy, we are back, son. But you know what? We got This Week in Stocks with Jamal. How are you, my friend?
Doing fantastic. How you guys doing?
Doing well. Thank you.
Yeah, nice.
Here with my son. I feel like it's a legacy that I never thought I'd be able to have, and now it's awesome.
Yeah, let's hope we don't burn
maybe
it
one day
down.
we'll get you and your son, Jamal. Put you out here for a while.
He's coming of age.
He's definitely of age, but I don't think so.
He's tall enough.
Wait, which one are we talking about? The older one or the younger one?
Oh, I don't know. The younger one's old.
Is he
tall
your
enough
oldest?
too.
He's like.
No, you got one in college, right?
Yeah, he's in college.
Hey, Tony, for fun, let's just talk about our younger sons right now.
Sure. That's what I want to talk about all the time. Our favorites. Talk about our younger sons. The teenagers.
I'm just kidding, Nicky. I'm just kidding. I'm just kidding.
It's okay. I've had to deal with
the athlete I never had, Jamal.
See, Jamal, I've had to deal with new siblings, step siblings, coworkers. Katie has surpassed my level in the pecking order as well.
This is true.
So
She's in my will.
yeah.
Hey, look.
So
all that may be a thing, but look who he's sitting next to right
That's
now.
right.
That's
right.
all you
Push
need
come
to
to
know.
shove.
All right,
Jamal, I don't want to take any more of your time.
Look,
what do you got for us this week?
The last thing I will say between, and this is just between us, okay? Out of all three of my kids, I think the one that would save my life would be my oldest son.
Okay, there you go. There you go.
If you leave him to watch.
Well, he's not in the will yet because he don't love him as much. So he's trying to get in the will.
Yeah, man. Yeah, that must be what it is. A rare quadruple feat this week, guys. Let's move to the first slide. So yeah, Dow, Nasdaq, S&P 500, and Russell 2000 all touched all-time highs on Monday this week. That's the first time we've seen that since November 2021. You know what happened after that? Things went downhill. Who knows? I don't know. We have no idea, but it is kind of interesting. That was the last time. U.S. dollar notched biggest two-day advance since May. We have this weird thing this week, right, where dollar moves up, GDP comes out, which who really cares about GDP? But apparently, because it was good, that means that we don't need rate cuts, right? At least that's what the dollar took it as, and it took off for 2 days.
I did learn something in econ.
Yeah. You did. Right?
But then, hold on. But then you get core PCE this morning. It stays in line and shows no signs of tariffs, so we can get rate cuts again. How about that?
Yeah. Well, I like to watch the Fed Watch tool hasn't moved.
Yeah. Isn't this what they call the Goldilocks zone? Some is saying no rate cuts. Some things are saying yes rate cuts. It's like perfect, so you can do whatever you want.
Yeah, exactly. I mean, as long as we still get the same market environment that we're getting here, where we're seeing things move around, and while vol is not crazy high, it's also not too low. It's not in the 12, so I'm fine with it.
Yeah, it's Goldilocks right now. You're correct.
Yeah.
Big move from this Lithium America stock, another stock where they're talking about the Trump administration taking an equity stake, kind of like the MP Materials, which we saw. So it would seem that there's a strategy going on here, right? They're looking at certain metals, needed things. Seems pretty smart. Funny thing about lithium, when I think back to this, I remember being, you guys know, I used to work in a lab. Lithium is not like this kind of, it looks like it's a silver thing. It looks like it's this big, like harder metal, but it's actually a really soft metal. It's kind of weird. You cut it. You can literally cut it with like a knife, and you got to do it like in this like liquid. Otherwise, it can almost explode. It's the craziest thing.
Wow.
I didn't realize that.
Yeah, it's wild. I know, little chemistry for you. Gold and silver on track for their 6th straight weekly gain. They just keep going up. Doesn't matter the narrative. VIX remains in the teens, but it is positive for the second week in a row, assuming we close up this week. And VVIX, if that closes over 100 this week, that'll be the first time since the end of July.
VVIX, let's take a look. What did you say?
Volatility of volatility.
Yeah.
So
It's there right now at 100. Yeah.
Which essentially, I mean, when VVIX is over 100 or that's rising like that, that means there's a lot of VIX options activity, essentially, right? Like it's the VIX of VIX. It's the similar calculation that they use for SPX and VIX. So it's just kind of one of those things we always pay attention to a little bit, especially once it's over 100.
Yep.
Okay.
Let's move to the next slide. I got some good slides for you guys here. This is a chart of consecutive trading days in contango, right? Trading days, not calendar days, trading days. So the longest we were in contango was almost a year when you look at April 14, 2004 to May 12, 2005. That's number one there. You can see a couple of others here along the way in 2021 through 2020. Obviously, 2021, when you think back to the beginning of that was the mean period, right? But markets were essentially moving around a lot, but we were in contango for almost a year there. I'm sorry, longer than close to a year. Sorry, 252 days. You see 2022, 2023 there, all that. You can look at a bunch of these days here. Obviously, when you look at these dates, a lot of times when I put out dates, especially related to VIX, you're seeing 2008 or August of 2015, like the days where we just got rocked. Obviously, this is the opposite of that. So most of these days probably don't stand out to you. The current streak right now is 97 straight days from May 9th to the present.
Wow.
Yeah. So,
it's about time we get a little bit of a pop and vol, is what you're saying.
Yeah.
I mean,
we can still have a sideways, upward moving, two-sided market with a little bit more volatility, and the market breadth could still be strong as it's been. I mean, that's really what you kind of want is our traders. I mean, this has made a lot of geniuses out of a lot of
course,
risk-bearing people.
Yes,
put it to you that way.
Yeah, I would say as far as this thing goes, just doing some quick math, I would say if we have another month of contango, we could be in the top 10. I mean, we could be in the top 10. So,
yep.
I know, right?
With everything that's going on, we've had tariffs, wars,
Famine is what we need. We need locusts.
Yeah.
Locusts.
We have the screw worms.
Do we screw worms?
The screw worms. They're affecting the live cattle. This is the sort of stuff I get from my Thomas Tuesdays with Thomas Westwater. The screw worms. Have you looked at live cattle?
I've been called worse. What's a screw worm?
Screw worm. Yeah.
Worm.
If you look at LE
Tuesdays, huh? Well, guess
futures.
What? I'm going to be getting that Tuesday information now. That's right. I'm going to be on Options Trading Concepts Live with Mikey, everybody, just so you know.
Jamal, the things that Thomas has in his brain are, sometimes I see these slides, I'm like, how do you even know? Like when I saw screw worms, I was like, who even knows what a screw worm is? And Thomas knows about the migration patterns from Mexico. I'm like, my guy, we got to get you.
Yeah, he's one of those farmer type dudes, man. This guy I used to work with that traded the beans and traded corn, kind of similar. They have weird information in their head. It's a trick.
It's
Let's move to the next
weather
slide.
patterns. It's incredible. You look
now every fly I look like I got to think of what's a screw worm.
Yeah, it's gonna start eating your skin. It gets into the huts.
This is from our friends at the SEBA. I thought it was pretty good, so I had to share it. This is the percent of S&P top 100 stocks with inverted call skew, right? So there's a lot of stocks out there we've seen with inverted call skew. Oracle, for example, is one of them. Historically, this number probably is around 3% of top 100 stocks with inverted call skew, save for the times where you see things are crazy. You see 2021 meme stock era, post-election rally. Obviously, there was a lot of upside skew. More recently, that number was around 12% of top 100 names with inverted call skew. So, yeah, I mean, there are some big names out there for sure.
That's a really interesting chart. I don't think I've ever seen that one before. That's pretty cool.
And what do you mean by inverted call skew?
Like where you have call skew
upside call skew.
Yeah, upside call skew. I mean, it tells you exactly what you've been watching with a lot of these stocks that people are just YOLOing. Upside volatility is bid.
And that's why you look at 2021, which you referenced a moment ago. But you see how long you had that, and you've had it in before 2024 also. But that's when things are getting crazy. That's when the stocks are going up $20 in a day.
Yeah.
You know, stocks like up 250%, like OKLO. This is what you're going to see, this kind of chart.
Yeah.
But I've never seen it presented like this.
This
It's
is
really nice.
cool. This is cool.
I know, right? We got to give him props. Let's move to the next slide. Now, you like that one? I got another one for you. All right, follow me for a second. All right, let's do this. This one, a good one, comes from ASIM 500. This one is the zero DTE straddle price at around let's call it 12:45 p.m. our time, right? Okay. So around 12:45 p.m. our time, that thing is pricing about a 0.14% move in SPX on a 5-day average. Currently, it is. Now that is lower than all of 2024, but we just talked about VIX, right? So VIX in 2024, most of 24 was lower than it is now. So it's kind of weird that the SPX straddle price on the 5-day average is lower now than it was for all of 2024. It's kind of, I don't know how exactly you explain that. I think it kind of speaks to kind of how quiet we are right now.
Yeah.
Even though, again,
it's probably the put skew, because like there's been so much upside call skew that now, you know, you usually have this, and the interest rates.
I mean, what this really shows you is you 0-day traders don't ramp up your size and this type. I don't think you should be ramping up your size, even though it's probably been working quite nicely for you in the past couple of months. So just remember, you're getting a very low entry price right now.
And these are
bingo.
That's my public service.
No, that's it. That's exactly it. That's exactly it. Nicely done, Tom. Let's move to the last slide. Crypto had a rough week. Bitcoin is down 5%. Not sure where it is today, but up until today, it was kind of weak. Oracle secures the deal to manage the TikTok algorithm. Will be one of the 3 entities that will control 45% of TikTok USA. Amazon, they're closing a lot of their fresh stores, and they're closing all their fresh stores in the UK, converting some into Whole Foods. And Starbucks is closing underperforming stores. You don't necessarily see 2 major companies like this doing restructuring situations in this type of environment, but it's happening. We got to mention Zero Hash, man. They raised $104 million in a funding round and backing from Morgan Stanley Interactive Brokers and SoFi. That's right. All of a sudden, certain people are tripping over themselves to get some crypto. Jolt's jobs report coming up on Tuesday, and then we got non-farm payroll coming up, of course, on Friday. Research September 23rd, OJ, zero sum or win-win. Truth about trading.
Very nice, my friend. Awesome. Thank you so much for your time. That was a great little chart. The second to last slide, that was a great little chart. We'll take a quick 90-second break and come back. We got the opening bell next, Jamal. We'll be back in 90 seconds. Thank you for your time.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Nicky, we are back, someone. About a minute to go. We just had a good conversation with Jamal. I learned things about screw worms that I didn't know even existed. Is there an unscrew worm that I should know? Can we ask Thomas Westport about that?
Have you looked at lean hogs? Or live cattle, I mean. I traded lean hogs the other day. I'm short lean hogs.
Go ahead, you can put
live
it up
cattle.
there. Go ahead, you talk about it. You put it up there. There you go.
It's been a straight rocket shit up. So, I mean, we talked about the screw worms around here.
And so cattle's going higher because there's the
screw worms.
Screw worms, which is bad for cattle, which makes it good.
Yeah, they latch
for
on.
Prices makes it higher, right?
Yeah, they
bad for consumers. Prices go higher.
Bad.
Well, prices are going higher right here on the E-mini, but really kind of a small move here, right? E-mini S&P is up 13, Nasdaq up around 26, Russell is up $1.10, really nothing. The Dow has been the strongest. That's up 200. If you want to see what's in the Dow, you can go right here to your watch list. I have high option volume list, but you can come down here to all the different lists, procured lists that we have. You can put on your own here. You can go to the liquidity, and then you go market indicators. You'll see the Dow Jones.
There's our bell.
There is your bell. We got to get your ding on
Yeah, I've low ding.
Somebody's.
Did he do that on his way out?
He probably turned it off on purpose.
He's trying to sabotage me.
Boeing up $9 for the Dow is the big help there. UNH is up small too, but when you look at the Dow itself, there's only a few stocks for them. Apple being one of them, though, down $2.33. Apple will affect a lot of different markets. The S&P, the Nasdaq. Matter of fact, the Nasdaq is down 5 right now. Volatility is down 13 cents. I don't know if we're out of the woods quite yet here, son, with the market going into a weekend, into Friday. I think volatility is probably going to stay bid. You've probably seen the low in volatility no matter what the futures do right now. So use zero-day traders if you're looking to do something. Probably a better time now than waiting till a little bit later. That would be my guess, closer to the next half hour than anything after that.
Costco down 30.
Yeah, that's gonna put a little damper on the market too.
Yeah.
You might want to skew things a little bit here to the downside. Costco 909 and change. Ivy rank of 39, still good. Really hasn't collapsed. A post earnings trade in Costco might be something that's on the board for us on this show. So let's make sure that we think about that coming up too. Costco was down around 6 to 10. Pre-market down 35 now. Now you're looking at the expected move or more.
Boeing up $8 too. That's a big move.
Which one?
Boeing.
Yeah, Boeing. That's what's helping the Dow.
Yeah, you got Boeing. Intel was up $2 or $3. Now only up about 63 cents.
Let's go back to that list and change it from the Dow and go to the high option volume list. You can go down here by looking at all of them. Here's your earnings that I always look at. Here's your popular Forex and futures. Market indicators, you go to liquidity, you got the high option volume list. I like to look at what's bringing us lower. If we're higher, we're slightly higher here today. So Costco down 35, Netflix down 5. Some of the Chinese stocks like Baba down 3 and change. TSM down 2 and change. Apple down 2. Netflix down around 2. On the upside, you got Lilly. Lilly's always a leader. I wish I had much better market. It's really hard to trade. Apple Oven. Always by a leader, I mean a leader on the board. Whether net.
Well, you look at this junky.
You like to look at the.
I look at the S&P 100 or even the Nasdaq stocks. I mean, some of those stocks like the Apple Oven is it moves because there's a lot of gamma. I mean, it's one of those stocks.
A lot of gamma. It does have a lot of trade. It just doesn't have great markets.
And it's all it's kind of fringe trade.
Definitely. You look at November options here, and I'm looking at the open interest. It's not that great. Well, you got $4 wide markets. That's why it's not that great. But still, always one of the leaders, and everybody likes to kind of gravitate towards that.
Yeah.
Apple Oven's a stock that has not had a downtick. It's on its highs. It's up $12 today. I look at that list because there are a lot of stocks in there that have kind of the fringe-ish players that have brought some breath to this market. So I like to look at that.
Tesla up 8.
What's that?
Tesla up 8, bouncing back a little bit.
Tesla's been a great trading stock with decent Ivy rank. $432, up around 8 and change. Good markets in Tesla to trade too. Just to give you a comparison, you take a look at November options in there, you got tens of thousands on thousands on every line, tens of thousands throughout the whole series for sure. So Tesla's got some good markets. What are you looking at here, son? So far, market's catching a little bit of a bid here. Volatility in by 33 cents. Can't keep a good spoo doggy down. I actually thought we'd see a little bit more two-sided action this morning.
Well, I mean, we looked like it was going to reverse the entire move. I mean, we had the NASDAQ down for a second there.
Yep. Yes, we did.
We did. I mean, you got volatility coming in 29 cents. You got the VIX futures at 18, giving up a little bit of the move that we got yesterday. So it looks like we're going to be.
I don't think volatility collapses much over this 1.5% that it's down right now. Looking at /VX,
so?
Even if the S&Ps are up like 30 or 40, I think it'll move a nickel going into the weekend. I think volatility just stays a little bit bid. People always ask. Now I could be completely wrong. Yeah. I mean, if you see volatility /VX collapse, your existing positions are going to do much better than like we'll look at Saturday and Sunday numbers on pricing. If volatility /VX stays bid. You won't get that weekend decay, which I think is going to happen. But again, it's just a guess, seeing what's going on. Bonds 116.05 in no man's land 2. Not doing anything there either. All right, my son, what else is going on before we take a quick little break here? Bring in Fast Market where we go to the viewer email.
Yeah, let's get to Fast Market and do some trades
put on.
I need some trade ideas. I mean, I'm looking through some of my stuff and like I don't have a lot of things that are. I'm looking at this BE position, which
BE volatility collapsed.
It's gotten killed, and I am out about $300 on this strangle. I'm short the 50-75 strangle that started as a call ratio.
October or November?
Yeah.
October. 50.
So I'm in I'm in November. I rolled to October on the 23rd. It was a great roll because I rolled from an inverted, the 70 call, or I'm not inverted, but it was a straddle, the 70 call, 65 put.
The stock was like $80.
Well, I rolled when it was like more towards 80, but I rolled to an out of the money strangle. So I rolled to the 50-70 strangle.
You changed your strikes. You bought the guts, sold the wings kind of thing. On a down move, you had short delta on there on a trade that was losing money.
Yes. I'm sorry, the 75-50 strangle.
In November?
And I did that for a credit. I could show you here.
Yes.
I'll pull up my.
So 75-50, while you're pulling that up, you've got, even though the 75s are out of the money, there's so much call skew in them, they're a 50 delta option. The stock is 67, they're a 50 delta option with being a 75 strike. Why don't you put that up?
Yes. So I'll show you. So this is on the order chains. If you right click on anywhere in the order here, you'll pull up this view market snapshot. I'll give you this right side menu. So these are all the adjustments I had. So I did.
And that's the dates you made?
Yeah, so that's the dates, the prices. So I did the call ratio.
I just learned something, ladies and gentlemen.
I sold the put against it. I know, I'm going to teach you a lot of things.
Well, you've got to tell your girlfriend like what you're doing and stuff like that. I am a real man. I don't have to tell her what days I'm doing.
Okay, well, we're going to get back to the platform here. So I sold the put against it, and I rolled, I close out the call ratio spread. I rolled it out in time. The point being that this trade was, 3, 4, 5, 6 times the loss I'm having right now. A couple $100 into this move. And these options have just gotten absolutely killed. I'm debating if this is like the time to go. The puts have basically not moved. So
this is the time to roll. I know you're already in November, so you did that already. You did it earlier in the week. Perfect thing to do. Whether it worked out or not, it was the perfect thing to do. You did something that was aggressive, and that's what you want to do.
Yeah. So
it happened to work out for you, but that's not why I'm calling it out.
Yeah. The stock is down like, $10 from where
And you had short delta.
And I had short delta. I feel like it's time to go. Volatility has come in. So I might just close out.
Can you, one more time before you make that decision on your own, will you put your platform, can you put your platform up there and then right click on wherever you right clicked and show that to everybody so that they can have that?
Yes.
Even the S&P's up 26. Go ahead.
So it'll just be anywhere on the right side menu. So you just click you just right click, you view market snapshot.
Oh, got it.
And then, so this will give you a breakdown of the price at the time that you did those adjustments, the IV rank. You can get to the IV index. I mean, you could see implied volatility when I made that adjustment 2 days ago was, 102%, we're sitting at about at 105% in the November cycle. And the October cycle is still bid as well, but we've had a big move lower, which has helped significantly there as well.
So if you're one of those people who likes to torture themselves for when you did this, if it didn't work out, you can look there. Well, if you're one of those people that like to pat yourself on the back, you can see exactly what they're doing. No, I'm kidding you. You can see what implied volatility has done since you put on that trade and how advantageous it would have been. And if the rolls work for you. Like, that's the most important thing. Like, everybody says, I'm worried about the whipsaw. I'm worried about, well, you can look back and see what you didn't do. If you didn't do it, how it would have done, and how you did, obviously, with the rolls that you did. So maybe you can figure out what works best for you.
Can I also do show my biggest change to the show?
It's your show,
in my reign of terror.
You don't have to ask me ever again.
In my reign of terror, my first adjustment, the size of my pointer. Do you see this? Everybody, you know how many emails I get? I can't see what you're clicking because you guys got too small pointers. So I made a big pointer so that even people like you with the big old glasses, they're kind of losing it a little bit. Even if Tom is watching somewhere over foliage weekend.
You know you get your big pointer from your father's side of the family. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with what comes up next?
Fast market, come on!
Right.
I don't know. Like, should I pretend like I don't know?
Pretend like you don't know. Fast
what
market
is it?
next.
I don't know.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
You know what my first concert was when I was very young. It's quite embarrassing.
Hanson.
How'd you know that?
I mean, I feel like everybody.
How did you know that?
Because who else was popular then in like the late 90s?
Oh my God, that's amazing. That was cringe. There it is, the song. Yes.
Yes. All right. Good luck. Good trading. Let's go eat some roost.
Peace.
It was a great show, very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math would be really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
All right, so you've got a couple spread trades under your belt, and you're ready to start scaling up your trading. The common thought is to just increase the contracts, but this is only multiplying the risk and the reward of the position, essentially pushing the chips in and doubling up. Instead of adding contracts to the position, consider widening out those spreads.
One of the things that I do differently than a lot of people is that for the purpose of the show, I have multiple accounts, right? So I'm trading in a lot of different sized accounts. So I've got to balance finding ideas and finding opportunities for smaller sized accounts as well as finding opportunities for those larger sized accounts. I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Nicky, we are back, son. And you know what that means. Time for a little bit fast market where we go to viewer emails. But before we do that, can you just go back? We had a little setting issue here on the production side where they couldn't see your pointer. So
my mega pointer. They want to see my big pointer.
They want to see a big pointer. So they say,
let me show you my big tool I got.
It's so small.
Yeah, look at this big tool I got.
There's the pointer. We'll have it back up there for you. I really do apologize.
So for the right clicking, here's where we were talking about. So you right click on anything here. It gives you your.
And that is a
market
beautiful pointer.
Big, beautiful.
Now, the biggest, beautifulest, most pointer I've ever seen. A pointer so big. It's so big.
Big and beautiful.
Two Batistas.
So I'm sorry. It's day one. We can't do this the first day.
Fast market, everybody. Play some music. My timing was a little.
That was good. That was good.
My timing was a little off. I'm much better. I'll be much better. I promise. All right, son. Let's see. What's our first trade here? Thank you so much for fast market. All your participation. We have Carlos from Cherryless Forever? Question mark.
Carlos. The cherries are still here.
And I'm glad you popped yours. So, good for you. NVIDIA.
The cherries are younger and usable.
That's right. That's right.
Sure.
NVIDIA, he's neutral. The stock is down about 85 cents, 176. Been going sideways for the last month. Ivy rank is only 8 in here. It has earnings November 19th, which is 2 days before November expiration. So this is a trade I would think about putting on, even though earnings were looming before expiration. All things work out equally. We should be out of this trade in about 3 weeks or so. Do you have an opinion on NVIDIA? You want to play it straight neutral? You want to do something with a little bit of defined risk? I know if you're in like a portfolio margin type account, this is gonna use maybe $800 in buying power. But if you're in a margin account, it's going to use significantly more than that. I'm just trying to show you the leverage of portfolio margin versus a regular margin account. And also, if you're in a smaller size account, you're probably going to want to use something with defined risk. What do you want to do here in NVIDIA with a low Ivy rank of 8?
They're looking at a strangle, 150, 210.
Even though the Ivy rank is low?
I know. I think you just buy the wings. And if you're in a portfolio margin account, it's going to be a lot cheaper to hold a naked position. But
I think $20 wide here, collecting
that's what I went
$3 and change. It's going to be a slow moving process here. I mean, when you buy the wing, you kind of mitigate that volatility contraction. But with Ivy rank at 8, I think what could hurt you more is the volatility expansion. So by defining that risk and having that other option, it's going to hold a little bit of premium to it. Those long wings that you're buying relatively cheaply. All things being considered, I think that's probably the trade. It's trading around $3.33 mid price. Natural's $3.29.
I did it. I got filled on that. So I'm.
Oh no ding! So, we need a ding.
I know. I don't know what
We need to get.
You got me low ding here. This isn't fair.
He's too young to have low ding, and they got like testosterone pills and pellets and everything else like that for you.
I don't need that yet, pal. Okay. It's okay. Everything's all right.
You got filled at what price?
I got filled at $3.33 for the iron con.
$3.33, and you'll push that through on the.
Yes, it's coming on my follow account. We'll have some sort of. If you have ideas for how we should label the BAT account, please tell us.
One quick thing I'll show you: 70% pop. Basically no delta on the strikes that he used.
Yes.
Good theta decay of 6. Again, IV rank very low. Next trade, please.
Yes.
INTC, that's Intel, which is like, is that a meme stock now?
Oh, but it's in the government's portfolio now, so just be careful.
Is it too late? It went from 25 to 35. Mike in Salem, Oregon is neutral on it. Neutral to slightly bullish at basically all-time highs, at least yearly highs. But think it's ranged between 30 and 45, selling 25 Delta strangles in November. Both sides, 25 Delta. What do you think on this Intel that has an expected move? Earnings are October 30th. Expected move in November of $7, which is quite high. IV rank of 56 on a $35 stock.
I mean, look at the skew on this. I mean, if you look at
The call skew.
The 30 put in November trades at 135. It's a 23 delta.
That is correct.
The 48 or even the 47 call, if you want to just go equal delta. They're exactly the same delta. I mean, this is how you could see where skew is. They trade at basically the same value. That's another way to look at skew. But you're, 12 points out of the money on the upside and 5 on the downside. So you have almost 2-3x the skew on the upside here.
So what do you think about like a small broken wing butterfly in here, or if you really want to take advantage of the upside skew, some sort of ratio spread?
I was thinking naked put, call ratio spread.
So sell the put.
Sell the 30 put, do the 40-45 call ratio.
Funny, I was looking at the 40-44, 40-45, just as good. If you're going to sell the 30 put, you're maximizing the amount of buying power you're using. The three-legged trade that you have, meaning 40-45 and the 30 put, is going to have a pop of around 71%. Good $5 in theta decay, $6 on the last trade we did. Got a little bit of long delta, which meets their slightly bullish to neutral trading. You can see this large green line, which gets you well over all the strikes that we have.
You're gonna be at 50. Your break even's at 50. I got filled at 198. So you're which is about 2 pennies. 2
to 3 cents below
it's
mid
moving
price.
around.
On a three-legged. Yeah, I like it.
And your break even is at 52. I mean,
Very good. Very good. Next trade, please. NDX, 0-day expected move, short put, $10 wide. Wish we saw this a little bit. I'll give you my group. You can go with this. NDX at its highs for the day, pretty much, with NASDAQ up 62. Well, not really at the highs of the day, but it just rallied. Dow is up 300 and change, and even the S&Ps are up 31. I will say that volatility has not made new lows. It's sitting at 1808. Got the direction wrong here for sure, but volatility hanging in there. I think it's too late for this trade.
I find NDX kind of tough to trade too.
I do
versus
too.
SPX, because SPX, it's a tick, 5 cents. NDX, some of these options, I mean, they don't
trade.
They don't really trade in the 0-day, and that's a function of the size of it too, because it's a super big product, obviously.
Yep.
But you're $1.50, $2 wide on some of these, and if you get a little bit of volatility in there, things get wonky.
And wide.
Yeah, and they widen out.
NDX,
so you have big swings in.
Yeah, not my favorite. Jeff in Kent, Washington, WA, Washington, I think so. If you come up with another trade, which I hope you do in the future, instead of NDX, SPX, SPY, Qs, that kind of thing.
So we're going to pass on NDX. We did the Iron Condor in NVIDIA and the naked put call ratio spread in Intel.
Yep, filled on both of those. ENPH. Markets in November are about 5-ish.
Has gone nowhere.
What's that?
It's gone nowhere.
It has gone nowhere. You are right. It's the lower end of its range. They're bullish. Being a little bit of a contrarian here. Time to get long ENPH at this great price. Sold at 35 puts for $350. It doesn't say what month. Jack from Philly. Next time, please add that. November, I'm going to assume that.
November.
It's the 35 puts. They're trading 365, 375.
Jack.
I like the 30 puts personally. If you're going to that for $1 and change, $1.70-ish, $1.60 something. What do you?
All right, I do the 30 puts. I'm with you. I did do the 35 puts in the Johnny Trader account on Wednesday.
Oh, okay. Okay.
I'm with Jack. I feel the same way.
Stocks down ticking, so you probably can get about $1.70-ish if you're looking at
Yes, I got filled at $1.68.
$1.68. Wow, you just pound them out, huh? Okay, well. Okay. Thank you, Jack from Philly. I'll talk to my friend about pricing over here and canceling and replacing. It hasn't cost us.
Oh, you want me to try? Here, I'll go get it. You think I'm going to get $1.70 here?
No, you can't. They're offered at
$1.69. They're offered at $1.70.
Great trade.
So now you're at
now. Let me change my tune.
Now they're at $1.67, $1.69. So I get filled right at mid price. Yeah, I didn't hit any bids.
But the stock upticks 5 cents. Great trade. At $1.68 by you, son.
God.
Last price $1.69. Let's see what the next trade is. Tesla. Can it be? Finally can be bullish on Tesla. Won't be the same without Tom. Big thanks. Give the research boys more time to shine. Research is the heart and soul of the show. 100% agree.
Love you.
We should probably tell the audience that we want to give the research team a lot bigger role and a little bit broad-based on what they can research. And not be so pigeonholed into what we've done.
If you have ideas, please send us your ideas.
Sure.
Research
Support
at Tasty
Live. You can give it to me. I'm Bat at Tasty Live. What are you, son?
Nick at Tasty Live.
See that? How good and easy that is? Nobody's hiding from anybody. Love to see this. Harvey M. in New York City wants to be bullish. Doesn't have a trade. Tesla already up $2.40. Tesla trade as high as $4.34. This morning. It's almost $8 or $9 below that. Not acting as well as the rest of the market, although it is up 2 and change. I don't necessarily agree with the assumption here on the direction.
You don't want.
I like to sell premium in there. I think the premium is good. I don't think I would actually kind of lean a little bit more neutral than bullish.
So like an iron condor, you go November or October?
Earnings in Tesla are going to come October 22nd. I mean, that's like 4 weeks away. I mean, for me and Tesla, I got to have a little bit more conviction. I would probably abstain on direction. I have a little bit more conviction on direction.
Yeah, but do you go to the October expiration in November?
I would probably go to October just because I want to avoid the earnings on October 22nd.
You want to do like a 15-point wide something?
Sure.
A 20 delta?
Sure. Yeah. So you
want to lean slightly short, or they want to be long?
Well, they want to be bullish. So if you want to follow what they're doing, I would probably go neutral because I'm a little bit more bearish than bullish. You're going out.
How about like the 385, 370 put spread?
385.
So it's about a 20 delta for the short, and then you go like the
480 or 485.
I was gonna go 490. And then 15 points wide, but you could do 485, 500. You do it at $4. It's a little.
So your probably profit is 60. I like the. So here. So let's take a look for a minute, like what you're getting on the put spread. So you're getting about $2.40 on the put spread. You're getting around $2 on the call spread. So your strikes make sense.
So we're gonna do an iron condor. So we'll do the
385, 370, and what are you doing on the call side?
And the 485, 500. So we're going to the 85 on either side.
485, 500, 405 is the mid price.
Yeah.
Good job out of you. 60% pop, $12 in theta decay, a little bit longish delta, 2-ish long deltas. We're supporting you, Harvey, but not in a big way. I'm not going to lie.
Yeah, no.
But you are doing October. It's going to move a lot quicker.
I got 5 cents above your mid price, Johnny.
Oh, good job. Good job.
I made up for the.
That's called price discovery.
I made up for the penny that I gave up on end phase.
Time will tell. Next trade, please. /J7. He's talking about Japanese yen here.
So they're looking at 6.
But I don't know what /J7. Why J7?
I think they're just looking at. I think they got a little typo here. 6J.
Oh, 6J. Got you.
Which is Japanese yen. I don't. Is there a J?
It is a Z. It is a Z future too.
Yeah. They're just looking at.
It is up slightly. And it is on its butt too. What do you think?
I sold a put spread yesterday. This was a Katie McGarrigle trade.
Okay.
For 3 trade ideas.
So you don't want to duplicate your trade. You got the same thing here. They're long futures, Johnny Trader account.
Yeah.
A small product it is, but it still costs $2,300. So if you're in a Johnny size account, and it's under 25,000, and hopefully your world is going to get a lot better now that they're fixing the patent day trading rule and getting rid of it. Hopefully, it's got to just pass the SEC, from what all my internal lawyers tell me. Your world is going to open up to you, which is going to be great. $2,300 on that. I kind of prefer your put spread in that size account than the future itself, or you can go to the micros.
Or the TastyFX products.
Or the TastyFX products.
I also did yesterday. You can trade the USD Japanese yen pair, which you would want to be short. If you want to be long Japanese yen futures, you'd be short USD Japanese yen currency through TastyFX. So I added a little bit to that as well.
Very good. Next trade, please. PLTR. So Tom is retired. Well, he's not really retired. He's out to fact until I fired him.
Yeah.
I just had enough of him. But he wants to retain a little bit and stay on. So he's still going to do all the shows for us, and I can phone a friend if I ever need him. And he's going to do consulting. It'll be a dark day when I have to call him for consulting, but it may happen. But for the good old question, everyone is wondering, are we still trading with Tom's money? We are not trading with Tom's money. We are now using the firm and my own account. So how about a stupid C, 90.95? Oh, covered. He's looking at
he's looking at selling a put.
Here.
No, he's selling a stupid.
Oh, he's selling a
AKA
stupid.
Super Bowl, selling a put spread to buy a call spread. The stupid.
Stupid. So he's buying a call spread
selling
and selling a put spread. Okay, he didn't put buy. It's a guaranteed buck. Small plug. All right, so let's see the last price. PLTR down $1.95.
So you'd be.
I hope you did the stupid this morning and not last night.
Yeah.
So what do you think about PLTR? Basically on or around its highs, 177. I know it did get up to around 190. This has been one of the high flyers. What do you think about PLTR? So it comes down to your directional. Now he's bearish here, so hold on a minute.
No.
It says bearish on the left. I don't know if he's got this wrong. So if the stock is around 170.
So I have some short delta here. I did a put diagonal spread a couple days ago. When did I do this? Yesterday, 20.
So he's doing the I don't know. This was either submitted days ago or because the strikes are wrong.
Don't you poo-poo H. Montero. It's my guy.
Smoky Mad Pot, New York. No wonder he's your guy.
No.
Going back to our story from this morning.
No.
Okay.
No.
Not gonna touch that. All right, I'm gonna abstain here.
I have some short delta here. I think they're looking short delta here. So I'm with you, but I did the.
So if he's looking for short delta, I hope he put this trade on yesterday.
I think he's selling the call spread, the 190, 195, and then buying the 180, 175 long put spread. It's a double. It's selling a call spread to finance, buying the put spread. You have basically, you do this for a small credit. You have basically high probability, high upside potential trade.
Awesome.
If you get a downside move.
Okie dokie. Let's go to the next trade, please. How about selling the 65 puts in PayPal, says AJ from LA.
It's another stock that's just been left for dead. I could do this.
PayPal up 33 cents. Not that big of a move. PayPal's been going absolutely sideways. No earnings October 28th. October options, if you're looking at that, I know they're looking at November options inside the earnings season. This is almost an October trade for me. I don't know about you, son. What do you think?
I'm down with that. Yeah.
65 puts are $1.06, 106.
Just to avoid earnings, you're thinking?
Say again?
Just to avoid earnings?
To avoid earnings. I would probably go in, and they're 99, 103 right now. Stock's up. I would want to be filled on a down-ish tick here. I'm not aggressive here. I would go in at 104, 105. I'd go in on the offer and want the stock to down tick to get
put that in, 104.
Okay, perfect. Cool. Next, one of those trades where I don't care if I really kind of get filled.
Yeah,
you know what I mean? I'm going to October instead of November. Let's put it on the offer. Let's see if we get filled. Baidu, sell expected move, put spread, $10 wide in November. Sarah, help me with that. Snoqualmie, Washington? Snoqualmie?
Sounds good to me.
Sure.
Do you have it, Beth? Do you have a better one?
No, that was great. You did a great job.
That'll last about a day.
You're doing amazing, sweetie.
I love this.
About a day.
I can see you.
I know.
About a day. Baidu, B-I-D-U, been on a little bit of a tear. It's down $3 today. Sell the expected move put spread, so they're bullish on here. What's your?
I just got filled on PayPal.
Oh, good. At your price, 104.
104. Your price.
Well, I mean,
this is a team game, all right. You don't have to. Gotta remember, you gotta,
You got to say now?
Yeah.
Thank you. It's not just the Tom show anymore?
Yeah.
It's the Bat show?
Yeah.
All right, I appreciate that.
The Bats.
Sell the expected move, put spread. Are you bullish in Baidu, I guess, is the first.
I don't know if I could get bullish these China stocks.
Yeah, I think these are the Baidu to me seems like a fringe player. Like when they start to move, the move is almost over, like kind of thing. Sarah, I like your conviction here, jumping on the move. It has had a little bit of a downtick from 140 to 133. Ivy rank is 45. Earnings are November 20th. So this is something I would do in November. What about an iron condor in here if you wanted to go a little bit more neutral, or we can abstain? It's completely.
Yeah, we could do an iron.
Markets.
I can't get long into it. I mean, the stock is up $60.
Right. Stock is down $3 today, so the better move for us than
What do you think? You want to do it at the expected move?
If you do it at the expected move, you're looking at just about a $20 expected move, so you go down to around the 110s.
Okay. You want to do the 110, 100? You want to do 10 points wide, or you want to go 15 points wide?
You could. I would almost.
Some of these markets stink. Look at
the 05 puts are 111, 174. Let's.
The wings are 30 points wide. 30 cents wide.
Yeah.
I mean, you're going to give up some.
A lot of call skew in here too, and a lot of wide markets. Good open interest though, so I don't mind with conviction. Sarah, you have conviction.
Yeah, I gotta say your pointer's not as big as mine. Do you want me to?
You're not the first person to point that out to me, son. Prove it.
I think we're gonna pass on Baidu.
We're gonna pass on Baidu.
Yeah, we'll take a look. If we get a little bit of a down move, continued down move, we'll get long it.
Next
one, please.
Next one, please. I could have lived my whole life without knowing that. Lulu, bullish for Jeff in Miami. Jade Lizard.
If we keep going at this rate, I don't know if I've got any job security left here. What do you think, Beth? Am I okay?
You're doing great.
Thank you.
You're doing great. It's going to be her classic line.
Yeah.
Thank you. From now on.
All right.
Lulu, they're bullish.
This is another stock that has been. There's not a positive spin on this one.
No, there isn't. They really have to put out some more of those leggings that you can see through before the stock upticks again. $173, IV rank of 21. It is up $1 today, so I think they put on this Jade Lizard. It is the type of trade I would put on if I was bullish. Jade Lizard, from our research, does better statistically than a naked put or put spread. So I would definitely go with this, combining that call spread.
Are they looking November? Yeah.
What do you think?
Yeah. So
earnings are in December-ish, so you're all good there.
What about if we just sell the puts? I mean,
statistically speaking, the
you're selling the $5 wide for $1.
If you want to do a put spread, you can do that instead of the naked.
No, I was thinking just the naked put.
What's that?
I was thinking just the naked put.
In October, which put?
Oh, you want to do October?
I'm sorry, in November. What put are you looking at?
The 160.
The 160.
30-ish delta. I mean, we're right there.
525, 550.
52-week low.
Okay.
I mean, I don't.
Okay, Mr. Aggressive. Let me just play devil's advocate.
You want to do the one standard deviation? We go to the 150s at 280.
That would be a better choice in my eyes if you're going to do just the naked put, or if you're going to do a Jade Lizard, I would do the 55, which gets you around $4 for the put, and you get $1 for the call spread. The 90.95 gives you no upside risk. So either one works for me. I prefer the 50 put, which gives you a better break even than the Jade Lizard.
I did the 50 put, 285.
50 put, 285, just banging them out. Okay, great.
It was marked 275, 290.
282 bid at 295.
You want me to show you my freaking orders?
No.
I started 288.
Nope. Take a look at the market from now on. The NASDAQ selling off a little bit here. When you're looking to sell puts, you got to have a little bit more focus on everything you're doing. What's our next stock that we have here? But I'll teach you. I know it's been a long time since you've been under my
No, that's it.
That's it. 1, 2, 3, 4, 5, 6 out of 10. As long as we
but this is with a caveat that we already have 6J. We already have Palantir. So we really are 8 of them.
Beth, can you fix that forward
Fix that one.
No.
There's no J7.
There's no such thing as J7, please. That's why. Please, can you fix that for us, please?
Right on top of that, guys.
Thank you. You're doing a great job, Beth. You're doing a great job. NVIDIA, Intel, ENPH, Tesla, Lulu, and PayPal. You can see all of those on the follow page. Even the S&P's up 20. NASDAQ up 2, Russell up 11, Dow up 220 and change. Volatility really hasn't moved, maybe upticked a little bit on this down move in the NASDAQ. Down 18 cents, bonds down 3, Bitcoin just over 110, but really going nowhere right now. We're going to take a quick.
Good. No, we've had some two-sided action today.
We've had some two-sided action. I think we've been kind of right on the market that wasn't going to kind of explode, although it did go a lot further, over 6,700. I didn't think we were going to get there, but you sold off nicely. Volatility has stayed relatively strong, which is another thing we said would going into the weekend. It would probably stay relatively strong. So
gold's a nutty.
I don't talk about gold anymore. Up $33, back over 38. I can't.
It's a little spooky. It gives you bad vibes.
It does give you a bad vibe. I can't stand Frankie gloating in the YouTube chat and stuff like that because he's a gold bug. So I don't want to mention it anymore. I have the mic, he doesn't. We'll take a quick 90-second break. We'll come back. We got more Tasty Live after this. What comes up next?
A market measure.
That's right, my son. We'll be back in 90 seconds with Tasty Live.
Sponsored by the CBOE.
Sponsored by the CBOE.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Nicky, we are back, son, and you know what that means? Time for a little bit more Tasty Live. That's right, with a market measure sponsored by the SIBO. Even the S&P's up 13, NASDAQ down 31, Russell up 10, and the Dow, the strongest of the group, remains to be the strongest of the group, $197 to the upside. Volatility down by 12 cents, mid-range for the day, and bonds down 5. You mentioned gold. I will say it again. It's over $3,800.
Yeah.
To 38.03, up 32.
Which is weird into this bond move. So you got the bonds reversing. Did they get in the 15 handle? Yeah, they were down in the 115 handle.
Mm-hmm.
Rates increasing, at least from they're around where they were pre-Powell.
Mm-hmm.
You would think that if rates are increasing, gold wouldn't be mooning.
You would think. Who would have thunk?
I know. As Dylan would say, don't think.
Don't think, just trade. That's true. He's
don't
right.
think.
And assume the position. Market measure sponsored by the SIBO, followed by your phone calls, 855-238-2789 or 855-BE-TASTY. And we also are going to be YouTube chat friendly too. So if you have
I see the love in the YouTube chat. Thank you.
If you want to put that in there, you have a question, you can ask Nick, and he will read that out too. But 855-238-2789 or 855-BE-TASTY, around 9:30, 9:35, we'll get to your phone calls. Nothing off limit. All questions welcomed. Market measure, sponsored by the SIBO.
Let's do it.
Ready?
Reversal risk, probability of a turnaround. So, strangles are prone to very large P&L swings throughout their duration, but how likely is it for a strangle P&L to flip after incurring a certain amount of loss? Do you notice that, like, a lot of strangle positions, they go from, $100 loser, $100 winner. I mean, that's a pretty normal move on positions.
Sure.
So let's determine the probability of a turnaround after reaching different loss thresholds for 45-day 16 delta SPY strangle. So we're looking at cookie cutter strangle. And the story that we're building here is like, what is the probability of a trade going red to green or green to red?
Yep.
Those sort of things here.
16 delta, another way of saying, no, not I love you. Another way of saying expected move. 16 delta.
Yes. Mm-hmm. So we're looking at the turnaround probability that the strangle P&L will become positive prior to 21 days after incurring a loss of X percent of the initial credit. So we'll be looking at, how many times a 50% loser of the credit turns around to be positive.
Yep.
And many other data points here. So next slide here, please. So just a couple of notes that we have here, an example of what we mean. So if a loss of 10% of the initial credits, that would mean if you sold this at $1, if you're losing 10 cents on that trade, so that trade is marked at $1.10, buy it back because you're short it. The probability of a turnaround for a 16 delta SPY strangle is roughly 79%, and we're going to look through the stats here too as well. Mm-hmm. This does not mean that these trades will necessarily be profitable 79% of the time, because a P&L sign may flip again before or after 21 days. So we're just looking at, a trade that goes red that might be a scratch or profitable at some point in the window before you roll. That's it's going to be a high percent of the time because we know that these trades, it's not uncommon for you to put on an iron condor, and one day later you're losing 5 or 10 cents on it, and then the next day it's a scratch or a winner. I mean, these things move. It's not like you put it on and then every day is you make $5 on the trade or whatever.
Very good.
All right, so the study that we're looking at, the next slide here, we're looking at SPY, the Qs, gold, Amazon, Apple, and Google, and we're looking at this from 2013 to 2025. We're looking at the 16 Delta short strangle, 45 days, pretty cookie cutter here, and then we're looking at it in the time frame prior to the 21-day management, so the 24, 25 days prior to rolling. So for each instrument, we're going to determine the probability that the strangle has a P&L less than 50% of the initial credit. So there's a 50% loss. This is if you sell it for $1, marked at $1.50, and then has a P&L turnaround after incurring the loss. So we're looking at the 50% losers and then just in general red trades going to green in that 24-day window.
Beautiful. See what happens with this study.
So when a strangle has a small negative P&L, so between 10% and 20% of the initial credit, the probability of the P&L flipping and becoming positive prior to 21 days is very high. It's upwards of 69%.
Which makes perfectly good sense because you're inside a standard deviation on this. So I would say 68% would have been my answer just doing a back of the envelope. And they're saying upwards of 69% because it's a standard deviation. Everything in math that we do here is really wrapped around that standard deviation probability. But
yeah, and assuming you have markets that go in both directions, one day you might be down 10 cents, one day you might be up 10 cents. Mm-hmm. It's very normal to see this.
Yep.
So the next slide here, so as the strangle loss becomes larger, the probability of a turnaround decreases. Very intuitive, right? As the position goes further against you, it's very harder for that trade to come back and be profitable. So the turnaround becomes unlikely with a probability under 50% if the contract loss exceeds roughly 50% of the initial credit. So, this is, we've looked at this a million times, right? This is why we roll positions and reduce your delta exposure, because once once you're wrong and very wrong on a trade,
it usually stays wrong.
It usually stays,
do anything
at least in the short term.
Yep.
And so, this is why we manage trades, and this is why we roll out at 20, 21 days. Like, this is intuitive. You should know that if something is a big loss, it's hard to get it to be a positive P&L. You're trying to manage that position, and that's what we do all day long.
Very good, very good. And again, this is why this is doing no mechanics. This is just looking at the pure straddle itself. And this is why if you wanted to, we would be going inverted here or buying back the straddle and go into new strikes that are out of the money. Kind of what you did in that trade BE.
Yeah, and BE is why you take, you get a $10 down move where this trade was a 150% loss, and now it's, a 20% loss. And I'm sitting here thinking, it might be time to go on this trade. Next slide, please. So we'll look at some of the stats here. So this is a 16 Delta, 45 days prior to 21 date till expiration. So this is looking at probability of having a loss bigger than 50%. And these numbers, they are obviously going to be greater for single name equities because you have more implied volatility on there. But it's exactly what I would expect to see.
Yeah, nothing surprising here, I don't think. They're all, because it's math. Maybe the SPY being a little bit less, I don't know. I would have thought it would have been over 30.
I guess the gold move, the gold one is probably, gold is telling you that low IV, selling strangles in low IV, because gold IV is the lowest.
Now I know why my gold positions never work.
That's probably it, is because you're selling premium in something that's got low implied volatility. So, strangles with more volatile, in more volatile underlyings tend to have greater profit potential, but also tend to have more volatile strangle P&Ls, and that's intuitive. There's higher volatility, you should expect bigger swings in both directions.
Good.
So next slide here. So looking at the 16 Delta strangle, 45 days, and then this is also prior to the 21 days. This is the probability of a turnaround after a loss larger than 50%. So more volatile underlyings also tend to have a lower probability of a P&L turnaround after incurring a loss greater than 50%. So this means that strangles that are prone to larger negative P&L swings are also less likely to recover. Loss tolerance should be more conservative. This is exactly why we manage positions. Like when something goes very far against you, it usually doesn't, you're trying to get out for a scratch or a lesser loss.
Exactly.
That's the whole point. Like the numbers we look at right now when we're placing the trade, they are what they are, and we're playing for those numbers to play out. If they don't play out and something goes very much against you, you've got to manage your trade. This is what this study is telling you. Just manage the position and try and get back, and not count.
Do something.
Do something. Don't
just sit there.
Don't just sit there and
do something. Do something.
Let's get to some takeaways, and then we'll get to the phone calls here. So a 16 delta strangle with a small negative P&L has a high chance of coming back to or if it has a small loss, has a high chance of coming back to being a scratch or positive. This is why we don't overmanage positions. We're not constantly, adjusting positions because we're losing on the trade a small amount. So, however, if the losses exceed 50% of the initial credit, the recovery chance drops below 50%.
But that doesn't mean on the second little bullet point here that if you had a 50% initial loss, $3, you got a $1.50 loss in that if you stay in it and do nothing, that it doesn't become like a $1 loss or a 50-cent loss or a quarter loss. It just means that it's a loss. It doesn't mean it's going to be that much of a loss. It could be even more, but it could be less also. That's why we reinforce rolling down the untested side.
Yeah, because you don't know if that 50% loss becomes a 10 or 20% loss, and you rolled the untested side, you're probably a scratch on that trade.
Yes.
Instead of losing the 20%, that's what we're playing for here. So strangles on more volatile underlyings offer a greater profit potential, but are prone to larger, less recoverable negative P&L swings, warranting conservative loss tolerance. So, overall, the big losers, you got to manage those positions. The small losers, relax a little bit and let the probabilities play out, at least in that window prior to the 21 days.
Very good. Very good. Good job out of you. Good job out of the research team. Not so good job out of the market, but kind of more of what at least I expected. Even the S&Ps are up 2. The NASDAQ is down 84. Russell up 4. Volatility completely unchanged. As a matter of fact, if you look at the ES and you look at the 0-day, well, it just went under 28 now. It was just 28 a moment ago while Nick was talking. We had about a $28 or $29 expected move this morning prior to putting on this trade. That's why I said maybe wait a little bit longer, 9 or 9:30. Now it's 9:30. Maybe get a little bit of contraction and volatility now. Volatility is actually up 2 cents for a quick second here. Bitcoin back under 110. I don't think we're out of the woods here yet. The overall market 195. Although we did go a lot higher than I thought we'd go to 6,703 on the E-mini S&Ps. Kind of put a little egg on my face. Oil up 99 cents. Gold up 42. If you thought it was ominous before, it's more.
Yeah.
Phone lines are open. We would love
volatility too.
Volatility upticking too.
We've reversed the move up 30 ticks.
That's correct.
30 cents from where we were this morning. Back to the
855-238-2789 or 855-BE-TASTY. That's the phone number to call. Give us a buzz. We'll have just about a half an hour to go to your phone calls. Rob and Maria, I know I see you on there. We'll get to you first. I appreciate it. But I need more. We need 4 or 5 more calls. So please give us a buzz.
I'll be looking at the YouTube chat too.
YouTube channel.
Because this team loves the YouTube chat, loves people in the chat, loves all our customers and all of our people. We love you all.
That's right. You are sponge-worthy to us. Thank you. We're going to take a quick 90-second break and come back. We got more Tasty Live after this, Nick, with phone calls. Nick and Bat back next. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
I found very early on that I was comfortable with having risk, and I liked the benefit of it. I mean, I found trading in a unique way. I loved seeing Wall Street in New York. When I was a young kid, I would drive down to the financial district and see all those guys in suits, very powerful looking. So to me, that was a way of having some sort of social status where I bettered myself. Trading was just a way out of Brooklyn. I go anywhere there's action. Really anything that has high implied volatility. And the IVX 5-day change, that's the volatility of the product's 5-day change, is green. And I show that on my Option Trades Today podcast. You can definitely get the thoughts on why I'm making this trade. Am I leaning a little bit longer? Am I leaning a little bit shorter? All the things that we talk about on the show day in and day out. It's not magic, it's just math. By the nature of the strategies I pick, I'm going to have a high probability of success. And I think my expertise comes from managing those trades, when to take them off, how to maximize the profit on them. I think that's what sets me apart from the novice trader.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough just holding long equity. There's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found Tasty Live from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on Tasty Live, they can really change their financial situation for the better. Consistently, not, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with Tasty Live, I was able to do that.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols.
See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Damn! Wow. Long live the trader nerd!
Man, you're a turd!
Trade junkie!
Hey, it's fun, see? Tom and Tony in the morning.
Tom and Tony in the morning.
Oh.
Beth, get your act together, girl.
Won't happen again.
Thank you, thank you.
Nikki, we are back, my son.
Oh.
And we are going to phone calls 855-238. I'm going to do it with my bad hand because it's actually hurt a little bit, so I got to kind of shake it out a little bit. Shake it out. 855-238-2789 or 855-BE-TASTY. That's the phone number to call. We would love to hear from you. Got a couple of lines open. We'll rapid fire go through these as many as we can. We're going to go to Daytona Beach, one of my favorites, Rob and Maria. Rob and Maria, thank you for your support. How are you guys?
Hey, Tony and Nick. Nice to hear you. Nice to see you. I love the new format.
Thank you. Thank you. I mean, this is a treat. We get you instead of that other guy.
Oh, he's here. He's just foaming at the mouth. Can't wait to talk.
I figured that. It's hard to keep him down. Go ahead, Rob.
Yeah.
I'll notice one thing right off the bat we noticed was that you show the trades now, you show the platform, which Maria called to my attention saying that is fantastic.
Yeah, that helps me a lot.
Good.
We're gonna try and show a lot more stuff. We're gonna use the web-based platform as well occasionally, and we'll incorporate the mobile and Tasty Crypto app and all the good stuff that we have. So we're gonna try and show that because I know my way around a little bit more than
that's true.
The beret man. So we're gonna because there's a lot of stuff that a lot of people haven't seen that I get emails about that are like, I didn't even know about the market snapshot thing.
Yeah, I didn't know about it.
Right.
Yeah.
So
well, for people that are brand new, we didn't know what a put or a call was in February of 2020, and we just watched Nick and Mike every day. And now Maria's using AI every day. We're doing over 200 trades a day using robots and AI. And we've had 18 quarters of profitability just following the Tasty rules. So we can't thank enough. But I got two quick questions.
And Rob, let me say, I know because we've spoken and talked and emailed and corresponded. You had issues in between there too, right? I mean, there were days there when and week stretches where it didn't work out, right? I mean, it hasn't always been net positive. That's what you want to be, but you had problems in between there too, right?
Well, I never lost more than $742,000 in one day.
So there you go. See?
It's all relative, you know. For us Johnnies, that's like $742.
There you go.
You know, like it's all.
And I've done that.
Yeah, it's okay. It's a learning experience.
Well, I'm very, very cheap. All right, two questions.
He lost 50% one time, and the house.
I did. I lost 50% and the house. You're 100%. 72% and the house.
And those were separate. Okay, those don't count in the total. That's why I say 50% and the house.
That is correct. That is correct. He's right about that. So be careful,
All
right?
right, well, we're honored to be the first caller in Tasty 2.0, but we have two quick questions and then we'll go.
Sure.
Okay.
The first question is, where is the oddest place that you ever traded? And have you ever traded in the nude?
I was afraid when you said the oddest place. I was like, oh God, this is where we're gonna go there.
Bathroom, and yes, I was nude. Bathroom.
Yeah. I've done some things in the shower.
Well, the reason I
How about you, Rob?
Yeah. Where's the?
And I don't want to hear Maria. I'll just assume that she was there.
Yes. First of all, I'm sitting here nude.
Yeah.
No, I'm kidding.
Do increase the size of your pointer as well when you trade.
Speaking of which, right after Maria and I were in paradilecto, as the French say, we both reached for our phones and went directly to Tasty, and we had a good laugh about it.
Good. I like that.
And Maria, where would you say the oddest place we've traded is? The beach. That's not that odd.
Yeah, nothing odd for me.
No, you're not that odd.
No.
You people are too normal.
Well,
yeah.
Yeah, I suppose.
I guess that's the Italian part of me, being normal.
That's the first thing she said. The first thing she said is, "Oh, good, more Italians."
This is true.
I know.
It's
you're
All right,
stuck
you guys,
with us.
Thank you very much.
Thank you,
I'll
man.
let you
Really
get to other
appreciate it.
callers.
Yeah,
Thank you,
my
Rob.
friend. Thank you, Maria. Really appreciate
Rob
hearing
and
from
Maria,
you.
thank you.
Cocoa Beach.
Shout out to Magic.
Marty. Shout out to Marty.
Shout out to Marty on the trade desk.
Yeah,
Yes.
he'll tell you some naughty stories if you need some.
Yeah, Marty can give you some
I'll
naughty
tell
stories.
you, Marty has really saved our bacon a lot. He saved us a ton of money, but I'll let you go.
Thank you, man. Appreciate it.
The best, guys. Thank you.
Yep. Cocoa Beach, Mark the Trainer. What's up, brother?
Oh my God!
Are you calling to see how your son is? He's fine. I just saw him.
Oh.
All right. Now, I was, Tony, you're lucky you get to see your son every day. You think my son would come down to the beach to see his father? Oh my God! I was thinking about taking Scott's job. So
that's
maybe
a
I could
sign,
work
Mark.
with
It's
him,
a sign.
I was thinking about taking Scott's job so I could see my son maybe once in a while.
Maybe.
But I don't know. hey, Tony, is your son within striking distance?
I could throw something at him.
Yeah, there's a couple bets in the office of when this gets contentious.
Just in case. I want, keep me, use the good hand, okay?
I will.
Yeah.
I don't want to hurt.
Hey, Nikki, good luck with everything. You're solid, man. You're a solid guy. I spoke to you a couple times, and
Thank you, Mark.
Big shoes to fill, but
we got
this. Bite down hard.
Yep.
Bite down hard. Do the opposite of whatever your father says. And
you know what? That's a problem. I've got a lot of emails from people saying, "How am I going to follow? The opposite."
Where's my
trades,
contrarian
where
indicator?
This is really cutting into my income. This is what I call my income trades. Doing the opposite of Tom. So, but thank you, Mark. Appreciate
good luck
it,
with
brother.
everything, and like I said, Nikki, you're going to do great.
Thank you.
Thank you, Mark.
Be well, guys.
Thank you, brother. You
Appreciate
too.
you, man.
You too.
Thank
Be
you.
well. Be well. I'll talk to the kid. We're gonna go to Jersey. I got Joe Mama in Jersey. What's up?
Yeah, I wonder who this is.
Hey, Mama, I know why you're calling.
Why?
You wanted a jar of Nikki's.
I didn't have it ready.
Jardiniere. You wanted a jar. Truth be told, tell me if I'm lying, Nick. You gave me 2 jars.
You told me you're going to send it to me. I sent you my address. I'm waiting for it to show up.
I had my wife send it to you today, so it's in the mail.
Oh.
Unlike the check, Joe, it's in the mail. It's really coming this time, okay? So be on the lookout. The little brown box.
There we go.
So those 3 previous callers are very tough to follow.
Yes. But you got this.
I love when people talk their book.
Sure.
And I also know why Quentin doesn't visit his father, because I met his mother in New York.
No, I am not going. I met his mom
you
too.
do that?
No, she's very nice.
That's what I mean. She's very, very nice. That's exactly what I meant.
So he stayed. I got you.
That's right. He doesn't go to Florida.
Yep. All right. Okay. I'm not gonna.
Nikki, welcome to the show.
Thank you.
But tuna.
I've been here 10 years, Joe.
Oh, right. Like I haven't known you that long.
I know.
I think I knew you before you were on the show.
Of course.
Anyway, how'd you get the tuna is one thing I would like to know. But Bill Parcells' name was the tuna.
His nickname, yeah.
The nickname,
His nickname was the tuna.
Mm-hmm.
And I texted your dad the other day about what Bill Parcells' real name was. So for a 10-point bonus, do you know what Bill Parcells' real name was?
I don't.
It's a weird one. You'd never get it.
What is it? You got to.
I'll let you do it.
Yeah.
Dwayne Charles.
Dwayne.
I had no idea.
Dwayne Charles.
That's a weird.
I don't know how they got Bill out of that, but I figured,
Yeah.
That's a weird one.
Yeah, it is really weird.
Yeah.
I got tuna because, as the token Italian person in my town, right around the time of The Sopranos starting, it was, like a Sopranos type name. So it was Nicky the Tuna. It had a ring to it, sleeping with the fishes.
I see.
Had nothing to do with being like a can of tuna. All right?
Yeah, no. It was just
when we were kids.
Yeah, no. It wasn't a derogatory one. It wasn't.
Well, you looked really good with the tefillin on. You looked really good with the tefillin on the other day in the picture.
Did you like that? It was the first one since Birthright. So I'm back in the good graces, and and God gave me the seat now.
Yeah.
The Hasidics in my town ask me to put the tefillin on every day, and I try to tell them I'm Jewish, but they tell me I'm not because my mother wasn't. So.
See, I got that though.
I don't believe that, man. You could be whatever you want to be, man.
Thank you. I always say to them, how did Sammy Davis become a Jew?
I'm not going to touch that, Joe. Thank you for your call. I really appreciate it. Try to keep it.
All right. Well, new era. I love you all. You know that. Peace and love. Peace and love. Peace and love.
New Year. Happy New Year, Joe.
Yeah. Happy New Year, Joe.
Lashana Tova.
Lashana Tova. Beautiful.
We're going to go
Ciao, Maine.
Ciao. We're going to go to
Ciao, Maine.
Ciao. We're going to go to Miami. We got Carlos. Carlos in Miami. Carlos, what's up?
Good morning, gentlemen. A new day, new dawn, and I can't be excited. I'm more excited for you guys.
Thank you.
And it's a new life for me.
Yeah. I started following Tasty in 2015. Tom and Tony have been a part of my routine morning for 10 years. And I can't tell you how much I've enjoyed learning and laughing at the same time. And I appreciate you guys very, very much for being that important to my financial well-being.
Thank you, man.
Good luck, guys.
Thank you, Carlos. Really appreciate it.
Thank you, Carlos.
And I have to
appreciate y'all.
Thank you. Appreciate you, Carlos.
Yeah. Carlos is an awesome man.
Awesome. And I got to give a shout out to everybody who sent me emails and on Twitter. All kidding aside, I mean, Tom started this, and it's a great legacy. His mug is all over every wall that we have here, behind me, everywhere else. I mean, it's just been great, and the heartfelt, warm affection you have for what he built, the laughs you guys talked about, and as much as learning. Again, we're going to piggyback on that. Keep it the same format. It was just, but great. Thank you so much for all that stuff. But in the words of Tom, everybody's replaceable. And we're just going to keep moving on. So thank you, Carlos.
Take care, guys. Have a nice weekend. Be well.
Appreciate it.
Thank you, Carlos.
Man. Appreciate it.
Bye-bye.
Got a couple more minutes here. I do see Harrisburg, Pennsylvania. Get to you 1 second. 855-238-2789 or 855-BE-TASTY. A couple calls want to call in. We'll get to you guys real quick. Harrisburg, Pennsylvania. Steve, what's up?
Hey, thanks for taking my call. Fairly new listener.
Cool.
Got a hopefully not too complicated
I'll do my best.
Margin question. If you have an IRA that works limited margin account, could you essentially sell strangles in that account?
You can sell at Tasty Trade, not at other brokerage firms because their trustee doesn't allow it. But at Tasty Trade, you can sell naked calls. That's the part. You can always sell a naked put in an IRA account. That's allowed everywhere. But at Tasty Trade, you can sell naked calls or strangles, call ratio spreads, or any other kind of undefined risk trade in an IRA account. Now, it will use more buying power. It will use the same amount of buying power as a naked put. So in an IRA account, even though you can do it, and on smaller price stocks, it would be more advantageous than on larger price stocks. But if you are in that medium type stock where it's like $200, $100 to $200, you're still going to want to probably I would still want to define my risk in an IRA account because it would use significantly less buying power. I would want to use the same type of buying power that a non-IRA account would use. That's how wide I would go. So if it's $5,000, I would probably go, $30, $40, $50 wide on my iron condor synthetic strangle. But on lower price stocks, you most certainly can, and you can do it in higher price stocks if you have one of those buku size IRA accounts. Did that answer your question, Steve?
Yeah, thanks a lot, Tony. Have a great weekend.
Awesome. Thank you, man. Really do appreciate it. Going to go to Clearwater, Florida. Man, Florida representing Richard G. Richard G, what's up?
Hey, good morning. How are you?
Good, Richard. Thank you so much for calling in. Appreciate your phone call.
You're welcome. Hey, I'm calling. I put on a short call vertical spread. The symbol is SITM.
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 SI time?
SI time? Yeah, I guess. Go ahead. What'd you do in here?
SI
Has
time.
earnings November 5th. Did you do something in November?
No. I did the October 17th expiration.
Okay. What'd you do?
I sold a 340, 350 call vertical.
Okay, so you were bearish. You were bearish on the stock. The stock has gone parabolic since basically.
I see you there. You're the only. Volume.
Yeah, there's not a lot of. Did you do this today?
I just did it this morning, and
No,
the reason being
you're 240, 340.
Oh, 340. Oh, I'm so sorry. I'm so sorry.
Yeah,
Sorry, 340, 350. Oh, okay, go ahead. Yeah, now the money call spread. Go
You
ahead.
got open interest, but if you flip the volume, I see them.
Yep, go ahead.
Yeah,
I'm sorry, sir.
Yeah, I sold that. Jim Cramer had these guys on his show a couple nights ago.
Mm-hmm.
And I think it's a good stock, but this metric here just looked good to me.
Mm-hmm.
So
what'd you get filled at?
$1.
So did he sell it or did he buy it?
Sold it.
Sold it.
So you're bearish on the stock, correct?
I'm bearish on this with this trade, yes.
Right. Okay. Just want to make sure we're getting the direction right. Nick was pointing out that you are all the volume today in this stock. So the options don't trade that much.
Yeah.
So that would, and the markets are a little wide, right? I mean, 225, 340, $1.40, 320. We don't like to trade stocks where there's no open interest, really no volume on the day, and you don't have tight liquid markets. That being said, I love that you went with a vertical spread. So if I was going to do this stock, I would do it as a vertical spread too. I hope that you placed the order like higher than the mid price and walked it down, meaning maybe at $1.20 and then go to $1.15, $1.10, $1.08, $1.05, and then to get filled because it costs you nothing to cancel and replace the order. So you might as well take a shot at maybe getting a couple of pennies more. You probably got a good fill here, mid-price fill on it.
Yeah, at a 16 delta, like it's a 1 standard deviation. So you're probably looking, these markets are very wide, so you probably are getting kind of the low end of the
Sure.
total.
If there's nobody else playing, you're not going to get the optimal fill in here, but you're going to get a fill, a couple of pennies around mid-price.
I don't hate the trade. I would say that just be understanding that this spread is going to widen out. Like you're going to see funky P&L marks on this position because if you get if your long option moves, $1 on the offer, it's going to skew your whole P&L, and so you're gonna see this trade go from $50 winner to a $1 loser.
Even though it's not a $1 loser, it might just be a mark.
You might see it like within an hour of each other, and you're gonna it's gonna be a little bit funky, and that's just liquidity, and that's and so
I'm gonna piggyback a little bit more of what Nick's saying in here. I don't think you'll ever get a chance to manage this spread one way or the other.
I would put an order in. I would put a GTC order to close this at 50 cents or 75 cents.
And if you're looking to get the full credit, I would be, or close to the full credit, you're going to be in there for the full ride of 21 days. Yeah. So I have no problem with what you did. I don't like the markets in here, and I would prefer you stick to more liquid products in the future. That is the only caveat I would say. Richard did that.
Yes, fair enough, and I follow everything you said.
Awesome.
I can tell you, I already put the GTC out at the 50 cents 5 minutes after I made the trade.
Yeah.
Perfect.
And I think, in something that's not very liquid like this, where you're kind of taking
you have to.
Yeah, you're taking a directional shot. It's kind of like testing the waters here. I think that's the perfect move. I think that's exactly.
I appreciate it. Thank you much.
You got it, man. Good job out of you. What are we doing here, Nick? At the end of the end of our day, our first day. Thank you so much for making it wonderful for me. I hope everybody out there enjoyed it too. Even the S&Ps are up $5. Nasdaq's down 44. The Dow's been the strongest of the group, although it's a lot weaker than it has been. It was up over $300 at one point. It's up 100 right now. Russell's up 230. To point out, we had about about an hour move since the last time I quoted the 0-day. They were around 28. They're under 25. So you get a little bit of volatility contraction, even though VIX/VX is still trading 18.19, up 14 cents. Is the day over?
Oh, that's a good question. I think we're going to have more chop fest back and forth. Volatility is coming in a little bit, but with volatility back in an 18 handle,
it's bid for the weekend. It has to stay bid. I don't think volatility closes under $18 today. I would think you're going to have to get a move of 50 handles or more on the E-mini S&Ps.
Yeah, but it's not going to be the trend day where you just go up 20 points and then just chop at that.
I would be very surprised. AppLovin up $15, Boeing up $7, and on the other side of the coin, you got Costco down 20, Carvana, CVNA down $7 or $8, OKLO, which we talked about a little bit, down $6 or $7, Meta down $6. We'll take a quick 90-second break. Thank you. So I'm on my way to Grand Rapids, Michigan. So I've got a hockey tournament to go to. If you see me out there, tap on the shoulder. I'll buy you a drink. We'll take a quick 90-second break. We'll come back. We got more Tasty Live after this. Liz and Jenny next.
Jenny.
Peace.
Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Christy Ross, St. Norbert College, Wisconsin. Number 85, because I like trades that have an 85% probability of success.
Lindsay Grata, University of Illinois at Chicago. Number 14, because that's how many times Tom asked me, where's my lunch?
Tom Sosnoff, State University of New York, Albany. Number 0, really? You gave me 0 because I like being delta neutral?
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
Hi, my name is Liz Deerking. The beautiful brunette next to me is... What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on. No, you're wrong. Hold on. She's wrong. I'm right.
High school party, high school condo.
Yeah, because it wasn't in school. I had friends at my high school who were mutual friends of Liz, and so we were all at the same party. And then parties for the rest of our lives. The same thing with college. She went to a different college. I went to a different college. But we both ended up at the CBOE together. Yep.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Hello, everybody, and welcome to the Friday edition of the Liz and Jenny Show. My name is Liz Deerking, that pink lady. Oh, Pinky Tuscadero for the older viewers. John, do you remember this? Pinky Tuscadero? What's that from, Jenny?
Greece, Liz, is from Greece.
No, it is not from Greece. Pinky Tuscadero.
Man. What's it from?
Happy Days.
Oh. Well, you look good, looking good in pink. I want to give a huge shout out to the Bats, Tony and Nikki. They did a great job, big shoes to fill, and they did a wonderful job. And I don't know if the newer viewers know this, but like Nikki has been with Tasty forever, and he started at the ground floor. So he's done everything. He's done customer service, answering phones, working on the website, working on the learn page. Like he's run the gamut of jobs over at Tasty. And so I think that's good. Someone who's like, he's very informed of what's been going on, and he's very knowledgeable. So I think he did a wonderful job filling in.
No, and I think that's good because he does have a vast knowledge of, the beginning to the end of this, of Tasty. Yeah. Tasty as a whole. He was just Tasty Live, then Tasty Trade Support, Tasty everything. Like he's done it all. So I'm glad you brought that up. He's a very, very qualified human. So we're happy to have him. But yes.
Yeah, they did a great job. The show was entertaining and informative. Everything you would hope it would be. Wonderful job. Shout out to the boys.
Everything you've ever wanted and more. I agree. That's so fun. Well, we got a jam-packed show today because we have Kai's market measure recap. We have something that we're going to go over. We're going to try to kind of cross-reference some of the shows. So Jenny was watching. I did not see confirm and send, but she saw a confirm and send question that she saw. They answered it correctly, but we're going to take a different spin, right? We're just going to take it. And
they had their own take on it. I think oftentimes viewers have questions and the boys have their own take on it, and we might have a slightly different take. So it wasn't right or wrong.
No, they didn't answer wrong. I don't even know if this is just such an odd take on it. We just went far left. How about that? We went a totally different direction with it because something that I don't know that they would even be doing or even think about. So
right, yeah, something they wouldn't even think about.
We're adding to it, not subtracting from it, right?
Right. Right.
So yeah, I just wanted to put that out there. We also have, it's 21 days till expiration.
I know it's 21 days till expiration. It's interesting. We could take a look at some positions. I definitely want to look at our SPY position, and we could decide, do we want to roll it, hold it, close it. This is the day you play that game, and there might be some things we leave in OCC. It depends on what kind of premium we get if we're rolling to NOV.
Well, we understand the rules of roll at 21 days till expiration. We do. But I think those rules are fast and furious with naked options. Those are easy with naked options. That's an easy decision. Other than when we have a little bit more complex trades on, it's not as clear and dry. And sometimes, Jenny, we do this and we give ourselves a certified badass card, and the rules are, there are no rules. We'll see what we do on each of these.
Again, all these mechanics are a guide. They're a guide. So if the research says roll at 21 days, that's a guide that's not telling everyone out there, you have to roll your trades at 21 days.
You do it now. No, it's not us. Okay.
But I will say from back testing and looking at results in SPX or SPY or IWM or the ETFs, most results are best when you roll at 21 days. From what I've seen.
But from your perspective, I just want to change this because I know you've done some back testing. But when you say roll, you mean close and reestablish.
Yeah,
close and put on something else. You're not saying roll from strike to strike to strike, because those are two totally different things.
It's close at 21
and reestablish. Yes, close at 21 days till expiration. Jenny, do you mind if we do? My new friend Matthew is watching today. Hi, Matthew. We were emailing back and forth about natural gas. Do you mind if we pop in real quick? Let's pop in the platform. So Matthew was talking about natural gas. He's trading natural gas. He's doing a 5 to 7 delta strangle each month. And he asked if that was a safe trade. And I said, nothing in natural gas is safe. I just want to put that out there. And nothing we do is a trade recommendation. But I was telling him, he wanted to know what I do in my account. And we've done it a bunch of times. I'm not going to spend too much time on it, but I want to show how I trade it typically in my account, because I'm not afraid of a one lot naked option. I never have more than one. Okay. I want that to be very clear, because this is again,
it all depends on account size, right? It all depends on account size. As far as
and risk parameters. Even if you have a big account, this might be too scary for you. Natural gas can move, has legs, and I've been burned, but I've had rags to riches in natural gas, if that's fair enough.
I kind of think if someone asked us, Liz, what size account do you need for naked options in natural gas? I would say at least 100,000. That's my opinion. I don't know what you think.
Oh, I would go. I mean, I was going to go less. I would say at least 50, but you want to, the bigger the better, because even though it says $2, it's not $2. This is not $2. Okay, I'm just going to go quickly. We've done this multiple times, but I said I ratio things off. So I'm just going to grab an example here. I would buy something at the expected move, sell 2 that are beneath it. So this will have a naked component on it. You see what I'm saying? Right. I'm collecting $210 on this. So this would be one of my starting trades. I would send this through, have this. It is holding up, $1,400 here. I would immediately then go in and put an order to buy the 255, taking all risk off the table for about 0.010. So I'm locking in
$100, locking in $100 profit. And I would leave on that butterfly.
And then I leave it. And if you'll notice, if you get a pop up in natural gas, that will fill. Then, so this is why I was saying, I think he was confused when I have a lot of positions. Hypothetically speaking, time passes, I wind up buying this and I have no risk and I've locked in $100. Then I will take and put another ratio spread on top of it, meaning that if natural gas decides to go down, I'm protected to the downside by my butterfly.
Right. And so when you say on top of it, you don't mean same strikes, you're shifting on the higher strikes, strikes.
So then if hypothetically speaking, I have this butterflied off, I might take and then do here, I might do the 290, 2.8, like 2.9, 2.8 ratio spread, and then immediately put it in order for the 2.7. So that when you look at it, my valleys in natural gas will go peak, 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 but always locking in a profit. That's the ultimate goal. It doesn't always happen that way. Sometimes I've had the ratio spread where I never, ever, ever, when natural gas goes straight down, and then I'm hoping for it to pin at this area, or I'm long it at, 255. I just wanted to keep that. Want to briefly walk through that. I know we've done it multiple times, but it is so hard to write that out, Jenny.
And here's a question for you. Here's a question for you, because with naked options, we usually roll before expiration with naked options. If there's a ratio spread that you never got to butterfly off and natural gas is down into the realm of that ratio spread, so you've just got a naked component in natural gas, will you let that go till the expiration, or will you roll that out?
I have always let natural gas go till expiration. It's a different animal for me because it is a different underlying. So let's look at this. When I say it's a different underlying, it's a different price. That's another reason why I don't roll these. So this 3.173 is your 32-day. 3.814 is your 59-day. So it is a different animal for me. I don't keep that same mechanics that I do with everything else. So we kind of say those are the rules, but those are the rules, to your point, in an ETF or an SPY or an IWM, where you're going to roll at 21 days till expiration.
In futures, it's harder to roll in the futures because you're rolling to a different price. Speaking of different, let's take a look at ZB. I wanted to get into ZB if it were low enough. Where are we?
116. That's not bad.
That's not bad.
I don't mind it in the 116 handle.
Yeah. Do you want to either sell a put spread, or I know there's only an 8 rank, but and I know when Tom was on, he was selling puts in ZB, and someone said, why are you selling puts with the rank of 8? But what's the alternative? Just buying it? I don't mind selling a put spread.
Well, and I think that's fair. These rules are, if you want to sell premium, do it above whatever. But are you going to go out and buy a ZB? No, I'd rather give myself room to be wrong, but understand it.
Yeah.
So if you want to sell a put spread in ZB, we don't mind the 116 level. What if I did 116.15? Yeah, not bad. Or we can go 15.14.
15.14, you're getting $281. It's not bad.
That's not bad. Look at how much you get for this. It's almost a chicken.
Yeah, right. You're getting 406, risking 593. That's not bad.
Not bad.
Hey, do it.
So the 116 level is kind of both of our levels of, okay, if it stays above 116, we get to keep all the profit. Now, my question to you, Jenny Andrews, because I like to call you that, would you like to stay in the 28-day or would you like to go to the 56-day?
I kind of would rather stay in the 28-day.
Me too. I just wanted to make sure I'm shipping it.
All right.
Okay, so that's shipped. We'll let it work. We'll let that work. There's our natural gas. Look at Intel. Your little baby Intel up again.
I know.
We did not get the ratchet off yesterday. We can take a look at it.
Okay, so let's look at the ratchet again.
I will be proactively doing this. So activity, I don't know why we're in Kroger. That's weird.
Yeah, that is weird.
Oh, because we have a Kroger position right here.
Oh, maybe you accidentally clicked on it.
I was like, why does it say Kroger? Okay, so
did you just push something out to the follow page?
I did.
Okay. Yeah, I'm staying on top of my job, Liz. Staying on top of my job.
If not, I'm going to hit you with a ruler with your hands if you don't get it out there quick, because we want to be proactively getting our trades out. So the zebra in this is a 1-for-1 stock replacement. We talked through this yesterday. I believe we tried to ratchet it up yesterday. So if you take a look at this position, we are up approximately $500 from when we put it on, and we should be, because our short call is the 30. We know it's trading 30 when we put it on, and Intel is trading 35, so we should be wrapped around $500.
So I think that's a good lesson how the zebra works. Like, it works perfectly. We put this on when Intel was 30. It's 35. If we bought 100 shares of stock, we'd be up $500. The zebra is up 492. It works. It makes money 1-for-1, just like 100 shares of stock. A 2-by-1 zebra.
2-by-1, right. Mm-hmm. So in order to ratchet this, which I don't know if we need to or not, I'm just going to take a look at it. You close one and reestablish the other, and reestablish the one with the existing strike prices. I just want to see, we paid a total of $448 for this, okay?
I would think we should be able to get close to our debit back.
We might be able to. So you're going to go with a 50 delta.
Yeah, sell a 50 delta, buy 270. So if you sell that 35 and buy 2 of the 32s, we're giving a little bit of extrinsic value up, but...
Do you find it odd that we're not getting that much for the ratchet?
Like, I don't know why this usually we get about the profit we have. I don't understand.
Give or take, right? Give or take. It's close-ish, close adjacent.
Well, this is not. Look at, like, what is the skew in Intel? It's trading 35. The 30 puts $1.19. And the 40 call is 220. Look at that call skew.
It's call skew in its finest, kid. Like that's why we're not getting it. So we could take $2.70, $2.75 in risk off the table because that's the credit that we will be receiving. I say we leave it.
And I kind of think we leave it too.
Because usually you will get for the ratchet, whatever your profit is, you can take that profit kind of off the risk or wrapped around. I think maybe a little bit less.
Or I don't know what to think about Intel. Look at that call skew. So again, 30 puts $1.20 and the 40 calls $2.25.
Yeah.
I love it. I love that the world thinks Intel's going up.
The world and the calls think that Intel is going up. Look at these. I mean, it's not that much volume, but this is open interest. I can take a look at volume, but up in the 42, 43, 45 level, you've got thousands of open interest.
On the calls.
Yeah.
Yeah.
I mean, I shouldn't say that. You got a lot on the puts too. So
11,000 of the 40 calls.
Yeah. That's what I'm saying. That's more than I would think because that's high for Intel. I mean, Intel
5,000 at 45, 3,000 at 46.
Yeah, I'm just going to change this to volume and I want to see what's trading. So yeah, most of this, look at this.
Just leave our zebra. Let's just keep what we have. Like I'm long Intel, you're long Intel. Let's just keep our long Intel.
Yeah. All in favor? Okay.
So we're just leaving our zebra. We're long 100 shares of Intel. Do we want to sell any premium around it? Do we want to sell a strangle around it? I don't know.
No. I would do, you know what I would do here, Jenny? Let me float an idea by you. Stock, right? Basically we have stock, correct? Can we all agree with that? We have Intel stock. Do you know what I might do around it? A jade lizard. So that if Intel does skyrocket or rise like a phoenix from the ashes, we still, if by some grace of God, Intel's trading at 50, we don't lose on the upside.
Now, are we running through our Intel earnings?
Yes, ma'am.
So look at a jade lizard in October.
Okay.
Just because.
So let's see. I want to make sure we're getting enough for the call spread. With call skew, sometimes you don't.
Oh yeah, with call skew, you don't. Let's just leave our zebra.
I mean, it's not bad. It's a little extra premium. But no, Intel's got enough of our time. We want you to rise like a phoenix from the ashes. I'm going to genie blink and make sure Intel's going to 50. Okay.
We'll leave it. We'll leave it. Because I know we already had October puts that we took off. So we'll just leave it as is.
Take a look at Meta, 21 days till expiration. We have 50%. Look at this. I'm going to get out of this right now.
Well, yeah, as far as like 21 DTE, this is a very easy one.
And you know what? You've always said this, and I'm glad we can see it in action. You've always said it's close to 21 DTE when you get to close to 50%.
If you're putting it on around 45 days till expiration, like if you put it on at 30 days till expiration, at 21 days, you're not going to have 50%. But if you put it on around 45 days till expiration, you usually have about 50% at 21 DTE. So I want to look at
what I'm trying to quote that commercial. If you follow mechanics, you stay in the game. Isn't that it?
That one is the funniest one with Pete and Anthony.
I know. If you follow mechanics, you stay in the game.
They are so funny in that.
I know. Okay.
All right, Exxon too. So Exxon was a trade we did on Wednesday.
I'm gonna flip these upside down so we can look at it.
It was a trade we did on Wednesday. It was from What's Your Assumption? And we did a zebra, and we actually shared this trade on Twitter. This was the trade we put, like, trade idea, here's the trade, posted it on Twitter.
And this is a zebra. This was from What's Your Assumption?
And I just want to look at, because we saw how in Intel we couldn't get our P&L in the ratchet. But so let's look at Exxon to see if we could get close to that.
We're gonna go through all the facts right now. So ExxonMobil was trading around 115 when we put it on. We know that because that's where our short strike is. Exxon is up $2. We're up about $2. It's working according to plan. The zebra is zebraing. It's doing the right job. So we paid $6.90 for it. We should be able to get. I'm gonna guess if we ratchet it up, we should be able to get about
160.
Yeah, 160. That's what I was gonna say. 160 in credit out. So if I close this position and then I sell another one, so I'm gonna switch this back to Delta. I sell 150 Delta and buy 270. Yeah, this is it. Boom! It's exactly as it should.
I mean, that's how it should. That's what it should look like. We should be getting enough credit that.
So what we're talking about is, and that's why I think Intel's throwing us off. We should be taking at least our profit potential and risk a roundabout off the table.
Right.
I'm shipping it.
Right. Yeah, that's how, and then we ratchet in. We're like, okay, great. That's what a ratchet should look like.
That's what I think. That's why we're
so. And I don't know. And I personally, I mean, honestly, if you open up the chart, like, I don't know if we want to stay along Exxon or if we want to just take our profit and forget about it. I just wanted to compare the two.
Only because we can, not because we should. Watch this. I want to go back to what's their assumption and read it.
Oh, here it is.
Okay.
Sure, go ahead.
Okay, so that's what I'm saying. So this is their assumption. That's why we put on the zebra. I assume XOM will break out to 125, 130 before November.
Then leave it.
I mean, I don't know. Like I said, I just only because we can, not because we should. We can review the tape of what our assumption.
Go ahead and leave it, Liz.
So I'm going to ratchet it, right?
Yeah, ratchet. Right. I don't mean leave it. I mean ratchet it. What did we pay for it?
$6. So here we paid $6.90 for it. We're taking $2 off, so we'll have paid $4.90 for it.
Sure. Okay. Do it. Go ahead. And all the ratchet is closing the original trade, putting on a new zebra with the original mechanics of
and
buy 270 delta, sell 150 delta.
To your point, this wasn't our assumption. So sometimes we're happy with $200 win overnight or within 3 days, but we're just going to stay with their assumption because we can. I'm going to let that work. Okay. Anything else we'd like to manage?
I want to look at SPY. There's 21 days till expiration. All the research I've ever done in SPY shows you're better off if you close it at 21 days till expiration than just leave it. So, and I know it's tough. This was a Delta Buster. I know it's hard because it's a loss. How much of a loss is this trade?
About $600. $560, sorry.
$560 loss, and it could be worth $10. So it could be another, $440 to lose. I don't know which way SPY's going, but me, like new Jenny, is closing trades like this at 21 days because I'm asking myself and this is a lesson we've talked about long ago. Would I put this trade on today?
This exact trade? No.
Yeah. No, like what if I didn't have this trade? If we closed this trade and we opened up SPY, would we put this trade on today? So if the answer is no, then I wouldn't. Then I'm closing it at the 21-day mark.
So hold on for 1 second, because I'm just playing devil's advocate. I'm not a believer in what I say. I know sometimes it comes out like that because my family tells me that all the time. Like, you speak to this way. I'm like, I'm just throwing this out there. I'm just playing devil's advocate. This is essentially a stop loss. So if we were going to put on a new trade, that we can look at the probability of it getting to here, and this is essentially putting in a stop loss.
I disagree. If you go tell the research team closing at 21 days is a stop loss.
No. In a Delta Buster, this is a very tight $10 wide SPY. So in SPY, when we talk about tight, like if you're going to say something, we're not going to close at 21 days if we're putting on a $5 wide in SPX. You know what I mean? This is a $10 wide in SPY is a very tight range.
I just know from research of $10 wide iron condors, which our call spread was pretty far. Our call spread was about a short 30 delta call. So if you had a short 30 delta call, $10 wide on an iron condor at 21 days, this thing is losing, and mechanics and research would show close it at 21 days.
So close and reestablish with another bearish position?
Well, just close it. It didn't work. Like, this didn't work. It was never profitable. And again, a SPY could fall on Monday and we could say, oh, darn, wish we didn't close it. I just know for me, a trade like this, I've been closing trades at a loss so they don't get to a full loss. And,
you know what, Jenny? I'm going to follow your lead because I don't put Delta Busters in my account.
So
we're out. Like, I really don't trade Delta Busters because if I'm going to put a hedge on, I like to reduce my position instead of put a hedge on. I got TP stuck in my brain.
I don't mind like that. So every Delta Buster we've ever put on, again, it's the market's already falling, and it's like, oh, this is just the beginning. And every Delta Buster we've ever put on has turned to full loss. So I'm just trying to prevent this from turning to full loss too.
No, I agree. That's what I'm saying. I'm following your lead because I don't trade these in my own account. So I'm like I said, I might make bad decisions because I don't have it in my account.
If we want a short delta trade, if we said today, like, hey, let's put on a trade to give us a little short delta, we wouldn't put this on, we'd put something else on. So if we want a short delta trade, let's go to 45 days and put something else on if we want to have a little short delta somewhere.
No, I get it. I don't mind closing it either. I mean, this account, like we just closed it. We took about a $560 loss on it. No big deal because the rest of the account is doing well. That's what a hedge does.
And so if we want to keep a short delta trade, put something new on.
So in SPY, if you wanted to put on that same trade, you can go to 56 days. And here, I'll just replicate it pretty quickly.
And I wouldn't do a Delta Buster here. Like,
no, I'm just going to, I just want to show, because you were saying it was a 30 Delta. So I think that's pretty good to look at. So here you got a $10 wide put spread and 30 Delta. This would be pretty far. 78, 88, right? Yeah, there we go. This is exactly as the setup was.
Exactly what we put on. That's exactly what we put on.
Mm-hmm. And so, and it came up to here. So from that perspective, when we were talking about this, you smack dab in the middle. I'm just going to grab the middle one. It's a 25 Delta. So you've got a 50% chance that at some point during the cycle it comes up. But we're playing for it to go down.
So, and you can see like how far away, and the one we just closed, our put spread was so far away that a little down move wasn't going to help us. Like that put spread was so far away.
No.
So I just think that, if you're, and again, I don't know that we need a Delta Buster, but if we wanted some kind of short position.
No, I just wanted to show how far away our call spread was when we put it on. So we put it on, 45 days. Delta. Yeah. So it's pretty far away.
Right.
Well, I don't know that we don't need to put that on right now if we don't want to. The other thing that I do like for a short Delta position, and this is what I do in my account, but they don't really pay off like that much. I'll do a pool medic style calendar instead of a Delta Buster. So that would be $650, paying $4 for it. Now you can lose $4 on this too, but this is a 10-day, 30-day. You sell the 10-day at the expected move, buy the 30-day of the same strike.
Yeah, and I don't mind these pool medic style calendars. I really don't.
But what I will say is we're spending $400 here. I'm going to take this off for $80.
Right. Yeah.
But let's pop this in through the weekend. We'll reassess. What we can do is have this in. If we get a little down move on the weekend, maybe we'll take it off on Monday.
Or another trade we used to do, we would do like upside broke wing butterflies in SPX, where we're taking in enough of a credit, but if it goes up there.
Okay, so.
And then we would do those shorter term, like the October cycle probably.
October, not AM. I hate AM. So the upside broken wing, I'm going to sell 2 here.
You might have to bring it closer since we're like only 21 days till expiration.
I just want to. Oh yeah, you're gonna have to bring it up.
Yeah, you got to bring it down. But it's still better footing than the trade we had. The trade we had, it was already through the call spread.
Can take in 110 credit. That's not bad.
Yeah, that's not bad. You're taking a $1.10 credit.
No, so I just put it on. What I do love about the platform is that I can take these and so keep an eye, everybody, keep an eye on this number right here as I shift. Okay.
Yeah.
And I can take the strikes down. I went up.
The other way. Yeah, go the other way. And if your credit's changing dramatically, we might, move it down to take in more credit.
I'm going right here. I'm going to go right here, 105.
Because then, honestly, try to take in the 105, right, 105. Or, $1. So honestly, if we can make $1 on this, this might be something we leave. If we make $1 on this, then we've chipped away a little at our loss on that other SPY trade.
For sure. And it's in 21 days. Perfect. Okay.
So while we're in SPX, let me ask you, did you do an SPX trade today?
Yeah, I did it at 9:00.
So it was very tricky. At 9:00, SPYs were up 40.
So maybe I did it before because they were up 30 and now we're only up 14.
Okay, so when at 9:00, I opened it up, SPYs were up 40, and I did not want to do just the put spread. So I did an iron condor. I did like a Jack Tucker, 20 delta iron condor, 20 delta short call and short put. And then like literally less than 5 minutes later, SPOOs were only up 9. I think like I turned the corner.
The same thing happened to me, but I did the iron fly because when I saw it up so much, I was like, I got this one. I'm gonna iron fly it.
I thought about it. I thought about like, I don't want to just sell the put spread with SPOOs up 40. I thought about the iron fly. I ended up going with the 20 delta short iron condor. And then when SPOOs were up 9, I thought, oh geez. And so then I threw on the put spread because, but I felt like blue wackadoo adding to my, like just keep adding on.
I like it. I hope Blue Wackadoo caught some fish yesterday. Okay, so we have our SPX trade on. We have that on. Let's jump into Twitter if we can.
Sure.
Okay, so we are on Twitter. I'm going to get out of this.
Just hit escape.
Escape, and then I'm going to go top down. Sorry, guys. Avert your eyes. Okay, there we go. Yes! Pinky Tuscadero.
Oh, there she is.
Yes. I know you probably thought I was going to go pink ladies, but Pinky Tuscadero.
I had a big crush on Pinky back in the day, and I will say it's a 30 delta that Jenny will know her sister's name. No idea, Mikey.
Oh, I don't know the sister's name.
But isn't that Valerie Bertinelli?
No.
Doesn't it look like her?
That's Pinky Tuscadero, and that is not Valerie Bertinelli.
I have no idea.
But Mikey will tell us who it is. That's so funny. Okay. Archer Bowman, what is a ratchet? 11 minutes ago. Hopefully we did already answer that because we went through it in here. I'm going to show.
Go to Tasty Live. Go to Tasty Live and show them where to find the ratchet video.
Oh, you are really testing me today.
I don't know. It's there. It's there. See?
Okay. Yeah. So Tasty Live. No. I have whatever pulled up already on the thing.
Oh, okay.
So if I'm here, I go to Liz and Jenny's. I think I can do it. Liz and Jenny Strategy Series all the way over on education. Okay. And then you come down here. The ratchet is number 1.
Yeah, you could watch a whole detailed video on the ratchet. Liz, I'll give you $1 if you could tell me what symbol we used in that video for the ratchet.
Groupon. I don't know. I'm just kidding.
I don't know. I think it was like Pinterest or.
It was a very bizarre symbol. I do remember that because we actually had to find one that worked.
That was working.
And then film the video.
Yeah, that's why I kind of think it was maybe Pinterest. I don't know.
I don't know. I'm not going to press on it because that's going to be.
Whatever happened to Pinterest? Is that still a stock?
Pinterest?
Yeah.
You trade it all the time.
Pinterest?
Every time it has earnings, we go, oh, I love Pinterest.
No, I don't think we've traded it in years.
Oh, Jenny,
I don't know if it's still even here. Honestly, I haven't traded Pinterest in years.
I don't know what's happening here. There we go.
We used to.
Pins, still a stock.
Yeah, hit the chart. Let's see. What does it look like? I haven't traded Pinterest. I can't remember the last time.
I'm going to have to go back and review 475 million shows that we've done together because I can guarantee you within this year, you've traded Pinterest.
No way.
Go to history.
It's one of those that I've like forgotten about.
Pinterest.
I used to trade Pinterest all the time, but I don't think I've traded it in the last year. I bet you it's not on my statement for 2024.
I'm going to need some visual proof when you get your statement.
I know it's not in 2025.
I'm going to need some. Remember,
like I quit.
I'm going to need to see your papers.
I quit using Pinterest whenever I used to go there for landscaping ideas and like house decorating ideas. I quit using it when it was just so ad heavy.
We're gonna need some.
Hey, Liz, look at the market. SPOO's up 19. All of the trades will be coming off.
Hopefully. Okay, I'm going to go back to Twitter now because Jenny's testing me on my internet stuff. I love it. Thank you very much, Mikey. I'm gonna retweet all these, repost. Hopefully that helped. Signal.
We don't need to repost everyone.
I like to repost because we should. Ash Finn, I love it. Yes, I like it. Oh, is Ash Finn must be on the chat. Love it. Okay.
Same time on YouTube.
And then we've got Jackie, SPX, 65.85 sell put spread done for the day. Victorious.
Nice.
$46 again, 2-minute trade done for the day.
2-minute trade, Jackie.
Wait a minute, Jackie, if you're selling a put spread, were you doing it at 9 or do you think they did it in the morning?
He says 49 minutes ago, so he did it before. He probably did it when SPOOs were up 30 and then SPOOs were up 40. He probably caught it because 49 minutes ago it was still 10:30, 9:40. 9:40. So it was after. He did it later then. He did it later when SPOOs were I don't know. I don't know what time, Jack, the exact moment was, but in 2 minutes there was a bounce. That's all I know.
Jackie, if you're watching, give us the time, please.
Oh, and he was only looking for 15%. That's a small percent.
$245 gain. So that's pretty.
He must have had a wide spread.
Wide.
Yeah, because like $245 is 15% of what? Like he must have had a very wide spread or a big collection.
Yeah, he must have.
Jackie's getting crazy.
And then here's the famous Jack Tucker, 3 tranches today.
19,000 premium. Honestly, Jack, yesterday we closed almost where we opened. So I don't know how it worked for you yesterday. It should have, right? The closing price was close to the opening price.
Yes, it was. And hopefully it did. So take a look at this, $19,000 in premium. And I want to see where his, this is where the stock was trading when he put it on, but he's got from 65.90 to like 66.50, right? Let's go. He's in great shape.
Yeah. Yeah, right now. Right.
Yeah.
Right. Jack, good luck. One day, Jack. One day we're going to be Jack Tucker.
I mean, I said I want to be Jack Tucker when I grow up. I'm retweeting that one. Okay. And then Blue Wackadoo, we were just talking about you.
Yeah, right. I said when you post all of your activity, that's how I felt today.
It feels like Jay and Bob at a new Quick Stop, but used to it. That's pretty funny. Okay, so he's got the same. He's very Jack Tucker-esque, but Blue Wackadoo has his own style. I like I love that they show all this stuff.
Yeah, all this.
He's actually. Oh, this must have been the closing order.
Yeah, sell to close.
Yeah,
close.
Okay, I don't know what this is, but this is going to be awesome. TGIF ladies, does my pop culture illiterate Polish princess Jenny know what this is?
Time to make the donuts. Time to ratchet the Intel zebra. It's time to make the donuts, Mikey. And my nephew's first job was at Dunkin' Donuts, and he would have to get up so early and get there so early in the morning. And I would always tease him and say, "It's time to make the donuts." I could go. If I weren't on a diet, I could really go for an original Dunkin'. That's my favorite.
This is going to be an unpopular opinion. I don't think they're that bad for you. Calorie-wise, Dunkin' Donuts are not that bad.
I think the original Dunkin' is like 260 calories.
That's nothing.
No, nothing. My doctor would say wasted calories. When I asked her if it's okay to have 2 glasses of wine at night, she said wasted calories. Empty calories, Jenny. That's empty calories.
Okay. I do believe there's choices. I would rather the empty calories be wine than donuts. How about that?
Yeah, I guess I'll pass on the donuts so I can have the wine tonight.
I tell my daughter all the time, life is all about choices. I will choose, I mean, not her, hopefully not, because she's only 17, but I would choose the alcohol over the donuts if I had to make a choice.
The whole like, a glass of red wine at night is good for you. They don't seem to believe that anymore.
Really?
Yeah.
Switch doctors. Get out of that practice.
Oh my gosh, you'll be interested in this. Okay, so my husband's, this doctor, my husband goes to him, my father goes to him, my son goes to him. It's their doctor, like it's their family doctor. They've been going to him for years. He called yesterday and is asking all of his patients, what would you be willing to pay if I switched to be a concierge doctor? How much are you willing to pay if I switch and become a concierge doctor? Are you willing to pay $2,000 a year or $3,000 a year? So if he leaves his practice and just becomes concierge. And so I was struggling with that because I don't know if I'm willing to pay for my son to have a concierge doctor. He's only 22. Like nothing's wrong with him.
But what I would love is a concierge doctor with a sliding scale, meaning like the younger, the healthier you are, you're only paying X. The older, the more problematic you are, you should be paying more.
Right. I mean, so what do you think of like a family doctor calling his patients, having this, running this, and he's like, don't worry, your response won't impact your care. Because he's like, would you be willing to pay $2,000? Would you be willing to pay $3,000? Like, what are you willing to pay to be?
So I'm a fan. I'm a fan of him doing this because I would like to get that phone call from mine, although I don't think she'll ever do that.
But now, like, I pay nothing, right? Our insurance pays everything. I pay nothing. So why do I want to start paying $6,000 for the same doctor to be my son and my husband's concierge doctor?
Yeah, I still think I'm a fan. I've always wanted to look into concierge medicine, but I'm too broken and I'm way too expensive for concierge medicine. I'm too expensive. So yeah, I think that I don't know. That's pretty interesting though.
I know. So then what happens to all of his patients who aren't willing to pay? They got to go find another doctor.
Yeah, they do. They do.
Yeah.
If he moves, they do. I mean, my doctor moved practices, so a lot of people had to go find a new doctor. I just went right back to her. I should have went to a concierge medicine.
Oh, you just switched. Well, yeah, mine moved. Mine went from Loyola to Northwestern, and then everyone switched. They followed her.
Mine did too.
Yeah.
Yeah. Okay. So I'm going to go top down on this one, and then we're going to get into.
Oh, yeah. Jackie's letting me know.
Her sister's name was Leather. You're right. Yes, it was Leather. Okay. Thank you very much, Mikey.
Played by Susie Quattro. I guess it wasn't Valerie Bertinelli.
Oh, look at this. Ash Finn. I knew it. I knew it. Thank you. Liz and Jenny's show account traded pins in May. LOL. Ash. And that's why when she's like, I've never heard of that company pins. I
think I forgot. I thought it didn't even know if it's still trading. I felt like we haven't traded it in forever.
Jenny, every time we open it up, you talk about Pinterest. Now you used to use Pinterest and now you use Etsy. Like it's a story you tell every time we look at Pinterest.
Hey, my Etsy, I'm long so much Etsy now. I just keep adding on to my Etsy position.
Yeah, this makes me laugh.
Yeah, so I've quit trading Pinterest and now I've got Etsy. Not that it's the same thing at all, because Pinterest was like ideas and Etsy is actually buying things people make, but
yes, my favorite is Ash Finn. She took the mind eraser shot after the last time and said I'm done. She went to her doctor and said, "Is this empty calories?" I don't think so.
Maybe I need to call her. Maybe I need to call her about my memory.
That's so funny. Okay, so Jackie, yes, very wide. Thank you. I love that Jackie responds. $40 wide, risking $20K to make $1,200 max credit.
Whoa, Jackie.
And did it around 9:36, so during the bottom, in and out in 2 minutes.
Okay.
Excellent.
Thanks for clarifying, because we knew you had to be taking in a pretty hefty credit to take, 15% and get over $200.
Yeah, you have to for 15% for $200. So yeah, Jackie, thank you for your response. We really appreciate it. Okay, Jenny, would you like to? I'm going to let you guide me in this segment because this was kind of your you were looking today.
Well,
I have it pulled up already.
Yeah, let's go. Okay, let's go to on confirm and send. There was a question, and I thought my answer would be slightly different than Tom and Tony's.
So I'm just going to show, and I love this. And John, I hope I'm not throwing you off. I just wanted people to show that you can go back and watch the confirm and send segments too. We're going to actually try to cross-reference some of these shows nowadays. So from here, all I did was, wait, this is the wrong one. Okay, so here, you can go to shows, and then you can go to, actually, I'm just going to scroll down to confirm and send, and I'm going to pull up the slides. So you can go down here, you see confirm and send. The slides are right here, Jenny. They were pulled up a second ago. And so we vetted this. I'm going to go to the one that she wanted.
Sure. It was, okay, here, right here, this one. So I saw that the banks will begin reporting earnings in about a week and a half. I would think that leads to IV increasing in those companies. But my question is, when does that start? Does it make sense to buy straddles in those companies and ride the premium increase? And so here's what we found, that 2 weeks before earnings, vol starts increasing, but you still have your theta decay. So prior to those 2 weeks, you've got your daily theta decay. But as we get closer to earnings, vol's increasing, but you still have theta decay. So you're not really winning or losing at all. It's kind of staying the same because the theta decay is this offsetting the vol increase. But this is why we created the earnings setup calendar.
No,
and that's what I would do for this, earnings setup calendars.
I agree with you. Instead of buying the straddle, you can take advantage of both sides. Now we're going to go through and walk through that. Okay. So we don't have a video on the earnings setup calendar, but I'm going to go to Goldman Sachs. Maybe give me a good bank.
Oh, Citigroup, JP Morgan. Usually the beginning is always like, because the other one is going to be way too expensive. That was $800. So you've got Citigroup, JP Morgan, Wells Fargo.
Let's go Citigroup, $100 stock. Okay. Citigroup's got a $100 stock. You've got a 19 rank. You've got earnings that are in the October cycle.
Okay, and you could see the expected move there is $6. It's a 35 vol that's already inflated. It will continue to inflate as we get closer to earnings. But if you go to that 21-day and buy, instead of doing the straddle, instead of just buying that straddle, if you buy...
I just want to show you're setting $654 here, which is it's a little bit over the expected move for the cycle.
And they didn't want to sell the straddle. They were asking about buying.
Oh, I'm sorry. I was just looking at the price. So if you're buying or selling, it's the same thing. So you're spending more than the expected move for the cycle. Okay.
Right. So, I mean, you can leave both. I mean, with a calendar, calls or puts, they'll perform the same. Like whatever the put calendar at the 103 level makes, the call calendar at the 103 level would make the same thing. So you can choose. You can choose what when you want to do.
Yeah. We're just walking through. It doesn't matter. I mean, typically I'll do the call side just because. So we'll buy 104 just because it's just out of the monies.
Okay. And then go into the week before it, that week, the 14 day, and sell the 104. Now I know we're selling a 28 vol and buying like a 30 something vol, but we expect that 21 day vol to increase. And so this is a cheap way to kind of try to play that, to hope for that, to look for that, vol increase. Now, the risk here is if Citigroup strays too far one way or the other, or if you're buying that straddle, that's not a risk to you. You're hoping it goes far if you're buying that straddle. So the risk here is it goes too far away from the strike, but this will benefit for the increase in the earnings vol.
Well, and it's a less expensive way to do it. So you and I typically don't, I mean, like I said, nothing wrong with buying the straddle if you think that's happening. And we think options are just a menu board and you can do whatever you want to here. But it's a cheaper way. I keep hitting the sell because it's so hard. It's like not in my religion to buy. Okay, so here, if they want to buy the straddle, this is actually a very low probability trade because the probability of it moving $6.15 in 21 days, you're paying over that. So you can change that by, and even if you did both sides here, I'm going to go to, now you're paying $2.25 and you've got the calls and the puts.
Right. So it's like a double calendar. Now, if we were going to do a double calendar, we'd skew the strikes. Like maybe I do one at 104, maybe I do one at 100. Like I'd have, if I'm going to do multiples of my calendar, I'm going to scatter the strikes.
Agreed. And I also want to show too, if you wanted to take this down, you could also, I would scatter the strikes. So I'm going to do that, but I'm going to take the strikes and I'm going to take it down by 1 week as well. So keep an eye on what you're paying. So you can pay $350, so 50% of it, but then it's only got to stay within that range for 7 days.
Right, and you're getting the decay of the 160 plus 130. But
yeah,
again,
so let's do a double.
Let's do two different strikes.
Let's do a double calendar, and in Citigroup. So we'll go back to the ones that we want to buy, and I'll do 102, 105. How about that? We'll just go one strike out of the money for both.
Sure. Yeah.
So 102, 105, we're buying the strangle, right? Okay.
Right.
And then I'll go 14 day first, and then maybe we'll see. So then I'm going to buy this.
Then you got to sell the 14 day. So we're selling the 14 day and buying the 21 day.
Yeah.
And then we'll take a look at this. I mean, this might make money before and we might get out of it early, but otherwise, we'll take a look at this, when 14 days come and that's about to expire. And
I'm just going to take this down to the 7 day. I want to see what the price difference is because I kind of like, ultimately speaking, when we're talking about from that confirm and send, if they wanted the straddle through earnings, it would be wonderful if these expired worthless and you're left with it. It's almost like you're getting the straddle at a discount as well.
At a discount. So if you take it down a week, then we're paying $340. Sure, pay $340 for it, and then next week, a week from today, those shorts will be expiring, and we could make adjustments. We could roll them out the next week, or we could tweak it. We'll see. And these are Citigroup going far from this level, and we could be out $340 if Citigroup goes far from this price range.
But that's why I kind of like, and you can correct me, you can talk me through this too. So I'm gonna swap it out again. So this is the 14 day where you're only paying $221, and this and $341 is the 7 day. So what I like about the 7 day is the very meaty decay. You're paying more, you are paying more. So the risk is the same. Anywhere well outside the realm of these strikes, you're gonna lose money. But there's a greater chance of these decaying rapidly than the 14 days.
What's the theta? So the theta on this one's 428 a day. On the other one, what's the theta?
Okay. Negative.
Yeah. You get that high theta from the weeklies. Now, as earnings come, and if we've got a lot of these on, we're selling that short term, and it's really giving us a big boost in theta. Be aware of that. Like, these calendars are low risk trades. The risk is what we pay for it. So if I'm looking at my theta and like, geez, how did my theta get so big? It's not like I have too much risk on. I just have a lot of these earnings setup calendars.
Earnings setup calendars really screw your theta. Like, they skew it, not screw it. They skew it so it looks like it's a lot heavier. So I'm gonna pay $342, and we're gonna have a double calendar in City. What is interesting about these is I love calendars because they are defined risk, and you're only holding up what you pay for it, but you can't go into the analysis page.
Anything that's over time frames, you can't go on the analysis page. I mean, you can, but you don't get that clean P&L line. Only if you're in the same expiration will you get that clean P&L line. I gotta push this out into the follow page. Hang on.
I've got all of them pushed. So this is what it looks like when you're crossing streams. It really doesn't know what to do.
So we closed so far we put on ZB.
Here, I'll show
Meta, closed SPY, closed Exxon, or exited Exxon. SPX, we put that broken butterfly on, and then we did this double calendar in Citigroup.
You're really killing me, Smalls. I only have 3 in here.
No, I just did them all.
Well, let's check your work. Okay, you just did them.
Hey, go to our IBM trade. I want to see what that looks like. We did that Jade Lizard in IBM yesterday, and we were trying to get out immediately. Yeah, let's try to get out again.
So, and we don't have a GTC in. We sold it for 303 and it's trading 247. Do you think that
it was like a Jade Lizard where we did 2 put spreads to 1 call spread?
It's got a little bit of a wide market.
Well, let's see how much money do we want to make.
I mean, if we can get out for $50 overnight, we're doing it.
But is this $50? If we pay $250, what did we collect?
Yeah, we collected.
Yeah. Yeah, that was just like a quick trade. Nice.
And price improved to $248.
Excellent. $55. Excellent.
So that is not bad. That IBM trade is gone. Anything else? We've got about 10 minutes left. I will pop back into Twitter. I'm just going to kind of go through and see, and Archer's the first one right here. So here's Archer Aviation. It's a short 10 put. It's got 21 days till expiration. We're up 35%. This is a roll. So a lot of times 21 days, we're going to close it and reestablish. Archer's something that I'm going to take it and I'm going to roll it out in time.
Now, here's what I'll look at. What am I getting for the roll? Like, if I'm getting 10, 20 cents to roll it from 21 day to 56 day, I'm not going to do it. It depends on what I'm getting for the roll. Okay, and so that's when I say it's iffy. It depends on what I'm getting. So there's still 50 cents to come out of this in 21 days. If I'm not getting at least 50 cents for the roll, I'm not doing it.
Well, you will, because you're going through earnings.
56 cents. All right. I'll approve that roll.
It was already in the clearinghouse before you approved it. Okay, so that's Archer. I'm going to go back to our positions.
AI, I know we just looked at this and this was 3 days ago. We adjusted our AI.
We just put it on, so we're going to hold out on that.
Well, I mean, that AI, we had a long. I think we had a long call and we took it off and changed it to a put.
No, but we just put it on. So just because it says 21 days till expiration, we're not going to adjust that one.
Well, but I mean, it's the same school of thought. Like, if we get enough for the roll, we roll it.
So are you going through earnings again? You're not going through earnings. So if you're going to be buying this back, you might not get anything if you're not going through earnings. We're 18 and there is no 18 and a half.
Oh. Then you got to do, you can 120, 117 and a half, or a 17 and a half and I don't know. Just leave it then.
We just put that on 3 days ago. So we'll leave that one. Citigroup, we just put on. DraftKings, we have a calendar. I think this is an earnings setup calendar.
No, I think it's a diagonal.
Oh, it is a diagonal. You're right. Let's take a look at this. Yeah. Oh, earnings setup diagonal, Jenny Andrews. Take a look at this. So we are short the 47 and a half. Okay. We could adjust that if we wanted to. And we are long the 42.
So our long is kind of this. Well, I guess it's gone down a little bit because we're down $92. I think when we put this on, the 42 was a little bit in the money. Now it's at the money.
Yeah. So what you could do, it is 21 days till expiration here. You could buy back your short. If you want to take in a little bit more credit, you could roll it to the 46.
Yeah, I guess we could. Sure. Taking a little more credit.
You're taking in 26 cents.
Yeah, just leave that. We need a run up in DraftKings.
Yeah, we do need to run up in DraftKings. Here is our
Ethereum.
We have the Iron Condor and we have the Zebra that we did move yesterday, so that's fine. What else do we have?
Did we ever get filled on rolling the Zebra? I don't know.
Yeah, because we have the 30-35, so we did not get filled.
No, we didn't get filled. We have this kind of a losing Zebra, and we tried to adjust it. And I had that working order in all day, but it just didn't fill.
So, and I don't know that it's that liquid. Hold on. So if we're going to be selling one at the monies, so I'm going to sell one at the money. I'm getting 270 in extrinsic value. So I'm looking for.
So you can buy the 226.
So you're going to pay it. This is what we were trying to do yesterday. We were trying to pay an additional $2, but it would pick up 1 for 1 if you're still long ETHA.
Right. If we still want to be long.
Do you know? Okay, this is terrible. This is nothing we do is a trade recommendation. Okay.
Oh,
what about this? So if you were still long, I mean, this is when I get crazy. What if we just bought this back?
Yeah, 56-day trade. I mean, sure.
Then it becomes stupid because we have the longs.
Then we have two. Here's what.
When it's very cheap, like I would do this in UVXY all the time. I would have a Zebra on an UVXY. If the UVXY went down, I would buy the short back for very, very cheap, hold on to the longs for dear life, hold all the longs. But
what are we getting for another way to look at this when you talk about the ratcheting as losing Zebra? What are we getting for closing this? How much are we getting for closing this? Because it's all out of the money now.
Yeah, you can't see it in here. $5.
Okay, so we're getting $5 and it's all out of the money. So another school of thought is like close this whole Zebra and I'll just buy one call. Like I'll buy 126 call. So my net outlay is nothing. I still have the 100 shares of stock with that one call. And I've covered that extrinsic value because I'm selling out this, which is all extrinsic value.
I like this better. We're on with this. When you push this out, it's going to be awesome.
I mean, because then I still have the 100 shares of ETHA, but I'm not just sitting on that 335 in extrinsic value twice paying every day.
Yeah.
Right. Like oftentimes I'll change a losing Zebra into this.
I agree.
And we don't need to sell anything against it because we know we collected at least $1.40 in extrinsic value. I'm not going to worry about that.
I might have a mess on my hands as soon as this is over. What time is it?
Why? What do you mean a mess on your hands?
My dog is crying and needs to get out of this room immediately.
Oh, go ahead. Let's
No. It's okay. He's fine.
Okay. Her dog is sick. Go ahead.
No, he's okay. He laid back down, but he just started crying for a minute. He's been sick all night long, so every time he cries, he's got to run outside. He just laid down. And you know how when you have a bad stomach, it's bad, and then it goes away for a minute. I think he's in that point right now. Okay, FIG, we've got a put spread. The 50-55 put spread, 21 days till expiration. We've had it on for 22 days. We're down $55. It's a $5 wide.
I know.
So this is a situation where you can do one of two things. I'm going to cancel this working order. So this is very similar to our SPY, which we changed, but because it's smack dab in the middle and you want to extend your duration, you could sell 50-55. And you're going to take in a 25% credit.
Do that and just taking the credit.
This is extending the duration. I don't exactly know what FIG is, so we're going to extend our duration there. We're taking in a wee bit of a credit, not a lot.
I wanted to ask you what something is because I have it in my account and I don't know what it is or why I have it, and if you have it.
I'm sure I had some hand in it. What is it?
I'm logging in. I'll let you know if I go to my positions with something where I was like, what the heck is this? NVG.
Yeah.
What is it?
This is you. This is all you, kid. This is this is when you wanted the NVIDIA leveraged.
You think?
Yep. Mm-hmm.
What does it say when you type in NVG? What does it say?
Oh, hold on. Let me get full screen. No, it isn't.
Yeah, this is Nuveen AMT free municipal credit income fund. I don't know why I have this in my account.
No idea.
I thought you might have had something to do with it.
I don't.
But do you have it in your account?
I'm not in my account right now, and it does not sound familiar. So
I don't know. It just showed up. Sometimes things just show up. They just appear.
All right, I'm going to pop into. Oh, hold on. It's on the other side.
Oh, we never got into Kai's recap.
We never got into Kai's recap, and we are out of time. I wanted to get into Twitter again. We never got into Kai's recap, unfortunately. We got to everybody in Twitter, so that's good. But I have to cut this show.
That's all right. Have good luck to Will Ferrell. I feel bad he's sick. Tell Annabelle have a wonderful time this weekend at homecoming.
I will. She's already having a fun week. Everybody have a wonderful weekend, and remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you on Monday, everybody. Have a great weekend.
See you on Monday, everybody.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I've got my man, Mikey Butler, and of course, Mr. Glenn Freiberger, G-Money in the house with us today from the Tasty FX team. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day gets spent with my buddies, Mike and Glenn. Glenn, good morning, sir. How are you?
Pretty good.
Yeah.
Not too bad. I beat our good friend Mike Butler in fantasy football this week without a quarterback. Do you need a quarterback?
Why didn't you have a quarterback? What do you mean?
That's not important.
You just forgot to set the lineup?
So Jaden Daniels was actually hurt. It turns out.
He's been out pretty much all week.
Yeah, so I got the notification, and then I forgot. So
no.
But it didn't matter.
Didn't matter.
Against
Actually,
me with two tight ends?
But, dude, it does matter.
Yeah. See, in my home league, it's a $25 penalty if that happens to you.
Ooh. Really?
You start somebody that is declared out before game day.
That's pretty funny. And, pretty harsh. That's how much is your buy-in?
Keeps people in check.
Like $50?
$250.
Have you ever won?
I win pretty much every other year.
Damn.
That's
I'm a multi-year winner.
Damn.
I think I've won. I think I've won
then
three.
comparatively, $25 is fine.
That's why he left the Tasty League, because he felt bad.
Yeah.
He felt bad.
And
he knew he was going to win.
And pot odds.
Yeah.
Not worth your time.
We go up 50 a year. Now we do.
That's pretty funny.
$50 a year. So.
Well, luckily there was no monetary penalty for our league, but you do the.
Because it takes 5 seconds. It takes 5 seconds to settle.
Especially now, you just click start.
Yeah. Yeah. It's
Okay, but I got multiple apps now. I was traveling.
Yeah.
Tasty Live, New York. Great time if you were there.
Oh yeah.
Fantastic.
New York, they bring you around. Very nice.
New York.
You get up to anything rowdy there? You a little naughty boy?
No, all above board.
Of course.
Sometime in.
You probably got some friends there.
Saturday night in Brooklyn.
Yeah. All your Northwestern.
I did run into some Northwestern people.
Yeah.
Saw a good friend from North Carolina as well.
Very, very nice.
So we were bouncing around some rooftop parties.
Ooh.
Rooftop action.
That's what the young kids are doing these days, huh?
It was beautiful there. So yeah, great time.
Very nice.
What have you guys been up to? Do you have a show?
Yeah, we're out October 12th.
What?
Yes, Dallas.
Basically 2 weeks out.
2 weeks out.
Yeehaw.
Yeehaw, indeed.
Baby. Woo, woo.
We've learned that, we're going to the rodeo, first of all.
Yes.
And then we're also probably going to go to the Texas State Fair in Dallas.
Yes.
Wow. Talk
Last
about
week was
timing.
there, yeah.
Did you guys plan that?
Paul Wall did, because he's playing there.
Okay.
Yeah.
That could be fun.
It's going to be great. We're definitely going. But yeah, October 12th, Kessler Theater. Sign up for free, tastylive.com/events.
There you go. Oh, yeah. Nick's in there, too.
Come holler at us.
Yes, I am there. It's like I'm like a Easter egg, and you got to find me.
Man, what an Easter egg.
All right.
In for a treat.
This is the gang. We miss Ryan, who's out.
That's true.
Lots of tasty babies.
Papa.
I've had some people asking about Vecchio. Vecchio also welcomed a beautiful baby boy, tasty baby, into the Tastyverse.
Watch out.
Watch out. 2 new future show hosts. Vecchio and Ryan.
You'll be teaching them the ropes.
Yeah.
All right. Get them clicking that button ASAP.
Yeah. Yeah. That's why I keep telling Ian and Gus, I'm like, those old guys taught me. I'm going to teach you, and then you're going to teach the next ones.
You're very
Goes on forever.
Very kind in that way, Sensei.
Yeah. Thank you. Thank you. I'm Ankh now. You know, I'm embracing the Ankh.
Yeah, those children are going to be literally classically conditioned to the ding noise.
Yes.
Yes.
So if anything, it'll be an interesting psychology experiment.
What's this noise I keep hearing?
Ding, and they're like, we got to start conditioning them with food. Like, you know, you hear the ding, and then you like give them a cookie or something, like a dog.
It's like, oh, is the FDA aware of this?
Yeah.
Nope. I don't know what the governing body is.
Yeah.
Should.
It's currently shifting. It's in flux.
Okay.
Yeah.
Nice. What are we looking at today?
Oh, well, a little dippy-do. E-minis down 66.83. It's a crash. You going to buy this dip? You like that?
I did. A little dippy-do.
A little dippy-do. Just
crash.
A little, yeah. I mean, nowadays it's a
guy.
crash. You get, you know, Jim Cramer will start tweeting about, you know, how this is like, you know.
The end, isn't it?
Yeah. Yeah.
The final count.
Yeah, you get that sort of thing. E-minis down 31. Low of the session. Wider range than we've seen in a couple days here. About a 40, 50 handle range at the lows of the session. NASDAQ down 170. You got the Dow down 167 and the Russell down 19. Everything moving lower here, a little over 0.5% or so. Oil catching a little bit of a bid, /CL up $1.24, 64.65. You have volatility futures 18.55, up 30 ticks, the high of the session as well. The VIX itself at 17.14. We've seen a consistent bid in volatility over the last couple sessions, let's call it a week or so, even though we've rallied higher pretty much since Jay Powell, his eminence, or what do you say, like his grace took the stage.
His holiness.
His holiness took the stage. Yes, we've seen a little bit of a bid in volatility. We've also seen bonds off the highs, weak in the bond market, down 7 ticks. Gold down $39, silver down 41 cents. Those two have had quite a rally to the upside. So this is just a paper cut. Bitcoin has been weak, bouncing a little bit today. $1,700 on the futures spot, up 1,000. You have ETH up 34. So mixed bag. It's been a mixed bag for about a week now. A lot of chop, a lot of rotation or dispersion, as the people would say. A little bit.
Dispersion trade.
Dispersion. It's a nice vocab word for it.
Is there a difference between dispersion and rotation?
No.
Oh, synonymous.
Synonymous. But dispersion sounds, like more like, you don't think so?
It's less.
Rotation is too like.
It's less intuitive though. Dispersion, it's like, where's it going? Rotation sounds like
it's dispersing.
This bucket.
Disperse.
Bucket. You know.
Yeah.
With
everybody.
The rotation dance.
The rotation dance.
Yeah. Yeah.
But sure, dispersion. So where are you guys dispersing to?
I'm trying to disperse some capital into TastyFX. So.
Yeah, we've had a nice little run there. I got a couple that I can actually peel off here. I was looking at this Aussie US dollar, about $20 on that one.
All right.
That was, not NFA, not financial advice, but this was a good one.
Yeah, we're getting a pretty strong bid here in dollar, even just overnight.
Yep.
We had Powell talk yesterday. Said
I saw that. That was a surprise one. Did you know that was happening?
Knew it was slated, but you really never know if it's interesting or not.
Yeah.
But he was going for it. Said equities are fairly highly
valued. It's almost like a double negative.
Yeah. It's like what? Say it with your chest.
It's like sorta.
Say you're out. Say you're out.
Yeah. Just like fairly
Say you're
highly.
not long.
Fairly highly.
Yeah.
And so we didn't get a ton of reaction there. Your U.S. dollar drifted lower on that meeting, but as soon as Asia came in and throughout the European session, really saw a strong move in U.S. dollar. We've got euro dollar back below 117.5 in the spot market. We've got dollar yen above 148.5. Australian dollar peeling off back under 66 cents. Canadian dollar giddy up, really getting there. Just now hit $1.39, $1.39, Canadian dollar, that is. Swiss franc lagging a little bit, which tells me we're getting a little bit of that global risk sentiment turning a little sour, favoring the U.S. dollar in a couple places.
Yeah.
Still holding on to those Swiss francs as well, keeping that pair muted.
Yes.
But yeah, we're definitely seeing some movement this week with PCE, the headline data to come. That's on Friday.
Ooh.
Even though the Fed says we have two children, we have to cater towards our employment child right now. Inflation, make your own dinner.
Yes.
But interesting nevertheless. So nice to see some back and forth and some sustained bid into this U.S. dollar. If you're looking for a funky pair to watch, non-U.S. dollar, as you all like to diversify your portfolio even further.
Yes.
I'm looking at British pound, Swiss franc. We've seen a little bit of a divergence between euro and the pound. So, of course, you can trade euro-pound directly. But this pound-franc pair is now touching, you've got the daily chart up. It's definitely a lower volatility pair, as you can see from that average true range there, dwindling to naught. But we are down.
That was good.
Thank you.
That was good.
I was on a roll, and then you stopped me.
Yeah, I'm sorry.
I got distracted.
That was good.
We're approaching year-to-date lows and seemingly, dating even farther back there.
Okay.
We've hit this a couple times in 2025.
Got our little Bollinger Bands there.
Yeah. And nearing the edge there.
Buy.
Yeah.
Perhaps time to do something, but
it's time to buy.
Yeah, if you're a contrarian here, this setup, we're chugging lower. So some of the fundamental behind this British fiscal policy in a little bit of trouble, confidence there wavering a little bit. So you're seeing a little disconnect there where you wouldn't normally see it when we're comparing these European currencies.
That adds to
some of that risk sentiment as well. Has bolstered the Swiss franc. Does that continue? Maybe if we get through that, it's a goodbye pound, or we bounce back. So that's an interesting.
Adds to my franc short because I am long the U.S. dollar against the franc.
Nice, holding on to that one.
Yes,
that one hasn't popped in your favor as much as some
we're back to flat. We're back right in the middle, so we're right there. So I've been looking at that one. And then I also have a short euro position that I've been scalping in and out of. If you look at my positions, I have multiple lots in here. I have two of the half micro, half mini, micro, half micro. 10 is micro.
You have 5 micro.
5 micro.
Or half a mini lot.
A half a mini. When you have equal lots, you have to close them together.
When you have equal size lots, you have to close the first one first. First in, first out.
FIFO.
Oh, okay.
Whereas if you have unique position sizes,
then you can do them,
manage your positions in whatever order you so desire.
Yes, so I've been taking advantage of that and changing ever so slightly my lot sizes.
Mowing the grass. Getting the green off.
Sprinkle.
Is that what they call it?
Sprinkle. A little bit here, a little bit there. Just sprinkling. Yes. Very good. Dollars had a nice bounce. I mean, we're still low, though.
Still very low.
Still very low.
Some of that uncertainty around policy.
Yeah.
And, just global confidence in whether, Trump has said outwardly, I want to devalue the dollar, essentially.
Yes.
That's happened. Will that continue to happen? He has how many more years?
3. Right. Yeah, he just started this year.
Gets a cheeky third term or something.
Yeah.
He's changing a lot of rules.
Yes.
I'm not ruling that out.
Cheeky third term.
But yeah, so a lot of questions in the air, but absolutely dollar still has room to run if some of those uncertainties clear out.
PC, if it comes in hot, what do you think that changes anything?
It could.
Rate situation. I mean, there can't be much worse than crappy employment and high inflation. That's got to be like the everybody get your guns and ammo type thing.
Yeah, that's
you know, and get the bag of rice.
That's when Powell says, this actually is a difficult job.
Yeah,
complicated path forward. There is no risk-free path.
Yeah, I mean the market is so it's Wednesday.
Yes.
Newsflash, and the market
today is Wednesday.
Still correct. The market's still projecting 50 points up or down through Friday, which is PCE. So the market is telling us we should not ignore the possibility of a big move on this news. Yesterday, the J-Pow thing, I just looked at SPX, so the expected move was like 12 points. So the market was like, nothing's,
you won't say anything.
Nothing to see here. But yeah, 50 points holding strong for Friday. So we'll see. Maybe we get a little firework action.
Mm-hmm.
It's weird to see it red, though. The market.
I've had multiple of the, albeit older generation of the trade desk come over and make sure I'm okay. Make sure us young guys are okay because it's not normal.
Yeah.
Tom does that too, and I say, yes, I'm totally fine. The last 1,000 points, I got every piece of that. So I can take 50 points to the downside, no problem. No problem, Tom. You missed a lot of those.
But congrats on the 50.
Yeah, that's what I say. I say, congrats. You got one day. You got one day. It's okay.
Now be gone. We're buying.
Yes. Be gone.
This will not last.
Yes.
This too shall pass.
Yes.
It's 30-point sell-off.
It's okay. I mean, try to explain that to my sister as well, who's on a high horse now.
Is feeling like.
She's like, I can't believe how much I've made. And I was like, you didn't make anything. I put you in all those things.
Remember?
And remember when you would text me every day about losing $100 and.
I don't know what to do for dinner, by the way.
Yeah.
No idea.
Yeah. So, but I keep telling her, I'm like, just don't worry about it. You put it in, you let it go. 5 years from now, 10 years from now, I'm pretty sure it's going to be higher.
And this is in Dogecoin.
Yeah.
This is in, Open Door. I put 90% Open Door, 10% Doge to diversify a little bit. Yeah, she doesn't know yet. Little
She just sees she just sees the P.
Yes.
E, not the L.
Yes, exactly. Doge. Yes. Very nice.
This is the world we live in, people.
Yes.
Nice to see Bitcoin bouncing a little bit here.
Mm-hmm.
Works well for our little IBIT trade, but I got into in the currency world, I got into the British pound franc.
Yep.
Long 5 micro lots. I was already short the dollar CAD, and then I was long the Aussie dollar.
You were trying to short the dollar?
Yeah, I know.
Well,
I was long forever.
That was you. You put that on the radar.
What?
Yeah.
You might have amnesia'd yourself.
We were fading the consensus trade of short the dollar into J-Pow and have made lunch money.
There you go. Nice.
Yeah, if you do need dinner, if you don't know where dinner's coming from, just log into my TastyFX account.
Yeah, you take a couple bucks.
Okay, thank you. Very kind of you guys.
Yeah.
But I hear you have some slides for us.
I have a couple slides.
Oh, very nice.
Wow.
Good. Overachiever. Very nice.
Just to get through these quickly.
Cool.
Kind of more of an FAQ. I came on, pre-TastyFX launch integration into TastyTrade to talk about, what is SpotFX.
Mm-hmm.
But I thought I'd narrow it a little bit and bring up some comparisons, some generic kind of asset class product offering comparisons that I've gotten a few questions about at the tastylive events.
Cool.
So wanted to just plow through what are the differences between currency futures and SpotFX. Let's get into it. What we're actually trading here is the same market, right? In the case of SpotFX, You have access through, pretty much every RFED regulated Forex dealer here in the U.S. You have access to more currency pairs and iterations, crosses, non-dollar. But currency futures will give you a lot of the majors, U.S. dollar pairs. But they're just different vehicles, different kind of packaging. Whereas the CME standardizes these contracts. And like other futures have expiration dates. You can trade the curve.
Yes, there's a carry cost to futures that is both leverage and the cost of borrowing, and so there is a slight difference in the price. Like if you look at the euro right now, it's at 1174, and the futures are at 1179, and that's a cost to carry that's baked into the futures because Did I steal your slides?
That's okay.
I'm really sorry.
Go to the next slide.
Oh. I'm really sorry.
That's
I didn't get a chance to read the slides.
Why are the prices different, Nick? There you go.
I don't know. Can you explain?
No, you nailed it with just the different time horizons.
Yeah.
So you're baking into those futures, you're baking in forward points. It all rests on the different interest rate differential, but those are treated differently to the retail customer. So for futures, that's baked into the price. If you have, right now you have euro dollar, for example, you have U.S. rates higher than European rates, and so the forward points there will actually bolster the price because making it more expensive to get into the futures because you have that those forward points favoring the U.S. dollar. Yep. Whereas in spot markets, that is daily if you hold positions overnight. So if you're scalping these intraday, there's no real adjustment there, but you're seeing this 2-year FX account. You're seeing an adjustment every day, a daily FX financing adjustment that accounts for those interest rate differentials, which gives you the opportunity to take that as a credit or be debited to hold that position overnight, because these are just rolling contracts, whereas the futures are settled monthly, and so you could be at different places in that month. If you're just buying and selling, going directional, it's not something you have to worry about or be cognizant of. But when you're talking about your trading account management in the spot market, you'll have that affect your available balance directly.
And I think it's a good thing to understand the curve and just the values, the things that are baked into the prices. I had an email this morning from somebody looking at natty gas futures, and the same sort of thing applies there too, is that there are carry costs. I mean, there's also, seasonality and production that's baked into those commodities. And so there's an even different aspect there, but it's important to understand that, futures, unlike stocks are very easy to understand. The price is the price right now, and there is no, the speculation is your opinion on where the stock goes. With futures, there are, you trade on a curve, and so it's just important to understand that what goes into it.
And the price movement is absolutely a function of those expectations.
Sure.
But the price itself here is either directly affects your account or directly affects the price of the asset. Moving on to trading costs here. This is an important point, I think, and can speak to tastyfx in particular, where tastyfx can offer commission-free trading here. So you're just paying the bid-ask spread. And so if you look at currency futures markets, you'll typically see a 1 pip spread or 1 tick, whereas at tastyfx, we'll offer a lot of the majors for as low as 0.8 pips. And so your cost to get into that trade is really just that spread only. There are no exchange fees or commissions that you get on the futures side. And then trading hours, slight difference here. Again, these are very similar product offerings, but the trading hours you see in futures, you have that daily gap. Whereas in SpotFX, there is no gap. That is a roll period. So you'll see with those financing adjustments coming at the same time, you'll see wider spreads there. But if you absolutely had to get in and out of a position, you're able to do so during those hours. and open 1 hour earlier on Sunday nights. And so, with there's also an aspect of global participants here, but you can see that through the institutional players involved. That'll be pretty similar. I don't know if there's a way to get those numbers to say like, TastyFX is able to have tighter spreads on Sunday night because of whatever hedging arrangements they have versus the futures products. So that might be marginal. But then moving on to the main thing that helps you guys trade small and trade often.
Yes.
The position sizing and capital efficiency here, as you guys have poked around a ton with these products, starting with those micro lots or just 1,000 units of the base currency, which is very different from the futures offering, which are pretty, they're making new products. They could make a micro product, but
they have some micro futures. Like you can trade like micro euro, micro Aussie CAD, a lot of them, and they're a couple $100 margin requirement, but the size is significantly smaller.
Exactly, and to be able to layer into that incrementally, I think is a huge win here, especially when you factor in that no commission cost. When you're paying a commission and a spread, layering into a position, that starts to add up to your total P&L with fees. Whereas you're only paying the spread to get into these positions in the spot market. And then kind of a last bullet point of kind of ease of efficiency. There's a give and take here between the products because there are no expirations or making sure you're trading the right contract. There are no options on it, which is a complete value add for futures, having options on those products. And the futures for U.S. retail traders, they convert everything to where the U.S. dollar is the quote currency for all of them. So your fluctuating P&L is a little bit clearer to see, whereas here if you're trading dollar yen, you might see some yen values and not really have to do one step of conversion there, but everything is settled into US dollars, so no real difference there. And that's all I got for you with the key takeaways. Just comparing here why you'd want to trade currency futures perhaps or spot FX. Similar products, you see different pricing, which is the main thing. That's just a function of interest rate differentials. There's no real arbitrage here. It's going somewhere. And then some of those commission aspects and expiration entanglement. That's all I got for you today, guys.
Do you find that, just anecdotally, that customers trade these side by side? Because one of the benefits of both futures and FX products is the leverage that you can get. And you're trading relatively, from a volatility perspective, low volatility products. So, they can certainly have big moves, and they have over the last, year or so. But do you find that some customers will, like buy spot and sell vol, like sell calls, like almost like a covered call type arrangement, because you can get so much more leverage with the long spot position, along with the span margin of like a call or a call spread, which can be very significant. Do you find that is a piece of the puzzle?
Yeah, I'd say absolutely that people that are trading both of these products are most likely looking into the options and futures space as well, because they are so comparable from just taking directional sides of things. And then even the other way of someone that's mainly a futures trader would perhaps go into spot for if they're trading options and can't really get at those throughout all hours of the night. So a possible hedge in the spot market where you have the liquidity and access to manage those positions overnight, because you have, if you're trading dollar yen, their markets are almost, there's no overlap with our markets. So here in the U.S.
Yeah, I think for me, I like to use both products. I like to use the future side of things if I'm doing options trades, specifically diagonal spreads, calendar spreads, things like that, where you can get that implied volatility component, especially if there's a binary event priced into some expiration, where you can utilize that higher extrinsic value premium to reduce cost basis against a long option, like in the case of a diagonal spread in 6J or calendar spread, that type of thing. But I really do love the TastyFX products, especially in an environment like this where we like come onto the air and we're just like, well, the market's up again. Like, where do we find opportunity? There's so many opportunities day to day in the TastyFX products because you have complete removal of the equity market ultimately. And you have all these different pairs that I would have never traded before without you being on the show and telling us what they are. So I think from a finding opportunities, finding price extremes standpoint, it's way easier to find day-to-day price extremes in the TastyFX world versus the more limited currency pairs that we have in the futures world. So different reasons to use both, but that's my take on it.
Eloquently put, sir.
Hey, we try.
Very good, very good. Before we let you go, any other pair that is interesting to you? That I'm looking at something like maybe the New Zealand dollar, very, very weak.
Yeah, New Zealand dollar and historically, you know, a bit more volatile than Australian dollar with some of the same exposure or underlying factors. So I think you could think about it two ways here of, you know, that's coming off of a high, a relative high, you know, off of that U.S. dollar weakness we had before the FOMC event. Yeah. But, oh yeah, there it is, right at the bottom of this range. So if you're looking at a daily chart, now you're really looking at that 58-cent level because we've been lower before, certainly, in the early part of this year, as low as 55 cents. But we tested it in early August, mid-August, and had a rip all the way up to 60 cents. So if you're a range trader, this definitely is interesting, more so than the Australian dollar, which is kind of getting back to the middle of it.
Yeah, I just took that one off.
Yeah.
All right, so we're gonna buy a little. We're gonna buy it, even though it's short dollar. But I have a lot of long dollar positions. So
maybe a different time horizon.
Yes.
Going for a little.
Yeah. All right.
Scalp.
Yes. Very nice, Glenn. Thank you so much for joining us. As always, it's always fun to have you on.
Pleasure to be here.
You are a gentleman and a scholar. We give you our greatest applause. Thank you, sir.
I'm going to go check my fantasy lineups today.
For sure. And enjoy the ribs.
Thank you.
The hubs today. Very nice.
I hope there's still some in 25 minutes. I really.
Probably not, but we appreciate it. Thank you.
There will not be. But there will be are the potato wedges.
Yep.
Yes.
Are just
solid.
I really like the hummus. I like the chunkiness.
Oh, yeah. There's something about it. You taste it and you're like, oh, it's so plain. I don't really like it. And then you're like, I can't stop eating.
Yeah, I like the graininess.
Yeah, it's like the peanut butter, you know, like a creamy peanut butter versus the chunky peanut butter.
Yeah, you gotta go chunky.
Just something about it.
Yeah, it's very
texture.
Special.
Yeah,
really delicious.
It's like his jardiniere. It's nice and crunchy, you know. The beautiful olive oil.
The it factor.
Yeah.
All right. See you guys in the lunch line.
We bid you farewell. Thank you, sir.
Ta-ta for now.
Ta-ta for now. E-mini S&P 500 futures down 24. They've rallied about 10 handles from the open of our session here. A little bit of a bid there. Bitcoin up 2,000.
Love to see
on the
it.
futures. So a little bit of a bid there as well.
Yeah. And by the way, shout out Mr. Westwater. Smash. Everything we put on yesterday was a smash.
Yes.
The micro natty gas position, I still have.
I still have that as well.
But the HE, the lean hog short, that came in after one day, $150 winner overnight. That was perfect. And then I also closed my micro crude long for $211. That was another nice winner into this rip today.
I'm going to see if I can close out of that one for... Oh, I have this in. See if I take $100 out of that.
Yeah.
We'll see. We'll just let that sit. But yes, Natty Gas having a little bit of a bid. Been a nice little session here.
Indeed.
Yes. Got questions? Throw them in the YouTube chat.
Please.
Do it.
Please do it.
Yes.
I've got the Cherry Picks newsletter pinned to the top of the YouTube chat.
A good one. On gold, silver. Very nice. Well done by The good doctor himself.
The good doc. The good doc. Yes, gold seeing a nice little sell-off today. Finally, too late for my butterfly position, but I do have that GLD put diagonal, the long-term one. So hopefully the sell-off continues here. We can erase some of those losses with this new position. But yeah, insane move regardless.
Yeah, crazy.
If you want to join us on the YouTube channel, like Nick said, Tasty Live, we're streaming live there. Pop in your trade ideas questions along the right-hand side chat. I see lots of regulars chatting away. But yeah, let's scan for some trade ideas here. This is now the lowest amount of positions I've had in quite some time. So let's get some new stuff.
Yeah, let's do it.
UNH on the move. Yeah. Yeah, market down, UNH up. Second day in a row. Love to see it. We just need to pierce through this this little upper bound here. But yeah, I have the 400 strike calendar spread that's working out nicely. It's up 120 bucks today. Long the 400 call in November, short the 400 in October. Lost a lot of value in the October call, which is great. And I can roll into the earnings cycle when the time comes, which is very nice. So I'm going to leave that on, see if we get a move to 400. I'll close it if we get to 400. If not, I'll roll the short into the earnings cycle and probably create a diagonal spread. But we'll see what the premiums are like at that point if we don't get there before then. Let's see.
Yes.
What was the thing Nick was saying on repeat? People were taking a drink every time?
A nothing burger. Drink.
The nothing burger drink special.
Yes.
UAL strangle, 91.15 from Shooter McGavin.
91.15. November or OC? Do we have an
October.
I kind of like going to OC. 91.15. $1,000. Kind of like this. 90 down near the 200-day moving average. Shout out to Ryan for putting that on for us. What do we got delta-wise? Let's see what we're sitting at. About a 1 standard deviation, slightly short delta skewed. Don't mind this. Markets are not as good as I am used to here. Is there, oh, we got volume on there.
Yeah, 15, 20 cents wide. Interesting.
Yeah.
Looks like the earnings are being priced into this cycle. Not confirmed yet, but implied volatility spikes at the 23-day. Yeah, I'm gonna wait on this until earnings since it's less than a month away. But I will definitely trade United for earnings. That is for sure.
Yeah, these markets not great. Giving up 10 cents already. All right.
You're in.
317. Give it a little shot. Why not?
Costco crab for earnings with the 1,000 strike call in November.
November. So you would go like 1,000 strike call in November, and then you want to do it in the weekly, right? What do we got? Is it today? Tomorrow. So this one's going to be a tough one. This is going to be a tough one with the 1,000 strike. You really kind of got to go 975 and then sell the thousands. But that's a little bit more expensive. Like November and the 975, you pay up another $1,000. It's a little too big for my liking.
Yeah. I think they were looking at November.
Oh, so November or October? I mean, you gotta.
It looks like long the 1,000 in November and then short premium in a near-term cycle.
Yeah, you could do like in October. So the 52-week high is 1078. So if you wanted to go to like, 1025 or 1050, you could do this a little bit further out. 1050, 1100. You're selling like $4.5, $5 of extrinsic value here.
Yeah.
This one's a little bit more digestible in terms of like the capital that you're outlaying for this sort of trade.
Yeah. And if you go to the October monthly for the shorts, if you do a similar exercise, you can bring it under $1,000 for sure.
Yeah.
But you don't get the instant decay in the 2-day cycle. So I think I'm probably going to lean towards a calendar spread in Costco. Similar idea.
Okay.
Very similar idea. Long November, short October, but I'm going to wait until tomorrow.
Been quite the chop fest.
Yeah.
Here. It's kind of been the lower end of where it's traded, so might be an interesting time to get long.
Mm-hmm.
I like it.
Have you guys ever sold put butterflies? What do you think about them?
Sold?
Sold. We don't usually sell butterflies.
Yeah.
But I mean, it's just the inverse of what you want to happen.
Yeah. So
you want big in the money or big out of the money.
Yes.
For small credit.
Yes. So it's a tail type trade.
Yeah.
I mean, selling them, it looks, you're selling this for credit. So, if the stock or I just pulled this up in IWM, you're playing for the outside move in either direction. So it's still a very, it's a high probability trade, but a low upside trade.
Yeah. Yeah. What we usually do to kind of mimic this is we would do a broken wing butterfly where we have risk on one side.
Yeah.
And that gives us a similar profile in the out of the money side, where if it expires out of the money, everything's fine. But instead of your tent between your strikes being a big loss, this is a big potential gain.
Yeah.
And if you if you throw this on and then you see an IWM rally and you can remove the risk on the downside by turning this into a symmetrical butterfly for, let's say, like 10, 20 cents, now all of a sudden you have a butterfly on with no buying power requirement, no monetary risk if you've routed it for net credit, or minimal risk, and you're legging into these shots. Sometimes they work, sometimes they don't, but I think we would prefer this just because there's more upside with this one.
Yeah.
How about a little short delta in Tesla? Tesla.
You've been saying that because of the Detroit guy.
Yeah. Detroit.
So I do have a butterfly here on the upside, up to 500-ish. Let's see, where are we at in November?
A little short delta.
I mean, how high could this get?
That's the age-old question. Stock went from cratering due to declining sales to $20 spread with a 520 short strike. Yeah, I mean, stock is insane. 520 short strike.
In November?
Doesn't say. Let's see.
Yeah.
Have a $20 spread with 520. Okay, so a 520, 540 call spread, I assume. Yeah, I think it's November. It's got to be.
It's a little bit.
It's cheap. It's really cheap.
I know it's far out of the money. It's a 25% rally.
Yeah, but the call skew here really hurts you.
Yeah.
With this type of spread.
Yeah.
Because you're buying the option that's worth $1,400, 100 points out of the money. Where if you look at the other side, it's trading for $7. So you have a huge call skew here, which is why you're not collecting a lot for this credit spread. So I think if you're doing a bearish type trade, I think you got to find a different strategy that aligns more with the premium.
You could do a downside stupid trade.
You could do a downside stupid.
Or you sell this to buy at the money or slightly out of the money long put spread.
Yeah. Yeah, because you don't, with this type of setup, the 520, 540, for you to only collect $3 over 60 days, it's just not going to move that much. Whereas if you give up that credit and you shift your profit potential to a 10-point wide debit spread or a 5-point wide.
I put one for a 5-point wide. You do it for $1.
Yeah. This is if you get a sell-off, this will fill up quickly because now your put spread will appreciate in value while your short call spread loses a little bit of value. That's what I did in Intel. I had the stupid on an Intel, and I closed it for a $100 net profit. But if you isolated the short put value, it was only like 40 cents. So that just it shows how you can shift where your profit potential happens. But yeah, I like this a lot better if you're going to do it. Struggling to get out of a butterfly, is it better to just close the spread separately or just walk down the price for the whole butterfly? Yeah, I mean, you could walk it down to try and get out, but yeah, if you isolate the spreads, it's the same idea.
Yeah. It depends on where, like if you're fully in the money or if it's an out of the money spread and how much time you have left. Like the two things I would look for is firstly, if it's at the money or a portion of it is out of the money, the long option that is far out of the money, make sure it's got a bid on it. So, when you don't have a bid on these options, like I just pulled up IWM a couple days out, 255, if you have a long option here, you're not going to be able to sell out of this option. There's no bid. There's no price to sell at. So just remove that option from the order. If you're still having issues there, like assuming it's an at the money or in the money spread, you could leg out of the spreads themselves. I would do the long spread first and then buy back the short spread.
Yep.
But if you give us the position, we can pull it up and give you a little bit better clarification.
How's about a trade idea in applied digital, APLD? I am super bullish. Well, hopefully you were bullish 2 weeks ago as well. I mean, the smaller the price stock, the less crazy we're going to get with strategy, because there's not much difference between selling a put or buying a call. It's just like it's a cheap way to get involved in this thing. However, there is plenty of premium here, like a lot. If you were trying to sell premium, this could be a stupid candidate for sure. Like selling a 20 strike put in November and buying a 25-30 call spread in October, something like that. Still picking up $1.30. You have 5 points of profit potential to the upside with the vertical spread that you're buying. It's possible.
I will entertain this with a sort of broken wing butterfly. I'm going to pay a small debit for it on the upside, but it's wide. So I'm going to do 25, 30, and then I'm going to buy the 37. And the only reason I'm going to the 37 is because the markets are so much better than this 38. Like, I think these are going to basically trade at the same price or similar. And so I'm going to use $200 in buying power plus the 40 some odd cents. I'm going to be bullish, but defined risk and cheap.
Love it.
So we'll see if I can get filled. We've done these sort of, oh, there you go, auto. We've done these sort of trades in a lot of these like super high flying stocks. We did the CoreWeave one. You had a good one in Circle.
Yeah.
Like this is because I can't look at this chart and sell puts.
No,
I just can't do it. Like it's just not. I'm with you, and I want you to make money. So I'm bullish for you, with you, but I can't sell the puts.
I think it's fair. I mean,
it's a way to kind of
you have a stock that has over 100% IV. Butterflies make a lot of sense because you can make them super wide relative to the stock price.
Yes.
And you can only do that because the IV is 150%.
Yes.
And you define your risk at the same time, blah, 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 blah.
Yes.
So, yeah, these can work out well, and it's a low cost to to play. What's the stupid trade? So I'll stop calling it the stupid.
Yeah.
It's literally it's just financing a debit trade with a short option.
Yes.
So in this case, selling a put to finance the cost of a long call debit spread.
Oh, okay.
Yeah, but in any situation, like I had, if you look at the follow page on Tasty Trade, you can see my Intel trade that I closed this morning. That was selling a 30 put in November and buying a 30-35 call spread in October, and I did that for a credit. So just shifting where you get your profit potential.
Yeah.
Another environment I like to do that in is previously before rates were, maybe rates are coming down, so you'll see less call skew in SPY. But you could sell a put in SPY way further out of the money and then buy a closer at the money call and route that for a net credit. It's a similar idea where you're financing the cost of your gamma in a long call, but having a high probability trade still because you have a net credit on.
Yes.
So any trade where you're financing the cost entirely of a debit long option or long spread with the sale of a short option instantly turns it from a low probability trade or a 50-50 shot into a much higher probability trade, but you're adding more risk. So that's the trade-off there.
Yep.
In what case would you take a diagonal instead of a butterfly? And at what point do you take your profits? Diagonal is really directional. We like diagonals in earnings environments, high IV environments, low IV environments.
Cost. A lot more expensive. Versus butterfly.
Totally. Yeah, a lot more costs, but usually higher profit potential, and you can get it more quickly because it's truly directional. Where a butterfly is more conditional, where you need a lot of time to pass, you need IV to get out of the premium, or you need extrinsic value to come out of the premium, which comes with an IV crush or time decay, and you need the stock to be in a specific range. So depends on the stock. Like if it's a super high flyer like APLD with 150% IV, maybe we go the butterfly route. If it's something like Starbucks and it's at the low of its 3-year range, that's a diagonal spread for me.
Because you want the delta. You want to get the move. You want to play for the move. This is, this sort of trade is also a long vol trade because you have you're playing for a big move up.
Yep.
That's where the meat is of this trade.
And when we take profits, diagonal spreads, we usually just close them when they move in the money.
Yeah.
And then for butterflies, we usually try and take 20-25% of the max profit of it. Because you're not going to get more than that unless you're at expiration and you got the stock price pinned. I have an MU strangle that went inverted. October, 140, 167.5.
140 call. This was, you were right at the money into earnings, and we opened a perfect spot for you. This is a perfect spot for you too. I know that you're in the money now on the call or on both options, but this is where you want the stock to be. Yeah. Got a lot of time left until expiration. You got $6 of extrinsic value here, $6.50. If you're neutral, I might just hold the stock or hold the position.
Yeah. This is basically a strangle. It's the same thing as having a strangle if you just flip the strikes.
Yeah.
You still have a lot of extrinsic value to decay, so I agree.
This is what you'll get.
Yeah.
Over in value back.
Yeah. But yeah, if you are trying to massage this position through time, I would still probably wait and see if you can get some of that value out of the short premium near term. And then if you do, you could roll it out from October to November. You can minimize the inversion a little bit. I'm looking at just moving that current one into November. You can move it into a 150, 165, which removes 10 points, 12.5 points of inversion.
Yeah.
For a small debit. That's what we're trying to do here if we're trying to stay in this trade.
Or you go out of the money. You sell, you buy back your inverted position and sell out a new strangle. Doing this for a $23 debit seems like a lot. It is, but there's $27.50 of intrinsic value on this position because it's inverted by 27.5 points. So you're really, when you're looking at this position in terms of value that you are adding to your potential, in terms of value you can capture, you're actually adding, $4. Yeah. $4.50 in the roll, and you could see that in the extrinsic value. So when we looked at the inverted position, and this is just the math on it, the extrinsic value here is $5 on the put, $1.50 on the call. So you got $6.50 in extrinsic value that you're buying. Here you are selling $4 and $7, so you're selling $11 in extrinsic value. So you're really netting $5 of potential value out of this position, even though it's a debit. The debit is the inversion, which does not go away. That's intrinsic value. It's not going away.
Yeah.
So you are adding potential value to your position.
Yeah. And you can see that in the extrinsic.
Yep.
You just ignore the debit costs or whatever. Look at the extrinsic shift from the move, and you can see what you're doing. Yep. Rapid fire here. What do you feel about MU 145, 190? I like it. I think it's fine.
Wish I held my earnings trade.
Yeah.
See what it will. Yeah,
when we
missed
called
out
it
on
to a
$200.
Inside down. That's what you said.
I know. It was slightly down. It's always like this.
Yeah.
I feel like every time
every single time, 68% of the time, every time.
That's true.
How about a short put spread in Amazon?
Yeah, Amazon getting killed today, or has been killed over the last couple sessions. What do we think, yeah?
Short put spread? I like the defined risk nature of it. You kind of have to go like within the expected move though to get any kind of value. But if that's what you want to do,
I think
it's fine.
We're gonna get some long delta here. 230. Do a little crab trade here. $7. Yeah, that's what we're gonna do.
Last one here. Couple more actually. Would you sell a straddle in applied materials?
No.
Or applied digital? No. I mean,
I don't know anything about this company either.
Yeah.
This could be,
It looks nice because you're collecting $7 on a $23 stock, but there is a reason why you are collecting $7 on a $23 stock.
Yeah.
It's telling you that this stock is projected to go double or triple or zero.
Yeah.
So, and that's what over 100% IV tells you.
Yeah.
Oclo strangle 165, 100. If it's a true strangle, it does suck, but you're still out of the money. So
what is it? 100?
100, 165. If this is a regular strangle, 100, 165. Yeah. So yeah, you were leaning, you had the range basically. It's just implied volatility's exploded in here. If it's a regular strangle though, 100, 165, you just need this thing to decay. I wouldn't do much with it. You're already in November.
Yep.
That's it.
Cool.
Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Nick is at Trader Nicky Bat. If you want to reach Glenn, go bother him on Twitter. Glenn Frybarger with an A. Love to have him on. Love getting some new Tasty FX positions on. And yeah, it's just another way that we can utilize the markets, find new opportunities, et cetera, et cetera. But yeah, stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned, and we will see you same time, same place, 11 a.m. Central tomorrow. Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
I am a self-taught retail trader. I didn't go to school for finance, and it's not necessary to be successful in this industry. All it takes is a little bit of dedication and a lot of time to learn the lingo and learn the strategies. So standard deviation is basically just the probability of being in the money or out of the money. So one standard deviation with options is going to be probability of 16% being in the money on one side and 16% on the other side. So if you take those two together, you have a 68% range in that spectrum. So that would be one standard deviation. If you just focus on a couple of core key concepts and go from there, it will allow you to educate yourself and propel yourself through the options trading system.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
And welcome back to another wonderful installment of Risk and Reward. Errol and I have our matching white T-shirts on today. We did not coordinate this, but we're looking sharp, looking fresh for a Friday. Nothing wrong with a white T-shirt. Errol, how are we feeling today? What's going on? End of the week, we actually got a little bit of a run up into the end of the week, which is not what I was expecting here. Yeah. But how are we feeling?
I'm feeling clean. That's exactly how I'm feeling right now with the white tees. I know we had walked in and I was like, yo, great minds think alike. But no, I mean, it's good. It's a Friday. It was a pretty crazy week. A lot of volatility, kind of ripping into the close here, but can't complain. I mean, we've got a lot of opportunities and more opportunities for some more volatility to kick into the market. I'm excited for next week. And go from there. I mean, UNH, still kind of waiting on that one, but that's been on the back burner.
It is definitely on the back burner. That's a longer term one for me. Yeah, a little bit of pullback going on there. I mean, I'm very pleased with the move up today. I was kind of expecting one more down day and then maybe a move up into the beginning of next week. But if we're going to move up sooner, that's fine. I did some pretty aggressive dip buying yesterday and these past 2 days because it feels like dips are such an anomaly in this market. You guys know my philosophy on until proven otherwise, and it seems like we may still be waiting to be proven otherwise on this bull market. So my Accenture position in particular that I threw on yesterday is my highest earner in the portfolio today. Feeling good about that.
That was Accenture?
Yeah, Accenture, ACN. That was another. I swear I win so many of these trades that are just total brain dead, giant gap after earnings, trade the other direction. I don't even need to know what the company is or does or what's going on. They just tend to work out. So, feeling pretty good about that. I do know what Accenture is and what they do, but that's beside the point. That one's been going well for me. Here, I'll tell you something funny. I was listening to Johnny Cash on my way over here today, as I do from time to time, and Johnny Cash is so thematically similar to modern rap music. It's really funny to me.
Okay, what made you come to that?
Well, I mean, I've had this for a long time. This wasn't some revelation I had driving over today. This is a statement I've been making to my friends for some time. But like, if you listen to Folsom Prison Blues, like, that song could just be a rap song. If you threw it over a beat and took a different cadence with the lyrics, it straight up just could be a rap song. I shot a man in Reno just to watch him die. The whole song is about him being locked up, and he's upset that he committed this crime, and he's watching the trains go by and watching his life go by, and he just wants to get out of jail and get out of town. And man, I mean, it's like you listen to How It Go by King Von, and it's like the exact same. It's thematically the exact same. So I'll float that one out there. I like to keep the music taste diverse, but
no, I like that.
Johnny Cash's whole discography, it's just music about killing people and having his heart broken, and it's like
I do appreciate that because I appreciate connections that are very abstract, connections that you're like, oh, I never thought about it that way.
Yeah,
I kind of see the connection there.
I mean, it's called outlaw country these days. It's kind of how we would class that, and so it is just like outlaw. It all kind of ties in there. Yeah. But I think it's funny how many shared themes there are between those two artists or two genres that you would think are very far apart.
It is a lot of similarities there.
Wish I had a great analogy to roll this into in the stock market. I don't. If you guys are waiting on that, but I just it's just what's on my mind.
No, yeah, we can get into the charts here a little bit as we roll into things. Market sold off this morning. We're rallying back. I mean, I had a few opportunities this week. I got a few opportunities today. We can hop over to the other platform over here, but I got chopped up a little bit this morning, so I want to talk a little bit about that. This morning, we were consolidating at the highs. I was looking for a short. I was looking to manage my risk. Got chopped up a couple times. And then we're in a long entry right now, so we're able to capitalize on that. But
You're telling me that these blue and black candles got worse, that you've started doing the Nick Batista open and close candles on me? Is that what I'm looking at here?
So the other days when I switched the charts back to the blue and black candles, I was trying to figure out how to get the blue candles hollow, and then I finally figured it out. I think it's way more clean.
I guess these are all hollow. Yes, I will say this does make them much easier to differentiate because blue and black are very close colors.
Very dark.
Yeah, I give you a hard time about that. This does look a lot better, but no, this isn't the full Nick Batista one. I don't know exactly which way his charts work, but he has a thing such that the candle is filled if it opens lower and goes higher, or it's something. I forget the exact nature of how his charts work. Maybe somebody could fill me in if you guys know. But the candles are either filled or hollow based on the actual price action within that candle. And every time I look at one of his charts, I'm like, what the hell is going on here? He's explained it to me like 3 times. It's not his fault, but
no, I feel different strokes for different folks.
Yeah. But I like this. This is an improvement.
It looks cleaner, right?
This is an
easier
improvement.
on the eyes.
Yes,
okay.
I will give you that.
One thing to point out here too, I just got to say I'm using a mouse, right, with the little scroller on the mouse. Whenever I go down, it zooms in the other way from what I'm used to. So if you see me like I don't know how to use this technology, it's because I'm literally scrolling on the mouse the opposite direction that I'm used to.
Oh, and also we must point out that there is in fact no way to draw on this chart. And I see that the paintbrush, does it work now? Okay. The other day when Errol was not able to draw on these charts, we confirmed after the show that he was just missing the button for some reason. We thought he was insane. He was not.
Sometimes I'll look at things later and then I'll see it. I was like, was I overlooking that in the moment? I was like, maybe that was a time where I was doing that.
We pulled up the tape. We went back and looked at the tape, and the button was missing, but it is here now, so we can do some drawing.
Oh yeah. These are some of the levels that we were looking at this week. We popped up in the morning. Whoops, let me take that drawing tool back off. But there we go. We had popped up in the morning, and we were looking at this lower level of value, which is all it is a one standard deviation kind of level. That's all this is. But I was looking to get short.
That's the shaded level there?
Yeah, that shaded level, that's the value area. That's that one standard deviation. So to me, whenever I see the market pop back up into that lower area, which the VAL or the value area low, we could just keep in mind that the value area is just going to be that one standard deviation, the top of the bell curve. This just represents, again, where most of the trading activity occurred last week, actually. So a lot of this data was actually specifically taken from last week. I should just give a little bit more context. But this is where a lot of the trading activity occurred last week. That's why we can kind of see price at least acknowledge the level. And the way we can kind of see that is just we can see the wicks off the level. Like price is at least acknowledging that this level exists right there. At first, I thought my positions were going off. But we have one live position on right here. I thought this would be off before we hopped on stream. I wasn't sure if we were going to have to cut this for a loss, manage our positions. But I'm going to put in my stop loss while we're on here. I'm going to put this in at break even. So I'm just going to right click over here, and then I'm going to go to sell stop. So if the apocalypse happens for some reason, or if Gus sells off his portfolio, it'll stop me out right here, and I won't have to lose any money on the position since we ran away from the original entry price. But just right off the bat, this is going to be the value area low. I think we're good to go from there. But that's just why it was an area of interest. Just wanted to see how price was going to respond off that level. I got short a couple times, managed my risk, added to the position, managed my risk again, and then you can see it just did me dirty. You can see we popped up, managed my risk, and then we sell off, getting the move that you were looking for. And sometimes that's just the reality of trading sometimes, right? Stops you out of your position, and then maybe the next day or the next few minutes you get the move you're looking for. Has that ever happened to you? You've been in a position like that?
Oh, certainly.
And it's like, bruh, manage my risk the next day, whatever it might be.
Yeah, and that is the whole nuance of stop losses in general, right? Is will this position happen to return to my original conviction after I get stopped out? But it's so easy to get FOMO, and that you just got to rely on the fact that 99% of the time you're
right.
You can't. To me at least, it's more dangerous if you find yourself getting FOMO when you did good risk management and then things went against you, rather than being, say not entering a position and then it does really well and you get FOMO on that side. Both of those things are not necessarily too bad. You have to always just be happy that you manage your risk with the available information that you had.
100%.
And because just as easily, say this thing goes down, stops you out, shoots all the way to the bottom of this one standard deviation range, and then just for some reason rockets back up in 10 minutes up into the higher the standard deviation to the high side. That would obviously suck, but at the same time, it's like, how bad can you really feel about that?
100%.
You traded what you could on the information that you had available. It could have easily just gone 1,000 points lower.
Exactly.
So,
or that could have ripped against me 500 points. I'm like, I could have managed my risk right there.
Absolutely.
But it's like that bittersweet feeling sometimes. Again, especially because you just took 2-3 losses in a row, and then the market rips to the downside after you get stopped out 3 times in a row. That can be frustrating in the moment sometimes. And sometimes it can take a lot to just like, let me chill. Let me just step back. Let me not chase this move to the downside. And then it reaches all the way to your target. And you're like, we'll wait for the next opportunity. But that's pretty much what happened this morning. We sold off to the downside. We started a trade on another level that we were looking at. I was able to get long here. I was totally fine with stopping out. I would have stopped out if we made another new low on the day. This one ended up panning out pretty well. I had to hold this one through lunchtime. I hate holding through lunch. But anyways, we ended up ripping to the upside. Now we're trading at that value area low again. We can get into more of the details here in a moment. But I'm also looking at taking this position off potentially just because this can keep running, but because we're at that value area low, I now understand it's more of a gamble to hold this to higher levels. So if I had more contracts on, I'd probably start scaling out here. But because I only have one on right here, I'm going to get out. Just because, again, it's becoming more of a gamble because we return to that 1 standard deviation level. So I'm going to exit that right now.
For sure. And and if we could, I'll take a little aside here, but if we could jump over to my monitor real quick in this little chart that I have open over here, I feel like this is a good thing to outline in the context of standard deviations and why we care so much about standard deviations. This is one of my favorite rules in all of statistics, is the 68, 95, 99.7 rule. And all that it says is that in a normal distribution, 68% of the data will be contained within 1 standard deviation of the mean, 95% of the data will be contained within 2 standard deviations of the mean, and 99.7% of the data will be contained within 3 standard deviations of the mean. So when we talk about standard deviations and why it becomes dangerous when a stock gets a standard deviation above the mean, which is usually just the open price for the day, it's because we know that 68% of the time it's going to stay within 1 standard deviation to the upside and 1 standard deviation to the downside, and that 95% of the time it's going to stay within 2 standard deviations. So what Errol is alluding to here is that as you start to get into that upper value area and you get over 1 standard deviation away from the mean, you continue to push your luck. As soon as we get over 1 standard deviation, we're talking about a day that is that'll only happen 32% of the time.
Right.
And if we get 2 standard deviations up, that's a day that's only going to happen 5% of the time.
Right.
And so you have to manage your risk according to that. Anyway, we can kick back over to Errol.
No,
I wanted to touch on that real
Thanks for
quick.
elaborating. Very well said. 100%. I think giving us that visual of the distribution helps us visualize what that looks like a little bit more, but 100%. And it's like, even with that 2 standard deviation, when we get away from the mean, it's like still fine with taking a loss on those type of setups, but it's like I'd rather put myself in more of a high probable situation, and it's like I'm fine taking a loss if that's going to be the outcome.
Yes. Yeah, absolutely. And that's all we do here at Tasty, right? Is just trade small, trade often, and play the law of large numbers, and trust that the math is going to be right the majority of the time, which it
100%.
is.
And I know that's really, I think that's what can be really difficult to wrap your mind around, especially first getting into the market, is the law of large numbers and just accepting what the outcome is going to look like after a span of 20, 30, 40, 50, 100 trades, having that type of sample size, because you have to like switch that mentality, right? We have to think more in a probabilistic mindset. So we can't put too much weight on one green trade, and we can't put too much weight on one red trade, because we really need to see how the green and red trades are going to play off of each other in the law of large numbers at the end of the month, a year, whatever the case might be. Right?
Absolutely. And I would throw out as well, anytime you hear anybody talk about tail risk, that's what we're talking about, is the tail ends of this distribution, the green parts in this diagram that we're looking at here, which are the very fringe outcomes that do happen 0.3% of the time, but are rare. But you always have to be prepared for the reality that tail risk comes to fruition. 0.3% of the time is like roughly 1 out of 300 times. Right. And if you make 5 trades a day, you're going to catch tail risk once every 60 days, absolutely, mathematically speaking.
Right. And I think also, right, one thing I think is important to bring up too is like, I think some of the best way to manage your emotions is to manage your expectations. And I think by doing exactly what you just said gives you the ability to at least foresee those expectations a little bit and be able to manage that emotion better.
Absolutely. And it's also a great way to decide how you're going to manage once you're already in a trade. You know, are we and you know, say something's really bleeding on you and you're hurting, but you can look at this and say, okay, well, what kind of situation are we in here? Are we outside of 1 standard deviation? Are we starting to push more towards this being a 5% occurrence, which means perhaps I should hold it a little bit longer and things should rebound and regress towards the mean? Or am I getting pulverized, but we're not even 1 standard deviation from the mean? This is a very likely outcome, and I should just get the hell out.
100%. That logic and reasoning are really helpful for that. this long earlier, or later in the day down here, this long. Again, this trade played out really well, and it's
can we go back over to Errol's screen?
Oh yeah,
Sorry.
We can jump over now. Thanks for that. This long that we took right before lunch, and we just exited now. It's cool that this panned out, so we have a pretty cool example to go over. But in hindsight, you have no clue that it was going to pan out this way. You were just prepared to stop out and manage your risk if you needed to. And because there was only one contract on, that's why we initially had this line over here, which we'll talk about swing points another time. But if you have entries beneath this, it's like levels like here is really great to start scaling out from. Because, I mean, we could have absolutely reversed back down to our entry from here, maybe even made new day lows. You just really don't know what the market's going to give you. That's why managing your position in live time can be so difficult, because it really does come down to the execution and your logic and reasoning in the moment. But depending on the amount of contracts that you have on a trade too, will kind of give you a separate game plan on how you would manage that, essentially. But those are the trades for today. We just sold our last position. We could have held it longer. Maybe we go to the day highs. Maybe we go to the pre-market highs. Maybe we bottomed already, and maybe that would have been a great entry to hold longer. But, you know, with one contract on, it wouldn't make too much sense to potentially give back all of those gains because there's nothing to scale out from. But those were the trades for today. And then I'm going to go back to just Monday a little bit just to see how price responded off of some of these value areas throughout the week. Because the one thing I want to emphasize too is if somebody's trading futures and you want a little bit more direction, these levels with standard deviations are static the entire week. So we're going to go back and just see how price responded, because I don't really like the just moving things around as the week goes. It's like after the week is said and done, how did things play out, and will you have confidence to trade off of some of these levels that we get from data and statistics, which is just a bell curve. So I don't know if you've ever seen, but when I first learned about bell curves and standard deviations, I learned it in a way where they were like, these type of behaviors and standard deviations are everywhere. And one of the first examples that I saw was the weight rack.
Oh, sure.
You put the pin in the weights that you want, and you can kind of see the bell curve on the weights. And it's kind of fascinating to see how standard deviation plays out everywhere. You
Absolutely,
notice the same thing, right?
Yeah, I absolutely noticed that in the gym. Another example I would throw out is a bike race. Anytime you look at a race of like actual like Tour de France people on cycles, you will see a bell curve where everybody is consolidated in the middle and it's this big gap. And then towards the front and the back, people just have the most optimal line on the very inside. And there's just a few people at the very front. That is like one of the most perfect examples for like a physical bell curve. Absolutely. Human behavior playing out in real time. And I'll throw out another one that's really funny is when we get Roost or Dave's Hot Chicken here for lunch.
Okay.
Yeah, when we order from Roost or Dave's Hot Chicken here for lunch, we get, for reference for everybody at home, we get a pretty much equal number of every level of spice, from no spice all the way up to insanity or whatever they call their highest spice level. Right. And people take those chicken sandwiches in a perfect normal distribution. Really? The mediums disappear first. It'll be empty in the middle, and then towards the tails with the no spice and the insanity, there's bigger piles. And I notice it every single time, and it's fascinating to me that those get snapped up in a normal distribution.
I'm never gonna not see it now when I go.
Yeah, absolutely. You can see it most clearly when we get Roost, and it's those cardboard boxes, and it's very uniform looking. And if you go like towards the end of the lunch period, all the mediums are gone. There's a few hots and a few milds, and then a lot of no spice and a lot of insanity. It's interesting.
Why do you think our human behavior plays out into distribution so well?
I mean, I think it's just. I think it's ultimately just law of large numbers.
Right. It seems like it's a lot.
Yeah. I mean, I think that in a statistically significant sample size, which the size of our office is pushing that envelope. I'm not sure. I mean, there's obviously ways to determine that with N values and Z scores and everything else, but not going to get into all that nuance. However, anytime you have a statistically significant sample size, I just think that in aggregate, in the context of what we're talking about, people can handle, on average, a medium amount of spice, and so therefore the mediums disappear first, and then people start, deviating out a little bit into the milds and the hots once the mediums are gone. And very few people can handle the insanity, and very few people want no spice at all.
It's just fascinating to see it play out time and time again. Even though we know it's a law, it's just like, how? How does this keep playing out? How?
Yeah.
And it's kind of the same thing whenever we see price. I'm telling you guys, too, like, value areas, standard deviations, it's not something that's gonna, go long off this level, yes, go short off this level, but I think it's one of those things where you do see the fascination of standard deviations and taking data and applying that with the trading activity that's going on in the market. It's another one of those things that it's fascinating, right? Execution takes time, but to just see it play out over and over again, just like with the dumbbells at the weight room or over here in the lunch line, it's just fascinating to see somehow those behaviors just play, and it's nothing new. It's like intriguing every time.
Yeah, and it's interesting. I mean, just all throughout history, these things hold up, and they hold up in non-human populations too. I mean, go ahead.
Data traders. I was just gonna say, maybe nobody wants a vegetarian chicken option. All right, so forget the bell curves. That's what's creating it. Of course, it's gonna empty out in the middle. No one wants the veggie option.
that is typically true. We usually do have vegetarian options around, and very few of them get eaten.
Yeah.
No hate to vegetarians at all.
Hey, no, yeah.
Make your own dietary choices. I don't care. Sign me up for an extra spicy chicken sando, says Money Wandering. You would be in the tail of our data set, Mr. Money, or Mrs. Money. I don't know. Human nature leads towards a normal distribution because the programmers of the simulation we are in designed it that way.
Okay, but programmers, simulation. If you believe in the programmer simulation, the universe, the rocks, crystals, God,
Son,
Father, and the Holy Spirit. No, I'm just kidding.
Reincarnation.
Yeah. Whatever you do believe in, I think it does have their imprint on it and why we see these things play out in whatever reason, whether that's the universe, astrology, God, whatever you believe in. Fascinating every time.
Well, yeah, and then holds up in non-human populations as well. You look at some kind of genetic trait in animals. You will see a normal distribution.
Laws of creation. It seems like maybe that's a better, because if it's just out of human behavior, I mean, the market is made up of human behavior. That's why we focus so much on the human behavior, because it's the transaction of all the orders. We create the market. But if we see that play out in realms outside of the human existence, then what does that say to standard deviation?
Well, I mean, I think it's just the laws of this. Kind of get into a psychological conversation here, but I think it's just the laws of data. I mean, I think that we as humans have created the numerical system in a way that makes the most sense to us. And so accordingly, because of how we quantify things, normal distributions tend to happen. I don't know. I don't know. It's all very interesting. I have a Mega Millions ticket, says Kimberly. Yeah, I saw 474 million on the Mega Millions. You want to get involved?
What is it? 170?
474 million.
474 million.
Mega Millions.
Hey, Kim, you such a real one. No.
500 mil is usually where I'll kind of start to think about maybe I want to get a ticket, and I will start buying tickets if it gets over $1 billion.
Yeah, like pot odds at that point.
Yeah, well, yeah, at a point I'm actually not sure what this point would be. You would need to do a lot of math, but I assume that at a point it actually just becomes plus EV to buy a lottery ticket.
Right, because the upside becomes so substantial. Yeah. I mean, it's like...
Yeah, it's like how many tickets...
Why would you not?
If every ticket's $1 a piece and the jackpot is $1 billion, you just need less than 1 billion tickets to be sold, and then you are mathematically profitable on that ticket, in theory.
Here in the chat... You're my buds. Yeah, no, definitely let us know.
Yeah.
Imagine we could just scratch it off right here.
Yeah, Kimberly, if you win, I'm sure there will be signs. All of a sudden, Kimberly's going to be like, yeah, I just got long a 200 lot of Apple 50 calls. I'm going to be like, what?
I was just going to be like, I got extra lock on the Chipotle bowl. Yesterday and today.
Yeah, extra guac.
With that being said, with that being said, this is the level that we were trading in at the beginning of the week. This also happened to be the first consolidation that we put in at all-time highs. And this was a short opportunity that we covered earlier in the week. I'm not sure why the executions aren't popping up here, but this is one where it was like, okay, we saw price start to trade outside of our level of value, so we understood that price could head into price discovery mode and go seek the next level of value, which we knew was down here at this price range, which gave us the confidence to cover our short down here. But seeing this in the morning and just thinking about from a live execution standpoint, especially trading at an all-time high, you don't know if the market's about to rip to another all-time high and stop you out. So it was one of those trades where you weren't really able to have as much conviction in and really size in more contracts, just because of the fact that in hindsight, yes, it's beautiful how it played out. But in hindsight, if you think about it, I mean, that's kind of scary. It looks like it could be just a little bit of a pullback before we again rip to another all-time highs. So sometimes in positions like that, when you just don't have as much confidence and conviction for a valid reason, it's like you don't have to avoid the trade, avoid it if you want to, but we could just size down. Sometimes we forget, just use wider contracts on the trade. If you don't have great clarity right now, but it's a specific setup that you might take, size in relative to your confidence or conviction level. I mean, trading at all-time highs too, it's not something that I would probably hammer in short, especially off of the potential first leg down, which we ended up getting. But that one was a little bit more clear just because we painted such a clear, narrow picture of the consolidation and value area for that all-time highs. Sometimes they just don't look this clean. I mean, this was like a perfect range that I was trading in. And you could even see after we produced that range. You can see we even used it as a level of support sometimes. And once we finally broke that, got some more acceptance, headed into price discovery mode to seek an older level of value. But all-time highs, that's another difficult one to trade, but also just conviction levels on the trade sometimes, right?
Yeah. Scaling your size with your conviction is very smart. And on the opposite side of that as well, if you are large or even just any position that is multiple contracts, you can always scale out of a profitable position as well. If you're thinking, oh well, I this is a good profit, like I'd like to take profits now, but what if this this could dump a lot further and I could make a lot more. You're allowed to just exit half and keep the other half.
But it's so tough sometimes in the moment. You're like, oh yeah, I can just manage this. Like, I don't have to sit all uncomfortable in this position. I could take off 50%. I could take off 75%.
Yeah, I'll throw out a funny one. Like in my personal experience, just this year is Bath & Body Works, which is a stock I've been bullish on for a long time. I had bought 4, maybe 15 calls or something like that some months ago. It doesn't really matter. I had 4 contracts, and then additionally I bought 20 shares. And so as it moved up and up and up, and my contracts printed, I scaled out of those contracts one at a time. So it was like one at 50%, one at 80%, one once at 2x, and then I had a flyer that I let run to like 150%. So obviously great trade. However, as I was scaling out of those, I never paid any attention to my shares. And then I exited the last one. Bath & Body Works had a bad earnings call, and now my shares have actually come all the way back down to break even.
Yeah.
And so I didn't scale out quite aggressively enough in that context, which is also a funny thing. So
it's also interesting too. It's like, we need reps and experience under our belts to know, I know how I'm going to manage this next time.
Yeah, absolutely.
So how else are you supposed to know that?
Yes, and looking back, it is so glaringly obvious. Right. Every time I exited one of those contracts, I should have been taking profits on 5 shares also. But I would have scaled out of the whole position at the same time.
And a lot of times you get a lot of questions like, how do you know when to do this? How did you know to do that? Personal experience, and you're like, I'm going to readjust for next time. It's like, you don't know what you don't know until...
Yeah, absolutely. Yeah, experience is the best teacher. Unfortunately, in this particular case, I have 20 shares, and in aggregate, I am down $5.90. So it's not like
it's Bath & Body Works, right?
Yeah, BBWI.
BBWI.
Yeah.
Got you.
Not to be confused with Build-A-Bear Workshop, just BBW.
Yeah. Honestly, I kind of miss some of those department stores. It's been a little while since I went to a nice Bath & Body Works.
It smells really good in there.
I bet it smells amazing in there. I do want some new body washes.
Yeah, I'm a big candle guy. I throw down on some candles, but
I've been out and down for the candles for like the last few weeks. I need some new ones.
Yeah.
You go anywhere specific for them?
No, I usually just do Amazon. I just buy the Woodwick, like the full hourglass, like big ones.
Candles can get pretty pricey.
Yeah, they are. I mean, they're like $30 a pop, but man, they last forever. I mean, I think they promise like 100 hours burn time, and they last a little longer.
About $30 a pop. I know some, depending on how nice you want to get with the candles. I mean, they can.
I always, when I buy a candle, like they always advertise the burn time on there, and so I always do a quick like cost per minute to make my house smell good sort of calculation in my brain. And the Woodwicks, it breaks down to like or per hour. I mean, in the Woodwicks, it breaks down to like 25 cents an hour. I'm paying to make my house smell good. And
I justify that?
That's justifiable. Yeah, I think so.
Yeah, 100%.
If you like, because if at any point you were like, hey, you can give me a quarter right now, and this room will smell awesome, I would be like, okay,
exactly,
sure,
I'm down.
Here you go.
Exactly.
So yeah.
We got that little bit of a sell-off earlier this week. We then sell off. What was this trade? This might have been one that was managed a little bit earlier. But I mean, really, the main takeaway from these levels, too, again, if you have a volume profile, you can throw those on there too, and we'll give an example of how we can use the volume profile to find some of these levels, so you can do that for yourself when you're trading some of these products. But really, the main takeaway is just the fact that if I zoom out here, you can see where most of the trade opportunities come in. They're always going to be around the edges of value, because around the edges of value is where the most important decisions are going to be made. This isn't to say that you're going to get the direction right every time, but usually you will be able to position yourself in a very favorable risk-to-reward position, because that is the level where the market's going to make really big decisions. You're either going to get stopped out pretty quickly, or you're going to catch a pretty decent run.
Well, absolutely. And in the context of the standard deviations that we were just talking about, if you are in the upside value range and you are going to place a trade to the downside, that means that we are outside of the 68% of the data set.
Right.
And so say we're, right on that line where there's 32% of the data on one side of us and 68% on the other side, you want to play the 68% side.
Right.
And if you do that enough times and manage your risk accordingly,
Exactly.
you're going to be profitable in the aggregate.
I know the other day we talked about balance versus imbalance. I want to tie these things together. So this top level, this is what we refer to as balance.
Dr. Data, excellent analysis of the cost per minute of candle burn time. I very much appreciate that. Data Trader said, I've been doing wax warmers, less risk of immolating myself. I have a wax burner also, but the wax burner is annoying to clean out. Anyway.
That is hilarious. Shout out to Dr. Data.
Yeah, Dr. Data, can we get research on this? Can I get a chart of
each brand
the diminishing marginal returns of candle burn time?
Exactly. That's funny. So tying back into some of the things we went over this last week was balance and imbalance, and how the market is always trading between those two states. We had a couple examples of how the market on this day in the beginning of the week was in imbalance mode, and that's synonymous with price discovery. So we know if we're trading outside of balance, the other state that we have the potential to shift into, if we're currently in balance, is going to be imbalance. And this is just a really good gauge to know whether we should be deploying range-bound strategies or directional strategies in the market. If I can spell.
This is brutal.
What do we got there?
There we go. No, I just meant you're typing.
No, that's
right.
Spelled right.
You got it.
Right, there we go.
6 times the charm.
There we go. So one thing that's really helpful was just understanding that whenever we're trading in balance, whenever we're trading out of balance, and really using those terms, I think just helps piece together the logic and reasoning behind a lot of the market.
Yeah, and to pull some other terms that we've thrown around recently we're talking about a passive market when we're in a state of balance generally, and an aggressive market when we're in a state of imbalance, generally speaking.
Yeah, 100%. I had a comment the other day. Somebody said, somebody made the point of, there's this other type of future strategy that's getting a little bit popular. It's a lot of rebranded auction market theory order flow terms. It's called ICT, but someone had mentioned a fair value gap. And a fair value gap is like a point in the market where there's like an imbalance where the market moves away from very quickly. And someone had said, I think they had said a fair value gap is not aggressive orders. And then I thought to myself, well, if a fair value gap is a specific candle that pushes away from a particular price level very quickly, leaving an inefficiency within that inside of that candlestick, if we really break it down, it would be aggressive orders that do move the market and create these type of fair value gap candles because of the inefficiency inside of the candle that it creates. Because if we think about it from an order flow perspective, again, we have the aggressive orders and then we have the passive orders. And if we want to get technical, it is the aggressive orders that move the market. And because the passive orders, like we've already covered, are passive, they're static, right? So if the market price is at a specific level and the next limit order is here and we hit a market buy order, the market order or the aggressive order is going to go snatch the next available liquidity available, right? And that's where you'll get that slippage when you're using market orders because there's a gap of inefficiency, and that's what causes a lot of slippages. But it's like when we break it down technically, it is the market orders that is moving the market, and then it can create like a snowball effect.
Dr. Data just sent me the candle chart.
I want to pull it up real quick.
Yeah, I don't. Here, let me get it to our production team, and we can get this thing pulled up. I mean, he just asked ChatGPT to be fair, but man, this is good. Here, can we throw this up? Wonderful production team. Oh, that's hilarious. We got a spirited discussion going about candles here. Dr. Data, again.
That sparked a lot of interest.
Those religious candles at the dollar store are great. $1.25. They burn for 3 days. What are they? Are they scented though, or is it like just an unscented?
It's been back tested. They burn for 3 days. Back tested.
Thank you, Matt. They're working on it behind the scenes here. We'll have the candle chart up very shortly.
We're talking about candlesticks. Yo, that's actually a great spinoff.
That's true.
Really trading
candles and candlesticks.
Yeah, these candles are still
new
burning.
Show name.
Yeah.
It's
sponsored by Glade.
There we go. There it is.
Okay, what do we got here?
So yeah, we got our candle chart breakdown. This is also kind of my first time taking a detailed look at this. So we're finding that the Aldi 14-ounce candles, 14-ounce candle for $4.49. That is a hell of a deal right there. 49-hour burn time for 9 cents per hour. And then on the most expensive side of the chart, we got Brooklyn Candle Studio, which I can't say I'm familiar with.
Okay.
10 ounce for $42. So we're talking 4 ounces less than an Aldi candle and 10x.
Wait, real quick.
Price.
We're price matching right now, essentially.
Sure.
We're price candle matching. We're getting the best bang for our buck right now.
Yeah.
That's what we're doing.
Yeah. I mean, it's just
we're doing some exposing. Right
yeah. I guess there's no auction market for candles, but I mean, I suppose that this is. I don't know. There's lots of research that go into all these price points.
Yeah.
Trader Joe's 5.7 ounce for $3.99. Also kind of a sleeper there in the middle, but way shorter burn time.
So my question though is from a business perspective is what is the sweet spot? What's the sweet spots where your candle doesn't burn for 365 days so that you have recurring customers.
That's
So
true
what is
too.
the sweet spot to where you're competitive, but you still have a valid product?
That's the what's the phenomenon in business? Is it planned obsolescence? Is that the word where they make things that break now so that you have to buy a new one?
Is that what the term is for it?
Yeah.
Okay.
Is that I think that's the term. Somebody can correct me if I'm wrong.
Apple has mastered this approach, right?
Yes. And like, I mean, appliances are like the other one that people will talk about, or vehicles as well. Like, I know that Ford had to switch out the 7.3 motor in the 90s because it ran for too long. I mean, it was like people were getting 500,000 miles out of the trucks, and they were like, we're not selling any more
We're
trucks.
like, we're spending all of our profits too fast, and then your products are working too long.
Yeah, exactly.
Right? Clothes is a big one.
Yeah, clothes as well.
Clothes was made a lot better back in the day, I gotta say.
Yeah, I mean, so many things were made a lot better. I mean, I've seen those like crazy fridges from the 50s with the whole, like, they got the whole works. They're more sophisticated than the fridges that we have now, and they last longer, and people still got them running in their garage to this day. It's crazy town.
That's not even bringing up furniture. Furniture was
furniture.
built completely different.
Yes, absolutely. Absolutely. Yeah.
Those antiques hit different.
No one holds a candle to the studies connected by tastylive. I love it. Most expensive one are designer fragrance brands. $80 or $100 for a small bespoke candle, which probably is just as good as Bath & Body Works. Yeah, I don't like, candles aren't a luxury good. Like, as soon as we start turning over into a luxury good, it gets to be too much.
Candles was like the OG, let there be light. Like,
yeah, it's true. Anyway, I see CoreWeave mentioned. We can hop over to platform here.
Yeah, we can jump over to the platform here. See some of these equities.
Yeah, let's take a look at CoreWeave. I'll break down some of these positions that we have open, of which there are many. I am kind of needing to rein some buying power back in right now. It might be a quiet next week for me, or at least an exit filled next week. Can we go on my platform, guys?
Planned obsolescence is inherent.
Planned obsolescence is inherent to the candle. See, now that's true.
That is true.
That's true. It's just how planned is the obsolescence
100%.
is kind of the question that we're asking.
Right.
How long can you make a candle last before you don't sell anymore?
Well, again, I'm sure you can make it last a long time.
Yeah, it doesn't really matter.
It's a matter of, again, I feel like you can find the materials that you need to make a candle last a very, very long time. It's a matter of when is it going to be not profitable or in your best interest to let this candle burn?
Yeah, you need it to be recurring.
Right.
Yeah, you need the purchases to be recurring enough to continue to make money.
This is actually such an interesting topic.
Well, then you could also always, if you make a candle that's too good, you could always just up your price, but then you're talking about psychology. What are people willing to pay for a candle?
Exactly. They're like, I'm not paying this for a candle.
Yeah.
Right?
Yeah.
And from
like, I'm willing to splurge on the wood wicks like $30 or $40 because they burn forever and ever and ever.
Right.
But, at what point does that shift? Because, like, I just, how often do I have $150 of capital laying around, even if you could make me a candle that burns for 400 hours?
How much do you pay for that? You said $30, $40?
Yeah, I think like they vary in price. But
how many do you think you go through on
range?
Average a month?
I'd say one.
So like maybe 12 a year?
Like 3 hours a night on a 100-hour burn time, something like that.
So maybe 12 a year you might buy?
Yeah.
You can calculate that yearly costing for the candles.
Yeah.
Did you pay that for one candle for the year? It feels like you're putting a little more risk on the table.
I would say no, just because I like the diversity of scents. I like being able to switch it up. But Woodwick makes these candles that are like 3 different scents, and as it burns, it switches.
Right.
And if you could make me a candle like that could last me all year, sure, I'd pay $360 for that. Why not?
Good answer. Because the details is important.
Yeah.
Good answer.
It is.
He said, I can't say yes or no. That's a good answer.
This has to be the longest anyone has ever talked about real world candles on this show, not just stock candles. Anyway, CoreWeave. Getting beat down a little bit off the highs. Kind of recovered. I don't know if we were saying we were short or long in chat. I lost it. I grabbed a few more shares on the dip. Set at 132 sell price, easy money. Yeah, so getting long some more CoreWeave here. I know this is a favorite stock of our very own Jamal Chandler. It's not one that I've ever been particularly convicted about. Just kind of, I always felt like this was another one where through this entire run up, I'm just thinking, I can't buy now, and it just keeps going higher and higher and higher. So yeah, maybe this does present a good buy spot here. I'm sure if there is a way that this chart could be framed that this looks like a bull flag. there's a time frame that I could put this on where this thing is bull flagging.
That's called flipping your platform upside.
Yeah, absolutely. Let's go. I guess maybe not. Maybe weeklies.
And see what we got.
No, not really. We're just kind of bouncing no matter how we look at it. All right, guys. Well, no. You know what? I could draw some lines and frame that. I'm standing my ground on this, looking kind of like a bull flag.
You stand on business.
Anyway, let's hop over with positions here. I am rife with positions at the moment. Pretty equal split of green and red on the day today. As I mentioned, Accenture and RGTI are two that were thrown at me from chat. Thanks, guys. we're up large on those. Errol and I got long some Carvana some time ago. Do you still have your Carvana longs?
No, I got out of that one.
Yeah, I'm still long here. Short, call vertical, 340, 360. So we actually kind of have dipped back down into this danger zone here. 360 is our critical price. But yeah, we like Carvana.
I like Carvana. Again, after looking more into the business model when we went down the rabbit hole that day,
it was the financing. The financing was what made the switch flip for me.
Yeah.
Because that makes sense. If you're doing in-house financing, that's how you can really make some money.
100%. You want to own not just, they want to own the whole thing.
Yeah.
Essentially. That's a smart way to go about things. I think play the long game. When I see a company now playing the long game, it's more attractive when I see that.
Well, I think it's funny too because it's like I feel like, and especially now, as soon as any company gets big enough, I shouldn't say any company, but lots of companies, as soon as they get big enough to do so, try to get into banking in one way or another. Even like in the context of airlines, like with points. Like I know airline points. Like I've seen statistics like, just the United points that are in float right now would be like the 6th largest bank in the world or something like that if you actually converted them into cash value.
I know that.
Look at Apple with the Apple Card, Apple Pay. They're trying to dive into banking a little bit as well. And so as soon as I figured out Carvana has a little banking edge to them there, it makes a lot more sense to me. Not to mention that I think people are just going to increasingly want to buy cars online moving forward.
Yeah, I think hearing the feedback from a testimonial that I know in person had a huge shift on my outlook of the company, right? By hearing somebody having a good experience and actually going through it wasn't just like a Carvana, another company. Okay, we can do our research. It made it a little bit more tangible.
I mean, car buying sucks. It sucks. You got to go to all these different dealerships and you got to haggle and wheel and deal and you got to act like you don't like the car so that you get the best price and all this.
Can we cut the? Right.
Yeah, exactly. Yeah, cut the BS. I don't want to put on this whole front. I mean, I could very well see myself using Carvana to purchase my next vehicle.
Yeah.
So once I start to get to that point, it's like, okay, makes sense to justify some longs there.
100%.
Outside of that, quad use, another position that I got from chat. This one, you guys, chat. I realize it might sound like I'm saying ChatGPT when I say that. I never am. I will say ChatGPT if I mean that. But yeah, quad use coming down off the highs a little bit here also. Still kind of in the danger zone. And especially if I switch to like a little bit of a shorter kind of outlook, maybe, let's go 1 hour. Quad U and RGTI both started to run down immediately after I took these positions, and I was like, man, these are both going to be real big winners. And now we're kind of getting into the consolidation sort of look, and it's scaring me a little bit. Consolidation at highs tends to mean there might be higher highs coming in the equation sometime soon. So being a bit more vigilant with these two positions than I had anticipated being.
What's the IV on that one? It's up there still. I mean, we've been ripping in the IVs, still pretty decent on RGTI.
Yeah, that's a good question.
Yeah. It looks like 30 right now.
Am I stupid? Yes.
Yeah, right there. Yeah.
Yes, 30, 29.4,
Yeah.
yes. So yeah, that's interesting. And yeah, I know somebody was just saying VIX is at the lows. Yeah, dang. Yeah, VIX.
Put that on the daily real quick. What does that look like?
It's taking a dive.
Right, like, that's interesting to me. What do you take? I mean, we've sold off from the highs. We're getting a little bit more of a quote-unquote significant pullback from what we've seen. VIX isn't budging. Market doesn't care. Market's not fearful at all right now.
No, yeah. I mean, even like with the considerable down move that we had in the past couple days. I mean, VIX little tiny bit of a spike there, up close to 18. But like even then, we're not talking about anything serious with VIX at all. So yeah, I don't know. Maybe I'm starting to get that itch again to get long some VIX and see what happens.
I mean, that doesn't shake anybody out of the market. It looks like so.
Yeah.
See how we pan out.
Yeah, we certainly will.
But that also tells me, for any fear to creep into the market, we're going to need a more aggressive sell-off in the future than the one that we just got this week, if that's going to be the case.
Theta Shader, oh yeah, that's definitely a leaping porpoise pattern. So simple to pick out. I'm not sure which stock you were referring to with the leaping porpoise, but that sounds very similar to the dolphin dive that we invented. Errol and I's proprietary metric. Rivaling the greatest financial minds in history, the dolphin dive, which is the opposite of a dead cat bounce.
I've actually been meaning to tell you, I've been checking out a new strategy. It's called the hot dog opening range breakout.
Oh, bro, you just learned about hot dog? Yeah, I've been training hot dog since like 2021. I figured you knew hot dog.
Oh no, I took the ketchup off and I like them better now.
Oh yeah, I'm a bigger fan of snack wrap these days. I like to go snack wrap until like around lunchtime, and then as things get more convoluted, I'll go beluga whale.
Oh, I like that. You know, I was putting emojis on my charts this morning. It was actually hilarious. I gotta show you next time. Whenever we go to the charts.
What's the point? Yeah, can we flip over to Errol's charts?
We can jump back over here.
Put some emojis on the charts, man.
No, I'll show you. And I was actually gonna do it while we were live, so I can kind of describe the emotion during these trades. But
that's so funny. There actually is like good application for that. Yeah, in like a note-taking sort of context. So that's just hilarious.
After I get chopped out of the market and I see the market rip in the direction that I was looking for, I was pretty sad. All right, wrong one. That looks like a happy emoji.
That's a nervous laugh.
That's the nervous laugh. There we go. Right, kind of sad.
This is why we partnered with TradingView, guys.
These are
because you can put emojis on your charts.
Look, you're laughing. But these are the real emotions we're going.
No, yeah, it's true. I mean, and I totally agree. Like in a note taking,
this is
like
serious stuff, bro.
Kind of context. If you wanted to look back at your performance over like a certain time period,
how you felt in that moment,
it is really quick notes to be able to throw these things in there and you know express exactly how you were feeling at that time. Another angle is perhaps you could put on the emotion that you're feeling at the time that you open every position, and then you know you could track the results that way. How many angry emojis before I entered a position are there? Did I win those trades? Was I actually trading angry? Yeah, and kind of try to hone those things in.
Yeah.
Baby beluga in the deep blue sea. You got to use magnets plus rockets. Oh,
I've seen the magnets a lot.
Yeah, that's
for the price target, right? We want price to come here.
Yeah. Oh, magnets out ahead to pull the price towards your. Yeah,
exactly.
no kidding. And the rocket makes sense too.
This morning, apparently, the magnets were above.
It's like a rocket that comes down. An asteroid, like there's an emoji for that. If you want something to come down into your magnet.
Okay, I need to hit these once so that they stay in my recent searched emojis, so I don't have to keep dolphin diving in here to.
yeah, we gotta get some favorites going. Is there a search feature?
Okay, I got the rocket right. That was after the long, right? That's the breakout. This was the level.
What's the nerd mean?
The nerd means objective reached. Like,
okay.
It's just so like
actually.
Exactly. Yes. Yes. Bro. Gus, this is gonna be fun, bro.
This is so great
because
this is like the greatest thing ever.
That's such a nerdy thing that me and Paris do all the time.
Actually,
yes, bro, you vibe.
I love throwing around that.
You get it. Let me find this. So what were we looking for? The magnet. Let's find the magnet real quick. Let's see. Tom would be impressed.
Circle charts. That's true. Oh man.
Let's find. No, it does help with the illustration sometimes, right? Sometimes they say a picture can
tell 1,000.
Exactly. Let's see if we can just find this magnet. Make sure I don't.
Yeah. What?
Oh, there it is. There we go.
The emoji categories always kind of confuse me. I don't know a better way to do it. I'm just kind of complaining, but. Oh, okay. So we gotta. Can we rotate the magnet?
Yes.
Because we gotta be pulling from the right direction.
This is how we can show our longer time frame biases, right? You guys think we're going to all-time highs?
Yeah, there we go. We need the rotation.
We can go to all-time highs. Who's doing this? This is Powell, right? There you go.
Is it? Yeah.
Wrong way. If I can adjust it a little bit. There we go.
And apparently, by the placement of this, we're actually gonna go back in time and go to all-time highs.
There we go. There we go. We're selling off a little bit here now. So whenever we're trading out like those important levels of value too, sometimes whenever there's a lot of nonsense or whenever it starts to get disrespected is what I like to call it. And when something starts to get disrespected, it just means like it stops kind of acknowledging it as a more of a significant level. That's when then I'm like, all right, scratch that level. I'm not trading off of this level anymore. I'm not trading until we get to a new level that we weren't trading off of whenever I see some type of kind of nonsense that's going on here now. Because that now makes it very difficult to determine, are we trading in bounds or are we trading out of bounds now? Because we were trading in bounds, now we're trading out of bounds, now we're trading, it's like, I'm stepping away. I don't need to sit through all that chop, and that's typically where you'll get chopped up. Anyways, little sidebar there.
I can't believe this is something we can do.
Yeah.
We're really living in the future, man. You just get to throw emojis on your charts now.
We did partner with TradingView, so any trades you see taken on this platform is with the Tasty Trade broker. And if you look down here at the bottom left-hand side of the screen, you can see the Tasty Trade and that little bubble next to it. That means your live broker is connected to the platform. So.
Yeah, and you just earlier threw on a stop loss.
Yeah.
Yeah,
so it just integrates to it, right? You can just when you log into your platform, you can click trade, and then it'll give you a handful of options to what broker you can connect to. You'll log in with your same login, and then it'll automatically connect for you. You don't need the paid version of TradingView. If you want more tools and access, obviously you can look into that if you want to, but you don't need the paid version. You don't got to do any of that extra stuff. But if you do want a little bit more, extra charting capabilities right now, you can take a look at it.
Yeah, and to my understanding, you can place Tasty trades on your TradingView charts, but you cannot use TradingView charts in the Tasty platform. Correct? Yes. Correct. It's integrated that direction. Tim and I should take chart lessons from you guys. Tim, why are you not using emojis, man? How am I supposed to know how you were feeling into this cup and handle?
How about big red mustache emoji? Let's get it. Oh, I got one for Gus, guys.
Oh, man. RGTI just crossed over a crucial area and will rise, says Kimberly. Kimberly, rare time that I hope you are wrong. Oh, yeah, there you go. Good job, guys. That was art card is helpful. Errol, Tom's gone for a day, and suddenly we're using emojis on charts. Precisely. You hit the nail on the head right there, Andrew.
Bro, I love Tom. Tom's such a real one.
Imagine Tom from 40 years ago coming to the future and seeing the magic of emojis on digital charts. It's true. Butterfly effect.
No, I actually originally thought, so there were some other products that were adding they're in the trading industry too, many different businesses in there, but I seen somebody adding emojis to the thing that they were building. At first I was like, that's so dumb, right? And I'm over here playing with the emojis in the TradingView platform. But when I saw it in theirs, I was like, oh, that's where those developers probably got the idea.
Integrations, you're like, do we really need emojis here? Like one I'll throw out is like the reactions in Teams, like how you can react to a message, which I think is something they just stole from Discord, and I'm sure Discord stole it from somebody else. But regardless, I'm sure when that was first integrated, it's like, man, we're not going to react with emojis in a business talk conversation. And now, every single message in Teams, we're just throwing emojis
left and right. Yeah. I mean, it really does show how to express emotion without having to write out an entire sentence.
What was the emoji you were cooking up for me? You said
oh, yes. So I could have swore there was one. Guys, I could have swore there was an emoji with that detective. I could have swore there was a stash on it. Maybe I'm mistaken.
Maybe. Yeah. I mean, if we could search here, it would be optimal. You could just search for detective or whatever. I do think I know what you're talking about, though.
I think that would be a fun one.
Yeah, that's a good question for Dr. Data. You tagged the right person, Grumpy Mike. I don't know. I don't know the answer to that one.
Oh, boy, that's funny.
Mostly neutral. Calls the 35th. Oh, Drin, are you long RGTI? Are we against each other on that one? My condolences, if so. I suppose not condolences. It's undecided on which one of us will win or lose yet. Perhaps my congratulations.
Give me a few more moments, guys. Let me just find one.
Those green Mr. Yuck stickers that you were supposed to put on household chemicals. I cannot say I'm familiar with that in any capacity. This is a whole new thing to me. Is it like to encourage your kids not to drink chemicals? That's what that sounds like to me. Short call. Oh, perfect. We are the same side. Can you trade from TradingView? Yes, you can. Correct?
Yeah, you can. Yeah. You can. If you happen to join the stream a little later, you can rewind later and find how we were managing that position, how we put in the stop loss, and then how we closed the trade too. You can rewind and go and watch that.
Yeah.
We'll be doing stuff like this a little bit more often.
I'm thrilled about this integration. I love TradingView, and I'm very happy that we get to use their stuff and speak
just some emoji
about them because I have nothing but positive feelings towards them.
Yeah. Something with emoji. Something with emoji dude in the Barrett smirk on his face. Perfect sauce emoji. That would be a perfect emoji. I mean, if you're in the studio, you see we got a lot of emojis.
Any thoughts on how much more chop is Gamma built today on ES?
No, I have no thoughts on that, but we can go over to ES here in a minute because we're going to look at the volume profile, which we will look at ES on Monday when we come back. We just have a few moments left. I just want to quickly pull up the volume profile tool.
Sure.
We're going to use this on NASDAQ and ES next week, but this is where we find a lot of those levels of value and things like that. So we'll just pull it up just so we know where it's at. Hopefully I can find it again on here. It was very useful. I was using it a lot this morning.
Yeah, the volume profiles are awesome, and especially in the context of normal distributions, as we were talking about earlier. Eli Lilly on the rise.
And again, I know. These were certain tools that I was using for years and never knew how to actually use them. So sometimes, just because we don't know how to use something doesn't mean there isn't any value there, because that's how I kind of took it at first. I was like, oh, this is kind of pointless.
Yeah, I know Eli Lilly, no, you don't have to pay for the TradingView, Drin, to answer your question. Eli Lilly on the rise. Yeah, I know Eli Lilly just had some very positive test results on their oral weight loss treatment, and they were better than Novo Nordisk. I mean, like that's just earlier this week. There we go. There's that beautiful volume profile, and we can see how this so beautifully correlates with the ranges that you're talking about.
And now let me clean up these emojis real quick, guys. Bear with me. And then what I'm gonna do here is I'm gonna right click, go to settings. I'm gonna go over here to trading, and I'm gonna take off, so we can clean up, take off the execution marks, right? So that we don't got to see all those arrows everywhere, right? And then we can click things like this to clear the screen back off. It gets a little messy sometimes when you start playing around with it. You got all of these emojis left and right, text left and right. But anyways, I just put on the anchored volume profile. So what I just did, I anchored the volume profile from where I wanted it to start from, and then where I wanted it to end, where I wanted it to end from. So I took it all the way back to September 25th. I'm sorry, to Sunday, and then I just took it to the price action that's trading right now. And then what this is going to do is it'll show you volume at price. So it'll show you the most active traded levels in the market. We'll get into more of the details later, but the fixed volume profile is pretty simple to use.
Yeah.
Throwing it around.
Yeah, absolutely.
Take it from whatever parameters that you want to.
Yeah, and that's such a great tool. You can just throw on any chart. It's wonderful.
Hey, last comment. Bob Stoller got something for you guys.
Yes, I see, Bob. And yeah, in response, before you go, I need some weekend sports picks. Final weekend of the MLB regular season, and we have a full slate of football. Yeah, I'll give you a few here. I like Arkansas at home hosting Notre Dame plus 4.5. Notre Dame's looked weak. Arkansas, bad loss last weekend. I think they'll bounce back and win that game. UFC, I like Louis Sutherland. I think he's a dog with a lot of value. I think he's going to get a knockout in that one, maybe even by ground and pound specifically. I don't like this Tafa that he's fighting at all. I think he's on his way out of the UFC. NFL on Sunday, I think Rams minus 3.5 against the Colts is going to be really sharp. I also like the Vikings in that London game on Sunday morning, early Sunday morning. Like Vikings minus 2.5.
You're not going to watch the cricket match?
Cricket match? No. There's too many sports on this weekend to be worried about a cricket match. Baseball.
Disrespect.
Baseball is going to be a little more nuanced, especially Sunday, because a lot of these teams are going to throw their aces again. Like the Tigers, if they have a critical game on Sunday, they'll break Skubal out. The Reds are another one. They got Hunter Green coming out of the bullpen on Sunday. So that's going to be a really weird thing that I'll have to handicap as the day gets closer. But there's three or four that I like for you. What's with the dings? Who's getting filled? It's that there's on the desks behind us, the big boy desks. There is a platform open, and somebody is trading on it. I'm not exactly sure whose platform it is, but that's the dings. Sorry for the confusion.
Like, what are the dings? Oh, nothing. Nothing.
Yeah.
Mind your business.
Yeah. If you have your platform open in one place and you're making trades on it, like in another place, it will still ding everywhere that it's open. So that's what's.
You ever change the sound on the dings? I changed mine to the cha-ching.
I don't like the. Yeah, no, man. I like the OG. The cha-ching. It's nice. I'm happy we have the options, but the OG is it's too good.
It's OG.
Yeah.
I had it for a little bit, but I did end up going back. So, to your point, it's OG. Anything else to add before we wrap here?
No. Theta Trader just noticed the matching shirts. Yeah, white T-shirts and chains Fridays. That's true. We got our white tees and silver chains. Yeah. This was not planned. In fact, when I came in, Errol had a jacket on, and I couldn't see that he had a white T-shirt. And then he turned to me and was like, "Oh, we both got on white shirts." So
yeah, no white T-shirt contest.
Maybe we should start coordinating, man.
Bro, that might be a vibe. Liz and Jenny, they got that down.
Want to get matching Goyard crossbody bags?
Just hop up on here with some Goyard crossbody bags with AirPods in.
Yeah, just AirPods in.
With AirPods in.
Sunglasses on, just full douchebag.
Emojis on the charts. Like, that's full blown. Where did we go? How far have we gone? You can change the sound. You can change the sound. If you play around in the settings on the Tasty Trade platform, go into the settings, go in under accounts, I believe it may be, play around in there, you'll be able to find it. There's a few options you can play around with.
Yeah, you can. Yeah, we got all the offerings, guys.
Cool. Wolf, appreciate you, Jared, Kimberly, Bob, Margin, everybody else, Data Trader.
Mike.
Right?
Wit, everybody. We love you.
Love you guys. Thanks for taking the time to hang out with us. That's going to do it. All good?
Yeah, all good.
That's going to do it for today's segment. Be sure to stay tuned for more coming on next. We'll catch you guys next time. Peace.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with a market measure sponsored by the SIBO. Even the S&P's up 13, NASDAQ down 31, Russell up 10, and the Dow, the strongest of the group, remains to be the strongest of the group, $197 to the upside. Volatility down by 12 cents, mid-range for the day, and bonds down 5. You mentioned gold. I will say it again. It's over $3,800.
Yeah.
To 38.03, up 32.
which is weird into this bond move. So you got the bonds reversing. Did they get in the 15 handle? Yeah, they were down in the 115 handle. Rates increasing, at least from they're around where they were pre-Powell. You would think that if rates are increasing, gold wouldn't be mooning.
You would think. Who would have thunk?
I know. As Dylan would say, don't think.
Don't think, just trade. That's true. He's
Don't
right.
think.
And assume the position. Market measure sponsored by the SIBO, followed by your phone calls, 855-238-2789 or 855-BE-TASTY. And we also are going to be YouTube chat friendly too. So if you have
I see the love in the YouTube chat. Thank you.
If you want to put that in there, you have a question, you can ask Nick and he will read that out too. But 855-238-2789 or 855-BE-TASTY. Around 9:30, 9:35, we'll get to your phone calls. Nothing off limit. All questions welcomed. Market measure, sponsored by the SIBO.
Let's do it.
Ready?
Reversal risk, probability of a turnaround. So, strangles are prone to very large P&L swings throughout their duration, but how likely is it for a strangle P&L to flip after incurring a certain amount of loss? Do you notice that like a lot of strangle positions, they go from $100 loser, $100 winner. I mean, that's a pretty normal move on positions. So let's determine the probability of a turnaround after reaching different loss thresholds for 45-day 16 delta SPY strangle. So we're looking at cookie cutter strangle, and the story that we're building here is like, what is the probability of a trade going red to green or green to red, those sort of things here.
16 delta is another way of saying, no, not I love you. Another way of saying expected move. 16 delta.
Yes. So we're looking at the turnaround probability that the strangle P&L will become positive prior to 21 days after incurring a loss of X percent of the initial credit. So we'll be looking at, how many times a 50% loser of the credit turns around to be positive.
Yep.
And many other data points here. So next slide here, please. So just a couple of notes that we have here, an example of what we mean. So if a loss of 10% of the initial credits, that would mean if you sold this at $1, if you're losing 10 cents on that trade, so that trade is marked at $1.10, to buy it back because you're short it, the probability of a turnaround for a 16 delta SPY strangle is roughly 79%, and we're going to look through the stats here too as well. This does not mean that these trades will necessarily be profitable 79% of the time, because a P&L sign may flip again before or after 21 days. So we're just looking at, a trade that goes red that might be a scratch or profitable at some point in the window before you roll. So, it's going to be a high percent of the time, because we know that these trades, it's not uncommon for you to put on an iron condor and one day later you're losing 5 or 10 cents on it. And then the next day it's a scratch or a winner. I mean, these things move. It's not like you put it on and then, every day is you make $5 on the trade or whatever.
Very good.
All right. So the study that we're looking at, the next slide here, we're looking at SPY, the Qs, gold, Amazon, Apple, and Google. And we're looking at this from 2013 to 2025. We're looking at the 16 delta short strangle, 45 days, pretty cookie cutter here. And then we're looking at it in the time frame prior to the 21-day management. So the 24, 25 days prior to rolling. So for each instrument, we're going to determine the probability that the strangle has a P&L less than 50% of the initial credits. There's a 50% loss. This is if you sell it for $1, marked at $1.50. And then has a P&L turnaround after incurring the loss. So we're looking at the 50% losers and then just in general red trades going to green in that 24-day window.
Beautiful. See what happens with this study.
So when a strangle has a small negative P&L, so between 10% and 20% of the initial credit, the probability of the P&L flipping and becoming positive prior to 21 days is very high. It's upwards of 69%.
Which makes perfectly good sense because you're inside a standard deviation on this. So I would say 68% would have been my answer just doing a back of the envelope. They're saying upwards of 69% because it's a standard deviation. Everything in math that we do here is really wrapped around that standard deviation probability.
Yeah, and assuming you have markets that go in both directions, you know, one day you might be down 10 cents, one day you might be up 10 cents. It's very normal to see this.
Yep.
So the next slide here, so as the strangle loss becomes larger, the probability of a turnaround decreases. Very intuitive, right? As the position goes further against you, you know, it's very harder for that trade to come back and be profitable. So the turnaround becomes unlikely with a probability under 50% if the contract loss exceeds roughly 50% of the initial credit. So, you know, this is, we've looked at this a million times, right? This is why we roll positions and reduce your delta exposure, because once once you're wrong and very wrong on a trade,
It usually stays wrong.
it usually
You don't
stays
do anything,
at least
sure.
in the short term.
Yep.
And so, you know, this is why we manage trades, and this is why we roll out at 20, 21 days. Like, this is intuitive. You should know that if something is a big loss, it's hard to get it to be a positive P&L. You're trying to manage that position, and that's what we do all day long.
Very good, very good. And again, this is why, this is doing no mechanics. This is just looking at the pure straddle itself. And this is why, if you wanted to, we would be going inverted here, or buying back the straddle and go into new strikes that are out of the money. Kind of what you did in that trade B.
Yeah, and BE is why you take, you get a $10 down move where this trade was a 150% loss, and now it's, a 20% loss. And I'm sitting here thinking, it might be time to go on this trade. Next slide, please. So we'll look at some of the stats here. So this is a 16 delta, 45 days prior to 21 date till expiration. So this is looking at probability of having a loss bigger than 50%. And these numbers, I mean, they are obviously going to be greater for single name equities because you have more implied volatility on there. But it's exactly what I would expect to see.
Yeah, nothing surprising here, I don't think. I mean, they're all, because it's math. I mean, maybe the SPY being a little bit less, I don't know. I would have thought it would have been over 30. But
I guess the gold move, the gold one is probably, gold is telling you that low IV, selling strangles in low IV, because gold IV is the lowest of
now I know
this
why
group.
my gold positions never work.
That's probably it, is because you're selling premium in something that's got low implied volatility. So, strangles with more volatile, in more volatile underlyings tend to have greater profit potential, but also tend to have more volatile strangle P&Ls, and that's intuitive. There's higher volatility, you should expect bigger swings in both directions.
Good.
So next slide here. So looking at the 16 delta strangle, 45 days, and then this is also prior to the 21 days. This is the probability of a turnaround after a loss larger than 50%. So more volatile underlyings also tend to have a lower probability of a P&L turnaround after incurring a loss greater than 50%. So this means that strangles that are prone to larger negative P&L swings are also less likely to recover. Loss tolerance should be more conservative. This is exactly why we manage positions. Like, when something goes very far against you, it usually doesn't, you're trying to get out for a scratch or a lesser loss.
Exactly.
That's the whole point. Like, the numbers we look at right now when we're placing the trade, they are what they are, and we're playing for those numbers to play out. If they don't play out and something goes very much against you, you've got to manage your trade. This is what this study is telling you. Just manage the position and try and get back, and not count. Do something. Don't
just sit there.
Don't just sit there and
do something. Do something.
Let's get to some takeaways, and then we'll get to the phone calls here. So a 16 delta strangle with a small negative P&L has a high chance of coming back to or if it has a small loss, has a high chance of coming back to being a scratch or positive. This is why we don't overmanage positions. We're not constantly, adjusting positions because we're losing on the trade a small amount. So, however, if the losses exceed 50% of the initial credit, the recovery chance drops below 50%.
But that doesn't mean on this second little bullet point here that if you had a 50% initial loss, $3, you got a $1.50 loss, that if you stay in it and do nothing, that it doesn't become like a $1 loss or a 50-cent loss or a quarter loss. It just means that it's a loss. It doesn't mean it's going to be that much of a loss. It could be even more, but it could be less also. That's why we reinforce rolling down the untested side.
Yeah, because you don't know if that 50% loss becomes a 10 or 20% loss, and you rolled the untested side, you're probably a scratch on that trade.
Yes.
Instead of losing the 20%, that's why that's what we're playing for here. So strangles on more volatile underlyings offer a greater profit potential, but are prone to larger, less recoverable negative P&L swings, warranting conservative loss tolerance. So, overall, the big losers, you got to manage those positions. The small losers, relax a little bit and let the probabilities play out, at least in that window prior to the 21 days.
Very good. Good job out of you. Good job out of the research team. Not so good job out of the market, but kind of more of what at least I expected. Even the S&Ps are up 2. The NASDAQ is down 84. Russell up 4. Volatility completely unchanged. As a matter of fact, if you look at the ES, and you look at the 0-day, well, it just went under 28 now. It was just 28 a moment ago while Nick was talking. We had about a $28 or $29 expected move this morning prior to putting on this trade. That's why I said maybe wait a little bit longer, 9 or 9:30. Now it's 9:30. Maybe you get a little bit of contraction and volatility now. Volatility is actually up 2 cents for a quick second here. Bitcoin back under 110. I don't think we're out of the woods here yet. The overall market 195. Although we did go a lot higher than I thought we'd go to 6,700.03 on the E-mini S&Ps. Kind of put a little egg on my face. Oil up 99 cents. Gold up 42. If you thought it was ominous before, it's more.
Yeah.
Phone lines are open. We would love
volatility too.
Volatility upticking too.
We've reversed move up 30 ticks.
That's correct.
30 cents from where we were this morning. Back to the
855-238-2789 or 855-BE-TASTY. That's the phone number to call. Give us a buzz. We'll have just about a half an hour to go to your phone calls. Rob and Maria, I know I see you on there. We'll get to you first. I appreciate it. But I need more. We need 4 or 5 more calls. So please give us a buzz.
I'll be looking at the YouTube chat too.
YouTube channel.
Because this team loves the YouTube chat, loves people in the chat, loves all our customers and all of our people. We love you all.
That's right. You are sponge-worthy to us. Thank you. We're going to take a quick 90-second break and come back. We got more Tasty Live after this, Nick, with phone calls. Nick and Bat back next. Peace. Nicky, we are back, son, and you know what that means. Time for a little bit fast market where we go to viewer emails. But before we do that, can you just go back? We had a little setting issue here on the production side where they couldn't see your pointer. So
my mega pointer. They want to see my big pointer.
They want to see a big pointer. So they say,
let me show you my big tool I got.
It's so small.
Yeah, look at this big tool I got.
There's the pointer. We'll have it back up there for you. I really do apologize.
So for the right clicking, here's where we were talking about. So you right click on anything here. It gives you your.
And that is a
market
beautiful point.
Big, beautiful.
Now, the biggest, beautifulest, most pointer I've ever seen. A pointer so big. It's so big.
Big and beautiful.
Two Batistas.
So I'm sorry. It's day one. We can't do this the first day.
Fast market, ready. Everybody. Play some music. My timing was a little.
That was good.
There.
That was good.
My timing was a little off. I'm much better. I'll be much better. I promise. All right, son. Let's see. What's our first trade here? Thank you so much for fast market. All your participation. We have Carlos from Cherryless Forever? Question mark.
Carlos. The cherries are still here.
And I'm glad you popped yours. So good for you. NVIDIA.
The cherries are younger and usable.
That's right. That's right.
Sure.
Oh. NVIDIA, he's neutral. The stock is down about 85 cents, 176. Been going sideways for the last month. Ivy rank is only 8 in here. It has earnings November 19th, which is 2 days before November expiration. So this is a trade I would think about putting on, even though earnings were looming before expiration. All things work out equally. We should be out of this trade in about 3 weeks or so. Do you have an opinion on NVIDIA? You want to play it straight neutral? You want to do something with a little bit of defined risk? I know if you're in like a portfolio margin type account, this is gonna use maybe $800 in buying power. But if you're in a margin account, it's going to use significantly more than that. I'm just trying to show you the leverage of portfolio margin versus a regular margin account. And also, if you're in a smaller size account, you're probably going to want to use something with defined risk. What do you want to do here in NVIDIA with a low Ivy rank of 8?
They're looking at a strangle, 150, 210.
Even though the Ivy rank is low?
I know. I think you just buy the wings, and if you're in a portfolio margin account, it's going to be a lot cheaper to hold a naked position. But
I think $20 wide here, collecting
that's what I went to.
$3 and change. It's going to be a slow moving process here. I mean, when you buy the wing, you kind of mitigate that volatility contraction. But with Ivy rank at 8, I think what could hurt you more is the volatility expansion. So by defining that risk and having that other option, it's going to hold a little bit of premium to it. Those long wings that you're buying relatively cheaply, all things being considered. I think that's probably the trade. It's trading around $3.33 mid price. Natural's $3.29.
I did it. I got filled on that. So
no ding.
So,
we need a ding.
I know. I don't know what
we need to get.
You got me low ding here. This isn't fair.
He's too young to have low ding, and they got like testosterone pills and pellets and everything else like that for you.
I don't need that yet, pal. Okay. It's okay. Everything's all right.
You got filled at what price?
I got filled at $3.33 for the iron con.
$3.33, and you'll push that through on the.
Yes, it's coming on my follow account. We'll have some sort of. If you have ideas for how we should label the BAT account, please tell us.
One quick thing I'll show you: 70% pop. Basically no delta on the strikes that he used.
Yes.
Good theta decay of 6. Again, Ivy rank very low. Next trade, please.
Yes.
INTC, that's Intel, which is like, is that a meme stock now?
Oh, but it's in the government's portfolio now, so just be careful.
Is it too late? It went from 25 to 35. Mike in Salem, Oregon is neutral on it. Neutral to slightly bullish at basically all-time highs, at least yearly highs, but think it's ranged between 30 and 45, selling 25 delta strangles in November. Both sides, 25 delta. What do you think on this Intel that has an expected move? Earnings are October 30th. Expected move in November of $7, which is quite high. Ivy rank of 56 on a $35 stock.
I mean, look at the skew on this. I mean, if you look at
the call skew,
the 30 put in November trades at 135. It's a 23 delta.
That is correct.
The 48 or even the 47 call, if you want to just go equal delta, they're exactly the same delta. I mean, this is how you could see where skew is. They trade at basically the same value. That's another way to look at skew. But you're 12 points out of the money on the upside and 5 on the downside. So you have almost 2-3x the skew on the upside here.
So what do you think about like a small broken wing butterfly in here, or if you really want to take advantage of the upside skew, some sort of ratio spread?
I was thinking naked put, call ratio spread.
So sell the put,
sell the 30 put, do the 40-45 call ratio.
Funny, I was looking at the 40-44, 40-45, just as good. If you're going to sell the 30 put, you're maximizing the amount of buying power you're using. The three-legged trade that you have, meaning 40-45 and the 30 put, is going to have a pop of around 71%. Good $5 in theta decay, $6 on the last trade we did. And a little bit of long delta, which meets their slightly bullish to neutral trading. You can see this large green line, which gets you well over all the strikes that we
You're
have.
gonna be at 50. Your break even's at 50. I got filled at 198. So you're which is about 2.2 pennies.
2 to 3 cents below
it's
mid
moving
price. Yeah,
around.
on a three-legged. Yeah, I like it.
Your break even is at 52. I mean,
Very good.
that's
Very good. Next trade, please. NDX 0-day expected move short put $10 wide. Wish we saw this a little bit. I mean, I'll give you my group. You can go with this. NDX at its highs for the day, pretty much, with NASDAQ up 62. Well, not really at the highs of the day, but it just rallied. Dow is up 300 and change, and even the S&Ps are up 31. I will say that volatility has not made new lows. It's sitting at 1808. Got the direction wrong here for sure, but volatility hanging in there. I think it's too late for this trade.
I find NDX kind of tough to trade too.
I do
versus
too.
SPX, because SPX, it's a tick, 5 cents. NDX, some of these options, I mean, they don't
trade.
They don't really trade in the 0-day, and that's a function of the size of it too, because it's a super big product, obviously.
Yep.
But yeah, you're $1.50, $2 wide on some of these, and if you get a little bit of volatility in there, things get wonky.
And wide.
Yeah, and
wide.
widen
So
out. So
NDX,
you have big swings in.
Yeah, not my favorite. Jeff in Kent, Washington, WA, Washington, I think so. If you come up with another trade, which I hope you do in the future, instead of NDX, SPX, SPY, Qs, that kind of thing.
So we're going to pass on NDX. We did the Iron Condor in NVIDIA and the naked put call ratio spread in Intel.
Yep, filled on both of those. ENPH. Markets in November are about 5-ish.
Has gone nowhere.
What's that?
It's gone nowhere.
It has gone nowhere. You are right. It's the lower end of its range. They're bullish, being a little bit of a contrarian here. Time to get long ENPH at this great price. Sold at 35 puts for $350. It doesn't say what month. Jack from Philly. Next time, please add that. November, I'm going to assume that.
November.
Yeah, it's the 35 puts. They're trading 365, 375.
Jack,
I like the 30 puts personally. If you're going to that for $1 and change, $1.70-ish, $1.60 something. What do you?
All right, I do the 30 puts. I'm with you. I did do the 35 puts in the Johnny Trader account on Wednesday.
Oh, okay. Okay.
I'm with Jack. I feel the same way.
Stocks down ticking, so you probably can get about $1.70-ish if you're looking at
Yes, I got filled at $1.68.
$1.68. Wow, you just pound them out, huh? Okay, well. Okay. Thank you, Jack from Philly. I'll talk to my friend about pricing over here and canceling and replacing. It hasn't cost us.
Oh, you want me to try? Here, I'll go get it. You think I'm going to get $1.70 here?
No, you can't. They're offered at $1.69.
Yeah, they're offered at $1.70.
Great trade.
So now you're at
now. Let me change my tune.
Now they're at $1.67, $1.69. So I get filled right at mid price. See, I didn't hit any bids.
But the stock upticks 5 cents. Great trade. At $1.68 by you, son.
God.
Last price $1.69. Let's see what the next trade is. Tesla. Can it be? Finally can be bullish on Tesla. Won't be the same without Tom. Big thanks. Give the research boys more time to shine. Research is the heart and soul of the show. 100% agree.
Love you.
We should probably tell the audience that we want to give the research team a lot bigger role and a little bit broad-based on what they can research. And not be so pigeonholed into what we've done.
If you have ideas, please send us your ideas.
Sure.
Research
Support
at Tasty
Live. You can give it to me. I'm Bat at Tasty Live. What are you, son?
Nick at Tasty Live.
See that? How good and easy that is? Nobody's hiding from anybody. Love to see this. Harvey M. in New York City wants to be bullish. Doesn't have a trade. Tesla already up $2.40. Tesla trade as high as $4.34. This morning. It's almost $8 or $9 below that. Not acting as well as the rest of the market, although it is up 2 and change. I don't necessarily agree with the assumption here on the direction.
You don't want.
I like to sell premium in there. I think the premium is good. I don't think I would actually kind of lean a little bit more neutral than bullish.
So like an Iron Condor, you go November or October?
Earnings in Tesla are going to come October 22nd. I mean, That's like 4 weeks away. I mean, for me and Tesla, I got to have a little bit more conviction. I would probably abstain on direction. I have a little bit more conviction on direction.
Yeah, but do you go to the October expiration in November?
I would probably go to October just because I want to avoid the earnings on October 22nd.
You want to do like a 15-point wide something?
Sure.
A 20 delta?
Sure. Yeah. So you
want to lean slightly short, or they want to be long?
Well, they want to be bullish. So if you want to follow what they're doing, I would probably go neutral because I'm a little bit more bearish than bullish. You're going out.
How about like the 385, 370 put spread?
385.
So it's about a 20 delta for the short.
Mm-hmm.
And then you go like the
480 or 485?
I was going to go 490 and then 15 points wide, but you could do 485, 500. You do it at $4. It's a little.
So your probably profit is 60. I like so here. So let's take a look for a minute, like what you're getting on the put spread. So you're getting about $2.40 on the put spread. You're getting around $2 on the call spread. So your strikes make sense.
So we're going to do an iron condor. So we'll do the
385, 370, and what are you doing on the call side?
And the 485, 500. So we're going to the 85 on either side.
485, 500, 405 is the mid price.
Yeah.
Good job out of you. 60% pop, $12 in theta decay, a little bit longish delta, 2-ish long deltas. We're supporting you, Harvey, but not in a big way. I'm not going to lie.
Yeah, no.
But you are doing October. It's going to move a lot quicker.
I got 5 cents above your mid price, Johnny.
Oh, good job. Good job.
Good job. I made up for the.
That's called price discovery.
I made up for the penny that I gave up on end phase.
Time will tell. Next trade, please. /J7. He's talking about Japanese yen here.
So they're looking at 6J.
But I don't know what /J7. Why J7?
I think they're just looking at. I think they got a little typo here. 6J.
Oh, 6J. Got you.
Which is Japanese yen. I don't. Is there a J?
It is a Z. It is a Z future too.
Yeah. They're just looking at.
It is up slightly. And it is on its butt too. What do you think?
I sold a put spread yesterday. This was a Katie McGarrigle trade.
Okay.
For 3 trade ideas.
So you don't want to duplicate your trade. You got the same thing here. They're long futures, Johnny Trader account.
Yeah.
A small product it is, but it still costs $2,300. So if you're in a Johnny size account and it's under 25,000, and hopefully your world is going to get a lot better now that they're fixing the patent day trading rule and getting rid of it. Hopefully it's got to just pass the SEC from what all my internal lawyers tell me. Your world is going to open up to you, which is going to be great. $2,300 on that. I kind of prefer your put spread in that size account than the future itself, or you can go to the micros.
Or the TastyFX products.
Or the TastyFX products.
I also did yesterday. You can trade the USD Japanese yen pair, which you would want to be short. If you want to be long Japanese yen futures, you'd be short USD Japanese yen currency through TastyFX. So I added a little bit to that as well.
Very good. Next trade, please. PLTR. So Tom is retired. Well, he's not really retired. He's out. In fact, until I fired him.
Yeah.
I just had enough of him. But he wants to retain a little bit and stay on. So he's still going to do all the shows for us, and I can phone a friend if I ever need him. And he's going to do consulting. It'll be a dark day when I have to call him for consulting, but it may happen. But for the good old question, everyone is wondering, are we still trading with Tom's money? We are not trading with Tom's money. We are now using the firm and my own account. So how about a stupid C? 90.95. Oh, covered. He's looking at
he's looking at selling a put. No, he's selling a stupid.
Oh, he's selling a
AKA
stupid.
Super Bowl, selling a put spread to buy a call spread. The stupid.
Stupid. So he's buying a call spread selling a put spread. Okay, he didn't put buy. It's a guaranteed buck. Small plug. All right. So let's see the last price. PLTR down $1.95.
So you'd be.
I hope you did the stupid this morning and not last night.
Yeah.
So what do you think about PLTR? Basically on or around its highs, 177. I know it did get up to around 190. This has been one of the high flyers. What do you think about PR? So it comes down to your directional. Now he's bearish here, so hold on a minute.
So
it says bearish on the left. I don't know if he's got this wrong. So if the stock is around 170.
So I have some short delta here. I did a diagonal spread a couple days. When did I do this? Yesterday, 20.
So he's doing the I don't know. This was either submitted days ago or because the strikes are wrong.
Don't you poo-poo H. Montero. It's my guy.
Smoky Mad Pot, New York. No wonder he's your guy.
No.
Going back to our story from this morning.
No.
Okay.
No.
Not gonna touch that. Not gonna touch. All right, I'm gonna abstain here.
I have some short delta here. I think they're looking short delta here. So I'm with you, but I did the.
So if he's looking for short delta, I hope he put this trade on yesterday.
I think he's selling the call spread, the 190, 195, and then buying the 180, 175 long put spread. It's a double. It's selling a call spread to finance, buying the put spread. You have basically, you do this for a small credit. You have basically, high probability, high upside potential trade.
Awesome.
If you get a downside move.
Okie dokie. Let's go to the next trade, please. How about selling the 65 puts in PayPal, says AJ from LA.
It's another stock that's just been left for dead. I could do this.
PayPal up 33 cents. Not that big of a move. PayPal's been going absolutely sideways. No earnings October 28th. October options, if you're looking at that, I know they're looking at November options inside the earnings season. This is almost an October trade for me. I don't know about you, son. What do you think?
I'm down with that. Yeah.
65 puts are $1.06, 106.
Just to avoid earnings, you're thinking?
Say again?
Just to avoid earnings?
Just to avoid earnings. I would probably go in, and they're 99, 103 right now. Stock's up. I would want to be filled on a down-ish tick here. I'm not aggressive here. I would go in at 104, 105. I'd go in on the offer and want the stock to down tick
I'll put that in, 104.
Okay, perfect. Cool. Next, one of those trades where I don't care if I really kind of get filled.
Yeah,
you know what I mean? I'm going to October instead of November. Let's put it on the offer. Let's see if we get filled. Baidu, sell expected move put spread, $10 wide in November. Sarah, help me with that. Snoqualmie, Washington? Snoqualmie?
Sounds good to me.
Sure.
Do you have it, Beth? Do you have a better one?
No, that was great. You did a great job.
That'll last about a day.
You're doing amazing, sweetie.
I love this.
About a day.
I can see you.
I know.
About a day. Baidu, B-I-D-U, been on a little bit of a tear. It's down $3 today. Sell the expected move put spread, so they're bullish on here. What's your?
I just got filled on PayPal.
Oh, good. At your price, 104.
104. Your price.
Well, I mean,
this is a team game, all right. You don't have to. Gotta remember, you got to,
You got to say now?
Yeah.
Thank you. It's not just the Tom show anymore?
Yeah.
It's the Bat show?
Yeah.
All right, I appreciate that.
The bats.
Sell the expected move, put spread. Are you bullish in Baidu, I guess, is the first.
I don't know if I could get bullish these China stocks.
Yeah, I think these are the Baidu to me seems like a fringe player. Like when they start to move, the move is almost over, like kind of thing. Sarah, I like your conviction here, jumping on the move. It has had a little bit of a downtick from 140 to 133. Ivy rank is 45. Earnings are November 20th. So this is something I would do in November. What about an iron condor in here if you wanted to go a little bit more neutral, or we can abstain? It's completely.
Yeah, we could do an iron. Markets. I can't get long into it. I mean, the stock is up $60.
Right. The stock is down $3 today, so the better move for us than
What are you thinking? You want to do it at the expected move?
If you do it at the expected move, you're looking at just about a $20 expected move, so you go down to around the 110s.
Okay. You want to do the 110, 100? You want to do 10 points wide, or you want to go 15 points wide?
You could. I would almost.
Markets stink.
Markets stink.
Look at
the 05 puts are 111, 174. Let's.
The wings are 30 points wide. 30 cents wide.
Yeah.
I mean, you're going to give up some.
A lot of call skew in here too, and a lot of wide markets. Good open interest though, so I don't mind with conviction. Sarah, you have conviction.
Yeah, I gotta say, your pointer's not as big as mine. Do you want me to?
You're not the first person to point that out to me, son. Prove it.
I think we're gonna pass on Baidu.
We're gonna pass on Baidu.
Yeah,
It's a long way of
we'll
saying
take a
we're gonna
look.
pass
If
on
we get a
Baidu.
little bit of a down move, continued down move, we'll get long it.
Next
one, please.
Next one, please. I could have lived my whole life without knowing that. Lulu, bullish for Jeff in Miami. Jade Lizard.
If we keep going at this rate, I don't know if I've got any job security left here. I think. What do you think, Beth? Am I okay?
You're doing great.
Thank you.
Doing great. It's going to be her classic line.
Thank you.
From now on.
All right.
Lulu, they're bullish.
This is another stock that has been. There's not a positive spin on this one.
No, there isn't. There isn't. They really have to put out some more of those leggings that you can see through before the stock upticks again. $173, IV rank of 21. It is up $1 today, so I think they put on this Jade Lizard. It is the type of trade I would put on if I was bullish. Jade Lizard, from our research, does better statistically than a naked put or put spread. So I would definitely go with this, combining that call spread.
Are they looking November? Yeah.
What do you think?
Yeah. So
earnings are in December-ish, so you're all good there.
What about if we just sell the puts? I mean,
statistically speaking, the
you're selling the $5 wide for $1.
If you want to do a put spread, you can do that instead of the naked.
No, I
put,
was
they're
thinking
doing
just the naked put.
What's that?
I was thinking just the naked put.
In October, which put?
Oh, you want to do October?
I'm sorry, in November. What put are you looking at?
The 160.
The 160.
30-ish delta. I mean, we're right there.
525, 550.
52-week low.
Okay.
I mean, I don't.
Okay, Mr. Aggressive. Let me just play devil's advocate. You
want to do the one standard deviation? We go to the 150s at 280.
That would be a better choice in my eyes if you're going to do just the naked put, or if you're going to do a Jade Lizard, I would do the 55, which gets you around $4 for the put, and you get $1 for the call spread. The 90.95 gives you no upside risk. So either one works for me. I prefer the 50 put, which gives you a better break even than the Jade Lizard.
I did the 50 put, 285.
50 put, 285, just banging them out. Okay, great.
It was marked 275, 290.
282 bid at 295.
You want me to show you my freaking orders?
No.
I started 288.
Nope. Take a look at the market from now on. The Nasdaq selling off a little bit here. When you're looking to sell puts, you got to have a little bit more focus on everything you're doing. What's our next stock that we have here? But I'll teach you. I know it's been a long time since you've been under my.
No, that's it. That's it.
That's it. 1, 2, 3, 4, 5, 6 out of 10. As long as we
but this is with a caveat that we already have 6J. We already have Palantir. So we really are 8 of 10.
Beth, can you fix that
Can't
forward
fix that one.
J7
there's no J7.
There's no such thing as J7, please. That's why. Please, can you fix that for us, please?
Right on top of that, guys.
Thank you. You're doing a great job, Beth. You're doing a great job. NVIDIA, Intel, ENPH, Tesla, Lulu, and PayPal. You can see all of those on the follow page. Even the S&P's up 20. NASDAQ up 2, Russell up 11, Dow up 220 and change. Volatility really hasn't moved, maybe upticked a little bit on this down move in the NASDAQ. Down 18 cents, bonds down 3, Bitcoin just over 110, but really going nowhere right now. We're going to take a quick.
Good. No, we've had some two-sided action today.
We've had some two-sided action. I think we've been kind of right on the market that wasn't going to kind of explode, although it did go a lot further, over 6,700. I didn't think we were going to get there, but you sold off nicely. Volatility has stayed relatively strong, which is another thing we said would go into the weekend. It'd probably stay relatively strong. So
gold's a nutty.
I don't talk about gold anymore. Up $33, back over 38. I can't.
It's a little spooky. It gives you bad vibes.
It does give you a bad vibe. I can't stand Frankie gloating in the YouTube chat and stuff like that because he's a gold bug. So I don't want to mention it anymore. I have the mic, he doesn't. We'll take a quick 90-second break. We'll come back. We got more Tasty Live after this. What comes up next?
A market measure.
That's right, my son. We'll be back in 90 seconds with Tasty Live.
Sponsored by the CBOE.
Sponsored by the CBOE.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University, number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, Be Mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade. At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but two trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
What's going on, everybody? It's a Friday. Core PCE came in pretty flat, and who cares about inflation? I mean, that's the most important thing is the market is going up. That's all that matters. Welcome to the most dangerous show on the tastylive network, folks. It's Engineering the Trade. I'm your host, Jamal Chandler, but forget about me. I got E-Money, Errol Coleman in the house today. What's up, man?
Jamal, brother, thanks for having me on again. It's always nice to hop up on here on a Friday, especially after some digestion, after some FOMC talk. Not that inflation or interest rates even exist, like you alluded to. So, how you been?
Well,
Thanks for having me on.
Given recent actions that have happened, I mean, we can talk about all that stuff. Not that I don't even like talking about that stuff. To be honest with you, I mean, I really don't. I don't want to make it seem like I really care about talking about inflation and
Right.
PC. I only care about talking about the things that make the market move. And you can't argue the fact that the market is moving on the fact that inflation was flat today. So therefore, it means we can get rate cuts. We can get more rate cuts now.
Did you say all-time highs? Is that what you said, Jamal? Because that's all I heard. But I don't know. Maybe.
I mean, yeah, right.
I don't know. I would be pretty impressed if we get to all-time highs within like next week. Would I be surprised? No. Would I be impressed? Yeah. But it feels like we've been living the same story over and over again. So I'm kind of in the boat of, is this a sustained pullback, which many of us might be? And we're getting a rally into the close, it seems like. So we'll see how it's going to pan out.
Yeah, I mean, look, I like the trading environment that we're in, honestly, and I'm kind of glad we had like a 3 days of pullback for whatever different reason. A lot of people kind of attributed it to, like, hey, I think the Monday we touched all-time highs.
Mm-hmm.
First time since November 2021 that all four major indices, Dow, NASDAQ, S&P, and Russell hit all-time highs. A lot of people like to hear that type of stat and be like, oh, okay, well, the last time it happened was November 2021. Okay, well, then is what happened after that going to happen? Which essentially led to beginning of 2022 interest rate hikes, which pulled the market down. Different environment, right? That's to quote the founder of the network, Tom Sosnoff, right? I mean, he always would say something like that. Like, and it's true. I agree with that. I don't think you can look at just that stat and say, oh, well, the same thing is going to happen as last time. It's a different environment, very different. One where we're hearing about tariffs all the time, even though that's not on the market anymore, but we're hearing about that kind of stuff. While it's a low vol environment and we've been in contango for 97 straight days, we still have a lot of things happening. Look at a lot of these names that are showing crazy upside skew. The Oklos of the world, Oracle of the world, Baidu and Baba more recently have upside skew. So there's volatility out there for those who want to find it. But I think 3 days of a pullback was actually pretty good because that's the only way we have a healthy market where we're getting like highs.
Yeah, I mean, the pullback lasted longer than I would have anticipated. Again, just based off of all the recency bias, I think the last time we got a decent pullback was it the beginning of April? And we really haven't visited those levels since then. And we're not even close to those April lows. So it's been a ride on these pullbacks. But I don't know if you've been looking at the volatility index, but I don't know. I was a little surprised on the VIX. There wasn't much of a pop or reaction in VIX. So that tells me there's not much fear creeping into the market yet. And if that's the case, it's like, do we need a stronger pullback than this in the future to get some type of reaction in VIX? If the VIX didn't even budge, in my eyes over the last few days. But
yeah, I mean, well, here's the thing. The VIX is the best way to think about the VIX that I always think about is
what the number actually means, right? And so
Okay.
VIX of 16 means you're getting 1% moves in either direction every day. And while we may look at now, the sheer number may make us, trip out a little bit, whether we're moving 50 or 60 handles in either direction. That's not really that much when the market, when S&P 500 is like 6,600, right?
No.
So that's really, I think, your measure. Like if we're down 120 points, then you're going to see the VIX pick up. I mean, if you're down 120 points up, I would say we're up 100. I think it's going to stay a little bit bid because we could see, again, we could see upside skew too. We just don't see it too often in markets, but we're really not moving a whole lot. And so I should say overall, like the index, but the thing I like about that is there's a lot of names, E, and I know you follow a lot of these names. We can pull up the platform. Hell, I'm short vol in quite a few of them, to be honest with you. I mean, for whatever reason, no other reason than, well, their implied vols are high and IB ranks are high. Like IBM, I never thought I would be short like a string on IBM, but when it's 36 IVR and yeah, it does have earnings coming up at some point, which this is not something I typically do. But when I saw this name and I saw the moves recently and I saw the IVR ticking up because of the name, I was like, okay, I'll get a strangle in here. Oracle, which has been, a little tougher. It's been kind of moving strongly more recently, and this strangle isn't looking so hot right now. But the IVR was so high, it was like 73. I mean, it just made sense for me to like get short some vol. And look, I've been the main one who I haven't been short vol like that in a while. I'm always mostly directional when vol is low, but I've had to find a couple of names where I could sell some vol. And for the most part, I mean, the names that you see here that are green for me today, most of them are names where I'm short vol.
Okay.
It's just been the play.
Yeah. I mean, how have you been feeling? I mean, I guess we can kind of see that expressed in some of the positions that you've been doing lately, but I was going to ask, what was your overall view in all the interest rate inflation talk? I know we brought up the topic, but how's Jamal feeling overall about it? Like the guy, his show. How are you feeling? We're here for you, actually. We want your thoughts.
The idea, dude.
How are you feeling about it, though? Are you comfortable? You waiting it out a little bit more? You need more info?
On like whether we're cutting rates or whatnot?
Just more so on how you're feeling right now and how you're digesting everything.
I'm a trader. I'm not really like an economist type of person.
Yeah.
I pay attention to these type of macro data just enough to figure out what direction is going to move the market. Like this morning, knowing that PCE was flat, I was like, okay, we should end up being up on the day because the last couple of days, especially yesterday, GDP came out and it was a good number. And this is the weird the weird psychology behind it all. GDP being a good number means like, oh, well, the market our economy is in such a good shape that we don't need to cut rates. And a lot of the moves that we've had in the markets is like, oh, we're going to cut rates at least 2 more times. But look, the one thing that I've learned in my time and I've been trading for 20 years. These last 4 years are the first time I've ever paid attention to inflation stuff. I mean, ever. Because you just didn't have to, like in the time. And so in that time period, what I've realized is if the Fed hikes rates, it's probably for a bad reason, and they're trying to simulate something. If the Fed cuts rates, it's probably for a bad reason. And so
you can't win, is what you're saying.
Well, I think we can win because we're option traders. We can trade any way we want. But yeah, you can't.
No, in terms of whatever the outcome is going to be, we might be cutting or lowering more so is what I meant.
Yeah, and so it's funny that we're talking about this today. Totally unintended, swear to God, people. But it's funny we're talking about this, right? Because you know this better than anybody. You learned under Tom. And one of the things that he actually made me think about is, a lot of the time I can tell you what's going to happen on some of these like macro numbers, and you really can't necessarily trade it directionally or not, Lau. And I think that's what the network was founded upon, right? Like people were talking about, oh my God, everybody's out there talking about, oh, interest rate, core PCE. Yeah, whatever. What's the trade on that though, right? Like what's the trade on that? And for me, I haven't traded anything specific to core PCE today. I kept on. I personally have a lot of positions that are short vol. So I'm just kind of watching vol bleed. I'm glad that we're up and I'm glad vol is kind of calming down. I don't need 120 point down day in the SPX that's going to make vol go up because I'm collecting a lot of theta right now.
Yeah. I wouldn't mind a 120 point down day, so don't cancel that out for us, Jamal. I would.
I know you would.
Kimberly as well. Kimberly wants Nasdaq below 22,650. I don't know where we're sitting right now, but that doesn't sound too bad.
Jeez, Kim. Dude, for a second, I gotta talk about your stuff you've been doing recently. I think we've all been paying attention to the chat a lot. I mean, it means a lot to me, like the people who watch the show and all that. But you and Gus, the thing you guys are doing, man, I like it, man. A lot of people, you guys have gotten like positive feedback on that, man. Talk about that show a little bit.
I mean, outside of the emojis that we were playing around today on stream, it was kind of funny. We were breaking down some trade opportunities that were taking, some losses where we had to manage risk, and then some green trades that panned out today. But I was finding emojis to put out those trade ideas to express, the emotions that I was feeling at the time of putting those trades on, just to give it more of an accurate representation of that execution process and at those specific levels. So it was fun to play around with those things. But no, just been using a little bit more, volume profiles and, a lot of those futures products too. I know Kim is in that chat a lot too. She trades, I think, SPX a lot too and NASDAQ. But a lot of those NASDAQ markets, a lot more directional trading, and then just being mindful about sizing. Because we're trading a little bit more directional, we have the conversation of, when to size in, when not to size in, when to potentially scale out, hypothetical scenarios and things like that. So we kind of just touched on some of the price action from this week. But no, it's been pretty fun. It's been fun for sure.
Yeah, man, you guys are a great pairing, man. That's awesome that you guys got the thing up.
So when we hopped up on here, someone had mentioned, I think it was Jared, if I'm not mistaken, he had mentioned, oh, no white shirt for Jamal. He was saying that because before this, Gus and I had walked in here. I was like, yo, nice shirt. We're wearing a both white tee. And then later on, we hop off the show, we recognize we're both wearing the black pants, white shoes, like identical, matching, unintentionally. So, Jamal, we're going to have to get you a white tee too, brother. Three amigos.
Actually, it's funny. I wear white tees quite a bit. I almost wore one before the show. That's
Someone
funny.
said, "How are you feeling?" I said, "Fresh, fresh white tee. You feeling fresh, right?"
Most definitely, always. You know what I mean? Next week is it's jobs week basically, and so everybody's going to be talking about the jobs report.
Yep.
And again, we talk about data right again. Everybody's going to be, look, if you're a bull, as bad as it sounds, you're looking for a bad jobs number. I mean,
when has it been bad to be a bull in the last 5 years? Jamal, if it's a bull, it's a good day for you. Like, I feel like most of the days, because
2022
valid, 100%. Oh, you're right. It's that recency bias again. You see, even I just expressed that recency bias. Recently, it's been all-time high, all-time high, all-time high. So I'm already forgetting about 2022.
I know you're usually kind of like, you do want a little pullback. You're usually kind of short some delta.
A little bit. I don't know. This aggression to the upside. I know we have the upwards drift and things like that, but wow, this market has been pretty aggressive to the upside.
Yeah. And it's not going to change, I think, until, if we don't drop after this overnight news about tariffs coming back again. I mean, if we're not dropping on that, I'm not exactly sure what pulls it up, honestly.
Yeah.
Looks like about an 80-point move expected between now and the end of next week, including jobs reports. Oh, you know what? I just remembered. I got to close one of these strangles. Hold on, let me go through. So I had to look, obviously all the red stuff are my strangles. And recently I was like, okay, which one of these has vol come in? Was under 20. And I noticed, yeah, there it is. Bingo. Micron is under 20. We got to close this out. We got to stick to our guns on this arrow. We can't be out willy-nilly. You know what I'm saying?
I was just skewed to the downside a little bit. Oh, closing that.
Take that out.
Oh, you're closing that one right there. MU. Okay.
Yeah, it's 16 IVR. I actually put it on for earnings. I put which is probably the first time in, I don't know, a very long time where I put a strangle on for earnings. But I just figured, I also did some calendar calls, spreads and puts. When the chart was up here, I'm just like, I don't really know if there's going to be much more upside on this. That's usually why I put on calendar call spreads. So I put on a couple of calendar call spreads, but then I put on a couple of calendar put spreads in case it tanked. And then I was like, you know what? The IVR is a little bit elevated. I think I'm going to put on a strangle too. And lo and behold, the strangle is the thing that won the most. So I guess that was the play. But yeah, it's time to get up out of this thing. I mean, I didn't think it was going to move that much, honestly, because I feel like the last few big tech names were kind of quiet on earnings. They're more noisy outside of earnings and kind of quiet on earnings.
Okay. Yeah.
So that's where it came from. So
IV's pretty low on MU now. It's pretty much been sucked out of there, right?
Yeah, it kind of is. Another one that's getting close. I just put on this Lulu earlier this week. I might need to close this too by the end of the day.
That Lulu.
I was a little worried last night when I heard tariff stuff because this thing's gotten rocked with tariff stuff, and then I heard tariff stuff again. I was like, I might have some
Oh,
splaining.
I actually didn't recognize Lulu's been destroyed this last 12 months.
Yeah, man. It's gotten rocked, dude. Like,
That's what happens. You got $150 pants, right?
yeah, I know, right? You know who loves, well, he used to love Louis.
talking
He
about
hasn't
Nick?
talked about it much.
Nick?
Nah, actually, Josh.
Oh,
Josh used
really?
to
I didn't
talk
know
about
that.
it. Nick loves it too?
Nick does. Don't let him hide it from you. I hear him say.
He rocks the Lulu pants?
So I remember he made a comment about it a couple years ago. We filmed a vlog for Tasty not
Yeah,
too
I
long ago.
remember that.
In the Lulu shop, and he had some on, was talking about how they were like his favorite pair of pants. So you know where to find Nick, guys.
Yeah, for real.
In the Lulu
you
shop.
guys know what to do. But at the time too, when was that? Let's see. Hold on. Now I gotta get messy. Hold on. Let me see. That was, you said a couple. Was that 03 or 23 or 22?
That might have been. I think K and I might have been doing it. If it was K and I, that might have been 21. That might have been end of 21, 22, beginning of 22, maybe.
Yeah, that was a while ago.
Yeah. But Lulu was definitely popping off around that time. That was like on its
Yes, for
come up
sure.
phase, right? So
I mean, this stock, it was due for some regression, man. I mean, $400 stock, like you said, selling $150 pants and shirt. It's come on, man.
No, it is crazy. I mean, there was a huge takeover in that space. I know you've seen the Aloe clothing line, Aritzia, but Lululemon was a huge driver to all those other clothing lines that we see right now. And again, it's
when you're
very
making money-
aesthetic, right?
Well, yeah, and when you're making money hand over fist, sooner or later, some other copycats are going to show up.
Oh, 100%. They're like, this is working? You guys are just selling these for $100 a pop and people are buying it? Oh, if people are buying it, say less. Aloe, create your own. They're like, wow, there's a demand for that. So,
that's a trip, man. So yeah, what have you been trading? What up with you? I tell you something.
I think I was looking at some of the Chinese names recently. I got some short delta on not too long ago in Baidu, I believe it was. I think Baba had some really good news. There was some great AI news. One of the Chinese names have released. It kind of made the whole sector go up. Oh, maybe it was both of them. And that was literally, I put some short delta on maybe a day prior, and that news comes out like that morning. So there's like 60 days left till expiration, but I'm going to wait that one out. But I've been keeping an eye on some of these Chinese names. They've been popping off over the last 6 months at least.
Yeah, no, you're right. They have been into these moves. These are some of the other names. I mean, I'm quite sure these are a lot of the same names I'm talking about, like that have had some upside skew. It's been usually ones with some kind of AI news, and so vol goes bid and upside goes bid. Yeah, I've sold I sold strangles in both Baidu and Baba recently.
Okay.
With hopefully the ability to take them off soon. This one's 24. See, this is another one where I'm just gonna have to probably take this up. I might wait till the end of the day. I usually wait till the end of the day to take off a lot of positions, especially shorts, because they come in more at the end of the day, especially on a Friday, unless it was something crazy was going on in the name that particular day. But it's not the case here, so I'm gonna probably close a couple of.
I got you.
Yeah,
you been in those Chinese names for a little bit?
No, I mean less than a week maybe on both of them. I mean, barely. I don't think days open. Yeah, less than. I mean, Baba. Yeah, I literally put Baba on 2 days ago. I think I put Baidu on last week. Yep.
Nothing in the metals. Gold was another market that I've been eyeing, but waiting for things to cool off there. Silver following along as well.
Yeah, nothing in the metals for me. I mean, I've definitely dabbled in them throughout the year, mostly on the long side, and I've got rewarded for that. Anytime I try to get short, obviously, you look at these charts, it just doesn't happen. It was wild because I remember being long into this move, stayed long a little bit, and I was like, okay, I'm out, and yeah, it just sat here for months, right? And this is what happens in momentum names sometimes. And make no mistake, gold and silver, they're momentum plays. And so after sitting, finally, again, boom, the next momentum, here comes the next leg. I look, you guys can do what you want. I am not shorting this yet. If and when I do, it will be with MGC. I like MGC. I think it's a pretty good product, actually. But I am not shorting this until I see some weakness. I mean, and by weakness, look, this is not weakness when it pulls back to the 1 week moving average or 2 week moving average. That's not weakness. I want to see like it below the 2 week moving average and maybe sitting somewhere right here, right? Like 37.29 or 30, like a little below 37.
Right.
I think then maybe you might want to try and short, but trying to short as it's at all-time highs, this is the kind of shit that's going to happen to you. I mean, it's just going to keep going up, Yeah. Not doing it.
No, 100%. It's one of those things on my end where I don't know where to get involved. You ever been in a position where it's like, this is in play right now, but I don't know how and where to get involved because it's not it's not cooling down. So I've actually been a little bit more on the frustrated end of not being able to know how to get involved in some of these metals, but maybe it's not a time for me to get involved right now. So on the sidelines until then.
I love what you just said, man. And I've had that. Have I ever had that? Hell yes, a lot, all the time. I've gotten better about how to feel about it, but the thing is it stems from
What's
the
that?
fact that you learned so much, you know so much now, right? And so you know that you can make money in any given market. If it's going up, cool. If it's going down, I'll figure it out. If it's trading sideways, I'll figure it out. And so I think there's that tendency a lot of times for us to just want to put a trade on because you're like, this is happening right now. I want to do something with this silver. Do I want to get long? Nah, it's a little too elevated. I'm not getting long. Maybe I should get short. And then you try it for a day and you realize it doesn't work. You're like, oh man, I'm annoyed. And then you're like, well, vol is up. Maybe I'll try to sell vol, but you needed to sit still and it's not doing that, right?
Right.
So good point. Yeah, a lot of times it's got to be like, look,
I feel like you're in my head a second ago. I'm like, yes,
Dude,
exactly right.
I've been there.
Yeah, exactly right. Actually, you're psychoanalyzing me right now.
I've been there a lot, man. And so a lot of the hardest thing to do and is the smartest thing that you're doing right now is to be like, you know what? If there's not a trade that I love, then I'm not going to do anything. Not easy.
No, it's not. Especially when you look at gold and then you look at the silver market. You're like, wow, both markets, opportunity to take advantage of that you might be missing. So,
I feel kind of like a G right now because I told people for weeks, I was like, silver's going to at least get to 45, and I had a position on, and I was like, I'm holding it till then. But I ended up closing it a little bit earlier because I wanted to roll some funds into something else. I got out, I think when it was around 43 and change. Now it's 46. I told y'all, man. Look, I've seen silver go crazy before. I saw it in 2010, 2011. It was wild. But just be aware when it starts going back down, it will be nasty.
When you were looking at silver back in the day, when you were looking at silver, what were you trading? Was it more of the futures contracts themselves, the options on some of the futures? You know what vehicle you chose or prefer to choose? Yeah, back in whenever silver was popping off then, or even now, do you?
So I was working at a trading firm at the time, and we were buying like big size lots of SLV and GLD. Yeah, I mean, that's when I used to trade big E. We was trading like 1,000 lots, bro.
Big like dollars. I was watching you on the tape. I see those big orders. There's Jamal right there on the tape. Yep.
Yeah, we was trading like, I mean, not the 5,000 lots. Sometimes the 5,000 lots.
Yeah.
So I'll tell you right now, the type of thing that we would have done at a time like this with silver, and you see SLV, and you're like, this thing's got another 10% to go. I'm probably these are really cheap. I'm buying 1,000 of those, and if it decides it wants to go to 50s, you buy like 2,500 of these. I mean, these are so cheap. Like for firm traders who get to trade like big lots.
Right. And I got a couple questions after along the lines of size.
You buy 1,000 of these.
Okay.
This is 32 delta, right? So this is 32,000 shares, right? Let's just say that position alone. Right? No, am I tripping? Yeah, no, that's right. 10,000. Yeah. So these 32,000 shares. So then you sell some stock against it. You might sell like about 10 to 15,000 shares, sell half your gamma.
Okay.
And then now you're long about 10,000 to 12,000 deltas in SLV. And you just want it to move. Even if it doesn't move upside big, if it starts taking downside big, then you're going to make money on your stock. But you just want a huge move, right? Like you don't care about anything else.
I'm sorry, I might have missed that. You purchased some equities first. I think I might have missed that part.
No, you buy the calls first, right?
Right.
You buy the calls, and then you sell like half of the. So if you buy 1,000 of these 45 calls, you're going to have 32,000 long deltas, right? So then you sell like 10,000 shares against this. You sell 10,000 SLV shares against it.
Yes.
And so now you have that long 1,000 calls, the 45 calls and 10,000 short shares, and your long deltas. Your overall, you are long deltas. You're long like 22,000 deltas, right? So you do want it to go up.
Okay.
But if it tanks, right? And I can't determine how much gamma this would be, but it all depends on like what we would say. You want to be like 1 times the amount of delta you have wants to be 1 times gamma. So let's just say in this case you have about 10,000 gamma on this. So I would say probably instead of selling 10,000, you might want to sell 20,000 shares against your long calls. And now you have 10,000 long deltas. You probably have 10,000 gamma. That's your position. You're long 1,000 of those 45 calls and you're short 20,000 shares against it. And what you want is it to just either tank really hard or do another huge like big move like it's done recently to the upside, which truth be told, what you really want, you want it to jump up big again, jump to 45 in a meaningful way and get really bid. And then your upside, your calls, the 45 calls are really bid. You're losing money on your stock, but you're making money on those calls, right? Let's just say those calls are going to at least double. These calls are going to be
$2, $2.50.
Yeah, at least $2, right? Because like, let's look at the at the monies right now. They're $2.
Yeah.
These are going to be $2. So you've made $2 on 1,000 calls. And you're losing probably $3 per share on the 20,000 shares you're short. So that's 60 grand. But you made I guess 100 grand on the calls that went up. So your net up 40. And then you're able to your delta has just changed. You decide if you want to either sell more stock or whatever you got options at that point. You can either close half the position, you can sell more stock.
When you say close half the position, are you talking the calls or are you talking the equities, the stock?
Both.
Okay.
Right.
So
Both.
you would do
close half of those calls.
Right,
you definitely want to close. You want to buy, even though it's at a loss. You want to buy some of that stock back.
Yeah.
Because again, you just want to make money on one of the two things. You can't make money on both, right? But they're there so that you have that option.
No, that's
the worst thing that happens is if it just kind of sits still, and so it's only going up 20 cents a day now. You're in trouble.
Okay, so when you think about it that's very interesting and very creative, by the way.
Prop trading.
Yeah, that's very creative. I gotta ask, in terms of right, because 1,000 shares, right, more size, you have to be a little bit more meticulous with your risk. How do you know when to start managing your risk before it even works out, before you get to the second phase of thinking about how to manage this? Because I got a couple different options now. Like, from order entry, is there a set dollar amount typically? What is a logical reasoning, I guess, for a lack of a better way to put it, way somebody would think about the risk on that position? I just don't know how you would, frame that up, I guess. I'm really curious about that. Yeah.
So you're long the 1,000 shares. So what we're talking about, just for people who hadn't caught up, we're long 1,000 of these 45 calls, right? And we're short 20,000 shares against it. So the worst thing that happens is if, again, like it goes up slow and the upside vol starts coming in, you're losing money on your calls because upside vol starts coming in, if it does. And if the stock is drifting higher, we're losing money on the short stock, right? So that's when you got to start analyzing, okay, what's going on with this chart? And is this chart turning into the gold chart that we saw back in April, where it starts to just do this? Because again, with that position I just laid out, this is the last thing we want. You don't want this.
Right.
Because once it starts sitting still, the vol is going to come in on those upside calls, and your stock you're just not really making that much money on your stock.
It's going to eat you. Okay.
Going to eat you up. What you want with a position like that is a big, like I said, upside move or a big downside move at some point. So to answer your question, the way you start managing your risk, you just got to pay attention to the vol. Is the vol coming in on any given day? Is this big move over? Are you going to get another big move? Those are the things that you're weighing in your mind at that point.
So let's say you were hoping for a directional move to the upside. And let's say we start moving to the downside. You want to manage your risk. Would it be more so stopping out of the full position? What would be more reasonable? Stopping out of the full position or stopping out halfway, or like what would that look like? Is it just, okay, I'm wrong, I didn't even get to the adjustments, I'm gonna get out and reorganize?
Yeah, this is where prop traders essentially have to determine what their real belief is. Do they really believe that this is going to tank? And if so, you're just leaving the position on and you're hoping to make money on that short stock, even though the win on that should offset what you lose being long those calls. And again, you just have to determine how much you feel, how convicted are you that you're going to have a big move coming in either way or one way or another.
Okay.
That's really what it boils down to.
I just thought I'd ask a lot of the what's going through your head during that, what is going through your head reasoning back and forth for you to make those type of decisions. But you kind of alluded to confidence and conviction. That'll kind of determine a lot of the moves that you make. Okay.
And that's what like a prop firm trader is paid to do, right? But it's not an easy life. That's why honestly it's a lot easier to trade retail style the way we do it. Because again, there's a lot.
Right.
There's
a lot of mental capital, right?
Yes, and I said the size of that position on purpose because that's what they're paid to do. Take on big risks like that.
Right.
Not as retail. I know people always ask about this, and I'm glad you asked a lot of the questions because people often ask. I'm glad to be able to explain it.
Yeah, I mean, the way that I think about it sometimes is like, let's say you're trading for a prop firm, right? in high school, I can hit a 3-point shot, right? There's a lot of people can hit 3-point shot, right? Steph Curry, you know, he nice with it too. He can hit a 3-point shot, but why did he get paid the big bucks? I can do the same thing from the same range. So you know, I can do the same thing. I have the same mechanics. Oh, he can do it at a higher level consistently with a whole nother level of pressure because there's way more risk on the line. If he's not performing, there's a lot of endorsement deals. There's a lot of this, you know, those type of things. So I feel at the prop firm level, when you have more risk on the table like that, you're doing the same mechanics, but there is more of that mental, I guess, experience you might need to execute. Execution is almost everything, right?
Oh yeah, definitely. Getting in and out, it is.
Yeah, because your idea can be right, but if you're messing up the execution, then at the end, like, it doesn't even matter. Unless you get no takeaways from it and you don't, you know, go back journal, see what you could have done better. But that was a really good explanation.
Thanks, man. Thanks. I know, unfortunately, we're at time. We got to go. But you guys heard it here first. Arrow wants to do a 3-point competition with Steph Curry. Reach out to his people, folks.
Steph Curry, Jamal. It's me and you, buddy. Me and you.
Folks, thanks for watching the show. And as always, be smart, be patient, trade them small, and trade them often. We'll see you.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Hey everybody, Tim Knight. Happy Friday to you. We're going to wrap this week up. We've had a great week for precious metals. Palladium in particular, which I get back into mercifully, is having another good day. Gold, record highs. Silver's getting close to record highs. And palladium as a percentage mover is the biggest, about 2.42% on the front month. So really good stuff happening in precious metals land. As far as equities, green across the board. My own shorts are a mixed bag, green and red, but ES, NQ, RTY, YM, all green, as well as crude oil and, as I said, the precious metals. So very risk-on day for everybody. Earnings season remains weeks away. The only big economic event next week is on Friday before they open the jobs report. Some of you may have seen Tom's, I don't think farewell video is quite the right way to say it, but his sort of like the time has come video, which I thought was very well done and very well spoken. I'm still here, but there's going to be a change starting on Monday, which is with the charting that I'm going to be using. What I've used for all these many, many years has been my own creation, slopecharts.com. which I'm still going to use in my private trading and to help me make decisions about what to show you each day. But starting next week, I'm going to be using the Tasty platform for charting. It's going to be a little clumsy at first. I am a master at slope charts because I created it. So you'll have to be patient with me as I sort of, ease into the waters of a different charting platform. I'll make the same announcement on Monday so people aren't completely confused. But slope charts is still there. You're welcome to use it. It's a free platform, and I love it dearly. But to align with what you see here, with what Tasty provides, we're going to switch what I use for my charts on this segment. So just FYI. So let us now begin our fond farewell, not to Tom this time, but to slope charts as we go through the symbols I picked up for you today. Here is the spider, which broke on Wednesday. A lot of indexes, a lot of ETFs snipped below their trend line on Wednesday, fell some more yesterday. They're up today, but importantly, a lot of them are still below that trend line. And spider's a good example of this. We broke it Wednesday, we stayed below it all day, yesterday and today. So it's pushing back toward that line, which now represents resistance as opposed to support. The diamond, just like everything else right now, is green. And this is a great example too. Here's the failure on Wednesday. Not very dramatic, very subtle, just a few cents. Thursday, all the day below it. And today, mushed right up against that line as resistance. So we'll see if that matters. We'll see if that gets repelled on Monday. It should, if this line's doing its job. And the IWM is, I didn't draw the trend line on this one. On this one, I've been tracking. This was the former lifetime high here. We beat that a few days ago, and the peak was on this Tuesday. And we slipped below it Wednesday and down again yesterday. And right now, we've sealed this little gap that was created. So this is a little bit of a different form as opposed to the others. Overseas, emerging markets, these are actually down a little bit. Here's the EEM, which has been slipping pretty much for the week. Had its last little gasp on Tuesday. It was up, but then Tuesday, Wednesday, Thursday, Friday, it's been undoing a lot of the recent gains from last week. One element in that is China FXI, which is down today, and it spent the entire week below the close from last Friday. And part of what's going on there is the powerhouses like Alibaba, which have been juicing this thing higher, are losing some traction as well. So that's bleeding over to the general indexes. Now, as I made mention last night, Costco, COST is the symbol, did their own earnings. They're kind of a off-cycle earnings company like NVIDIA and Nike and some others. And they dropped. They're down over $25. It's nearly $1,000 stock. So, but it's been down around 3% or so for the day. I was not in position, but I am now. I shorted it earlier today on strength because it was undoing some of the strength. It's a nice clean trade, and especially now that since earnings out of the way, it's that uncertainty's gone. So shorted this one about an hour ago or so, and have a stop just above the price gap, which is defined as Thursday's low. Now, precious metals. If there's one thing that I'm really pleased with in terms of kind of the big picture, it's where I've been seeing precious metals going. I got very vocal about silver late last year, and I really got into ratio charts because they are so helpful in teasing out the big under the surface movements that are happening, and they've served us all well. Gold, platinum, palladium, silver, everything. Miners just continues to thrive. This is an exceptional bull market. It makes the likes of NVIDIA look like a waste of time. This is just tremendous run. And we had a brief sink on Tuesday and Wednesday. Mercifully, I actually made money on my miners short and GDX and going long dust, and I got out. And then, so the only fumble I made was selling my palladium, but I got back into it, as I said yesterday. And so it's up again today, but missed a chunk of those profits. But this was a literally like a 1 day dip in this before it pushed back higher. So there's GLD up again, almost 1%. Silver doing amazing. This was the base. And as I said, late last year, I got really wrapped up in this thing. It was frustrating for a while. Even here, you can see that it just couldn't seem to really get a trend going. Up and down and up and down, it is wiggling and waggling. But finally, you get this acceleration, which is now there's like not a downtick in sight. So you can see how the hesitation and the frustration and finally here, in retrospect, we can see it really took off. And now it's kind of unchained, just sailing higher. So silver's doing fantastic. And my big obsession, palladium, up again, PALL. This one I first started getting into when it was around 90. And as with silver, it's been pretty frustrating because it's very messy base down here. And after it burst above the base, it just fell right back down again. Hopefully it won't pull that stunt again, but in recent weeks it's been doing very well, and it seems likely that we're going to cut above this multi-year high in short order. So you can see this is a even bigger and better formed base than this one here, and you can see how good the results of that were afterwards. So fingers crossed. But the junior miners, these are up and going to close that multi-year high, as it seems. And the tried and true DRD, which I suggested when it was around about 16, that's up about 75% in the past 3 months. So that's been just a real sensation there. And you can see here, geez, I'm going RFK on Junior on you here. This is the, I just get choked up about DRD. It's doing very well. And it's got to pull back at some point, but it doesn't seem to be bothering. It's just been sensational. A few minutes left. Not a great day for shorts. As I said, kind of a mixed bag. I'd say about half my positions are up, half are down. These aren't necessarily all down, but here's a few I just wanted to highlight. Meta falling again, about $4.50. So that's moving the right way. Seagate Technology, this is a new one. And a tight stop on this, anchored to Wednesday's low. But you can see that's been a tremendous ascent, just virtually a straight line for the past few months on STX. United Health Group, down a little bit, like so. Advanced Micro Devices, AMD, even on this triple-digit NQ plus day, AMD is managing to sink a bit, 1.16%. Global Payments, GPN. Here I've pointed out the failed trend line right here. And like so, a very pretty head and shoulders top. And there's the neckline right there. Oh, I just showed you AMD, excuse me. Oracle, ORCL. This one has had a good week for the bears, mostly. Monday was a big shot higher. It did not beat the prior peak here, but Tuesday, Wednesday, Thursday, Friday is undone that quite nicely. And one more of these, SWIX, Skyworks Solutions, SWKS. And in this instance, we had a big gap, big breakdown, a recovery, stalled out here. And my hope, obviously, is that we break down from those levels. Semiconductors remain a key foundation for this rally, and it's held its own here over the past 7 days or so. It's just been kind of hanging out near lifetime highs, untroubled by the world. And NVIDIA too, which is by far and away the biggest component of that, has spent months at this point lingering around this area, holding on to its massive gains from earlier this year. As far as XLB goes, I made mention of this when it was near resistance here. It has broken down nicely, and it's sneaked under this trend line as well. So maybe this analog will work out after all. those blue ovals being the basis of the analog. But as a last chart to kind of celebrate, we're there. We're finally there after all this waiting. This is the Dow Jones Composite divided by silver. This is the ratio chart that's been so key for the first time ever. This pattern is complete. We are below it. And I imagine that's going to start off a very interesting ride ahead for months and months to come. So have a good weekend. Thanks for coming by, and I'll see you here Monday with my fresh new look. See you then. Bye-bye.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply. Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock, and short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock, like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Ring the alarm, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Mikey, my friend, we are back for the last call of a crazy, wild week in many, many ways. We currently have E-minis back to 6,700 or just a skosh below that.
at 66.94, up 34 handles. Did look like there was going to be a little bit more to the downside, but they got scoopy this morning after the PCE came out. Right in line here, so we'll see if this continues into next week. You got the NASDAQ up 90 here, the Dow up 305, and the Russell up 18. So everything having a nice little bid today. You got oil catching a little bit of a bid, /CL 65.47, up 49 cents. You have volatility futures down 58 cents. We're below that 18 handle. We got as high as 1840 was the high of the session. Bonds down 6 ticks. They did tick into the 15 handle for a short period this morning. You've got gold off the highs. It was up about 40 at one point, reaching new all-time highs, 38.14. It's now sitting at 3,800, basically on the dot. Gonna pin there for a little bit. You got silver mooning as well, up another $1.30. It's gone from 39 to 46 in quite a quick period of time, 2-3 weeks. Bitcoin has had some two-sided action. Bitcoin got as high as just under 111. It's now near the lower end of where it's been trading, 109 and change here. The 109 was kind of the low of the session. ETH has bounced a little bit, up $78, just above 4,000. So definitely some choppy two-sided action today. A lot of wild moves in, I was looking at EA, which is a stock that we put on a position. I think somebody in our YouTube chat, or maybe it was when we hosted What's Your Assumption or Fast Market the other week. They put us in a call diagonal spread in EA. Stock's up $24, $25. I guess there's some sort of buyout rumor there. You've got stocks like Intel was up $2 or $3. It's at 35 now. On the flip side, you have some of the high-flying names like your Oklo down, $9 or $10. INQ was kind of weak today as well, down $2 and change. Nvidia has done the, red to green to red type move today. Apple and Amazon have had some two-sided action. It certainly feels like it's a lot of choppiness underneath the surface, despite the rally that we're seeing today.
Yeah, for sure. And we have EA up as much as Costco is down, but EA is a fifth of the price. Yeah. So magnitude of a move there. But Costco had earnings yesterday as well, down a little bit. Actually inside the expected move, even though the expected move is only 3%. Somehow it's inside that. But yeah, I had a call calendar spread there. I'm just going to leave it on. The short option with 21 days to go still has $125 of extrinsic value. It's down a little bit, but if this move reverses, it'll be a nice winner. And the long option's out in November, so plenty of time there. And yeah, I'm trying to short gold, but it just won't cooperate.
Oh, you can't. I mean, it just the volatility here in gold is like 12, 13. Well, it's up now. It's in like the 17, 18 handle in some of these expirations, especially in the near term. But volatility in here, realized volatility has definitely been coming in above implied. So it's been a tough one to trade here, no doubt.
Yeah, I speaking to the low implied volatility, I got into a gold put diagonal spread in GLD. Mm-hmm. So went really far out in time. I bought the December 345 put and sold the 335 in November. So plenty of time. And the lower the IV is, the cheaper it is to get really long term with the directional assumption. So it's down a tiny bit, but I'm hoping that at some point we can get a little sell-off in GLD, and with that long-term spread there, it'll be just fine if we do.
Just to show that risk profile, how that looks, and I had an email about somebody looking at these. So like on the right side menu, you can select which positions to see. I have a whole bunch of little butterflies and diagonals and a whole bunch of stuff in here. So you can select which options you want to look at. I pulled up Mikey's 345, 335 put diagonal spread. You just click those two. It'll give you this risk profile. You go to the Theo line, which is this button right here, and the analysis mode. If you click off the analysis mode, you can see all the rest of your positions. But you can use this to kind of estimate changes in the position, like if you had like short-term volatility come in, maybe you have a little bit come out of the further dated expiration. You can move time. All of those things are adjustable there, just to give you an idea of kind of what that position looks like. But yeah, it's, you look at that chart and you're like, well, I got to lean a little bit short.
Yeah, I'm trying.
Yeah, no,
You're
not
trying.
successfully. That's
No.
for sure.
But yeah, other than that, haven't done too much today in the old portfolio. There's still some things that are churning along. I've got some exposure in some other names, but for the most part, I only have like 10, 12 positions on. So a lot of cash on the side as we sit near all-time highs with the VIX at the bottom of the barrel, looking for some more opportunities. But next week, there are some interesting names reporting earnings. We've got Nike on the 30th after the close, Paychecks before the open, STZ, Constellation Brands on the 6th of October. That's the next week. But basically, it's Nike or bust for earnings next week.
Yep, and we do have our SPX guess the market, so that'll be another little event. SPX here at 6641. Our very own Miss Katie McGarrigle, just 25 points or so away from the perfect pin. Be incredible.
Could be Katie. Certainly
Yes.
could be.
Another thing moving today, Mikey, the dollar. You seen some of those? Any of your positions working? A little bit of a down move here in the dollar after yesterday's little squeezy higher.
Good call out. So my short dollar yen is working. It's up $8. I think I'm going to take that off just because my other positions are crawling back. But yeah, I've got an Aussie dollar, dollar CAD, British pound franc, and New Zealand dollar in the Tasty FX platform, but they're all just chopping around. I need some more movement to be sure. But yeah, I think as it stands with this week and the move today, I think this is kind of par for the course. We had the PC this morning.
What, a buy the dip? The buy the dip is par for the course?
Yeah. I mean, I think the market was selling off in anticipation of maybe some hot numbers this morning, which we did not get. And now the market is drifting higher. So this is to be expected with the VIX at 15. You're going to get some chop, but for the most part, you're going to get macro complacency until something else happens. But
yeah, it's funny. We were looking at the VIX at 18 yesterday. Or 17 and change. What was the high yesterday? 1774. We're now at 15. I mean, it's just incredible.
Yeah.
The buy the dip is fast and furious.
Yeah, and there's like no weekend risk being priced into SPX. 3-day expected move, which is Monday, only 28 points to either side, which is very low. That represents a 7.6% implied volatility. Just not much is expected of this market, which is unfortunate. But there's still some implied volatility in single names we can find. There's always high flyers and products that move regardless of the VIX and S&P. So yeah. I will keep my eyes peeled for any opportunities. If anyone in the YouTube chat has anything that we want to take a look at, we can certainly do that as well.
Yes, for sure. And we did a bunch of trades this morning in fast market. I'm going to work on being a little bit better about adding comments throughout the morning session. I'm going to do it kind of after the show moving forward. So I'll give you a couple comments on there on some of the trades that we do, why we did them. But we did a number of them this morning. We had an M-Phase trade. We did PayPal. We did Lulu. So we had a couple trades that we did throughout the session this morning that were nice little trades. A couple more I got to put on there.
Lovely.
Yes.
Speaking of trades, I think I'm going to play into this nothingness. Throw on a little weekend Iron Condor here.
Okay.
just the cookie cutter setup, I'm just going to go to the expected
For
move
SPX?
for SPX.
Okay.
I'm going to do the 6610, 6605, 6670, 6675. So just a small little 5-point wide iron condor to play for a flat open on Monday.
There we go. I like it.
Yeah, might as well.
E-mini's up 33 now. I wanted to throw up some of the events that are coming up. We have our event in Dallas, as well as Seattle is still available for sign up for the three amigos, like Katie and I. And then Tom's shows are still going on, so you can still see Tom live. Last hurrah, the final countdown for Tom's shows. So those are all open. You can see him live and chat with him. Bid him adieu.
Bid him adieu.
Yes. And we'll have more info. So I know that a lot of people were wondering about the live show and what the morning live show and the full day show. We're still doing our normal show, 8 hours a day ish. So 7 a.m. to 4. And then there's going to be some switching up of hosts. Obviously, there's things moving pieces and new parts of the show that will be coming. So we've incorporated Gus and E in there. Mikey and Jamal are going to be taking over Option Trading Concepts Live and bringing on guests and doing all sorts of fun stuff, continuing what we do with trade ideas and bringing Katie on and all that good stuff. We're going to do, for the last call, have a rotating cast of people. So you'll get new views on the market day to day with new people. So it'll be good to kind of get that a little differentiation there. So we'll have more info on that on the morning session on Monday. Good stuff to come.
Yeah, it's going to be fun. The OTC live show will remain as is, except you being replaced with Jamal. But we'll still have Thomas on Tuesdays, Glenn on Wednesdays, Katie on Thursdays. So we'll roll with the schedule as is for sure. Anything else catching your eye here into the close?
Well, we talked about the EA thing. That was a pleasant surprise. I also had a position in Lulu that had a nice little bounce today. We sold a put there. I took a couple bucks out of that. Volatility has come out in a lot of places. I have the strangle in BE that I'm still holding on to. That was a face ripper for quite some time, but vol has certainly come out of there. Today was kind of a choppy day. I don't take a ton out of today. I think there was a little bit of buying of the dip across the board here. But yeah, nothing stood out. I would say my thesis for today, and you can even see it kind of on the S&P 100 list, it's almost like the government basket stocks are being bid up here. And by government basket, I mean the stuff that has been either bailed out, we've taken a stake in, or that we could potentially take a stake in the future, a la Intel, that kind of situation. So you have Intel moving higher, you have Boeing moving higher. I put that in that basket. You have Ford in there. You have like some of the oil names in there. It seems like it's kind of like that's the flavor of the day today. Is like the speculative, you had that LAC, that company, it's a lithium miner company. I was looking at Albemarle, which is another like one in that kind of space, which has seen a little bit of a bid over the last couple sessions. So I've been kind of putting my eyes on that.
Yeah, a lot of we'll call it fringe names that we don't normally talk about seeing bigger moves today.
Yeah, that usually happens when, all the Mag 7s are at or near highs. You got to find something that's moving.
Mm-hmm. Yeah, that makes sense. And it's that's kind of the idea behind how something like the S&P or NASDAQ or Dow or Russell can just continue up. It's the cash infusion to things that weren't moving as aggressively that are still tied to it. So, yeah, there's always opportunities. looking at Nike ahead of earnings next week. So what? That is Tuesday after the close. We're looking at a $70 stock price. They had a big run up after last earnings, peaking at around 80. They've fallen pretty dramatically from that point. So it'll be interesting to see what happens there. Decent implied volatility, 5-point expected move for next week, which is, let's say, 7-8% of the stock price. And yeah, we will definitely be trading this one just simply because implied volatility is super low in November, December relative to the implied volatility in the weekly cycle. Only a 9-point expected move for December 19th with a 5-point expected move for next week. So if you go to November or December, you can reduce cost basis dramatically there with the sale of a short option and keep risk defined, which is what we typically do for these earnings trades.
I'm thinking of doing this little Johnny call diagonal spread. You buy the 70 in November, sell the 75 in the October 3rd against it. Trades at $3, like a cheap little shot into earnings, kind of play for it to bounce back to where it was over the last couple weeks.
Yeah.
Do it in the October 3rd weekly. Let's see if I get filled here. Yeah. All right. We're in 301. Volatility getting absolutely smoked here into the close. The vol crush Friday strikes again. I didn't think it was going to be this way today. It felt like, given the action that we've had all week, I felt like maybe they would keep volatility bid a little bit into the close. Say volatility near the lows of the session here, down 71 cents, a little under 4%, despite the market kind of giving up a couple points here in the last 5 or so minutes, 2 minutes, I should say.
Yeah, I mean, VIX getting crushed today, down 7.5%. At least it got bid up. I mean, that's the only thing I can really say is like, at least it got bid up with the fear of a number that the market wouldn't like. But the number was basically a non-event. So you're seeing a bigger crush today. And yeah, I will continue to prepare for kind of this grindy market until something broader happens that would change that. But again, we've got stocks that are on their butts like Nike. We've got products that reflect 50 to 80% implied volatility and realized volatility, even with the low VIX. So we'll still be able to find opportunities in both directions for sure. But GLD, I really am just looking for any kind of sell-off here. Kind of crazy.
Yeah, they're selling gold, they're selling Bitcoin here pretty much throughout the last hour or two. Those are the two kind of biggest movers here. E-minis, I mean, they're off 5 or 6 points, but nothing really huge there. More churn, it seems like.
More churn indeed.
Yes.
Yeah, I think the biggest thing in my portfolio that I'm looking for.
I quoted VIX in the actual move. I didn't just quote the percentage. I said it was down. I got some people calling me out like, you can't do percentages. I am not a percentage guy. I said they were down. They were down the low of the session, down 70 ticks. It's 4%, a little under 4%. Come on, you can tell the story with both.
Well, I think you said that, but I definitely said the VIX is down 7.5%. But it literally means nothing because the VIX at 17 means nothing to me, and the VIX at 15 means nothing to me. So the percentage on the VIX is not a factor. It's the same story. VIX in the teens, market grinding higher. But again, we'll look to other things that have higher implied volatility, and we'll wait patiently for something to happen in the market. But yeah, going back to products I've got my eye on, this IBIT position's doing well. I'm actually in the money now with IBIT below 65, which is fine. Interestingly enough, I'm already in the November cycle. I have the 65-75 strangle. You would think that with this sell-off below 65, that the 75 strike call would lose a ton of value, but it has not. It's still I rolled into it for $135 raw value on the short call. It's still trading for 82 cents. So even into this somewhat large sell-off in IBIT, that short call is still holding on to plenty of value. So just an interesting
Are you
thought.
just going to peel it off? What are you thinking?
No, I'm just going to leave it.
Yeah.
Just going to leave it.
I thought maybe you'd close the call and just lean long, and then you get a little bit of an up move. You sell a call against it.
Yeah, if the call had lost a lot of value, which I would have assumed would be the case when I opened this up, I would have definitely done that. But I need this thing to be trading for under 50 cents if I'm going to peel it off. So it could happen in the next couple of weeks. There's still plenty of time, 56 days in the November cycle. So I'll keep my eye on that. But yeah, I'm not going to roll it down into a sell-off here. My whole basis on this trade is I want to have positive delta. So I'll do everything that aligns with that.
Vol at the lows, 1750 down 83 ticks. Huge move in volatility, 4.5%. I also wanted to mention with EA, I had a question about like why I haven't closed the trade yet. So I have this call diagonal where I'm long the 170 in November, and the reason being these markets have just gotten so junky, given that there's the buyout rumor. You can even see it on the put side, 70 cents at $3, 30 cents at $3. I mean, you can't do anything in any of these options here today. Same thing with November. I mean, my November position, the in the money calls are, $3-4 wide. The puts are funky and gross looking. I'm going to give this a couple days into next week. I mean, this is a great trade. We did this at like $7 ish. It's marked or I'll tell you exactly what we did it at. So I did this at 772. So it should probably trade at like 11 ish. I would expect, because you got to bake in some sort of risk premium for the deal not going through or not being done in time. I haven't really looked into the deal all that much, but I know that that is kind of out there. So I'm going to see in the middle of next week if we get a little tighter markets there, because I just don't want to. I could probably get out of this if I wanted to close this at $10, but I'd probably be given $100 or $150 worth of value. To the market just by closing it. So I'm going to wait and see what happens there.
There you go.
So
there you have it.
And to those who weren't in positions, there's nothing to do now. When you get these sort of events where there's a buyout or a takeover or whatever, the markets get too goofy. You can't mess with them.
Yeah. And to that point, there is like this move, there's basically there's no notable change in implied volatility into this move. No. So if you're trying to do something around this, if you look at the implied volatility now, it's reflecting basically that not much is going to happen, where something could happen and this whole move could reverse. So like, I'm not doing anything in a 25-point move to the upside where the November cycle is only showing us a 13-point expected range. The current move today is twice that. So it's a tough environment to do anything in, to your point. So we just we'll sit back and watch and see what happens where it settles, but just something to keep an eye on. Markets ripping higher into the close.
No fear into the weekend, baby. The Vol Crush Friday continues.
This Microsoft
E-minis at 6,700 or just on the dot.
They got to pin it for the narrative.
Of course, for the narrative. I mean, 6,700 puts us like what, 30, 40 handles off the highs. The highs the other day was 6,756. So after all that scariness, we're 50 points, 1% from all-time highs, less than 1%.
Crazy.
Yep.
Microsoft recovering. This call calendar spread I've got, the 530 long November, short October, just went into 20-cent profit after taking some heat on it for a little bit, but I'm just going to leave that there, let that simmer, see if we can get some more upside movement there. But yeah, kind of a weird day.
Yeah, choppy. I mean, it'll be interesting to see what we do next week. I would probably think there's more of this. It seems like this move in vol kind of tells you that, oh, okay, we got our little dip. Back to your regular scheduled programming.
Mm-hmm.
That's what it felt like here. E-mini's up 37, NASDAQ up 100, both near the higher end of where they've been trading today. Dow up 291, the Russell up 20. Vol really the story here in my book, down 85 cents, a little under 5%. It had a huge move there. Bonds basically unchanged. They're down 2 ticks. You got gold up $24 off the highs, though. Silver as well, up $1.30. Bitcoin faltering as it has all week near the lows. 109 and change has been kind of the bottom. We'll see if that breaks down over the weekend. Mikey, thank you for joining me again for a last call. What do you say we take a quick little 90-second break, come back, and do this all over again on Monday? That sound good?
Sounds good to me.
That sounds great. We'll see you for first call on Sunday. Me, the Bat, Ilya Spivak, taking over the first call. So we'll see you then on Sunday. Back to our regular scheduled programming on Monday morning. We'll see you then. Peace.
Go Bears.
Go Bears.